Welcome back to Squawk Box. As expected, the Fed cut rates by 25 basis points yesterday, but Treasury yields jumping after this comment from Fed Chair Jay Powell. Listen.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Joining us right now with his insights is Roger Ferguson, former Fed Vice Chair, as well as a CNBC contributor. You listened to those words, and you thought what? Maybe is the very just basic way to ask the question.
I thought a couple of things. One is highly unusual for him to be so clear about the next meeting. Normally they're a little more circumspect, but he was very much clear at pushing back. Secondly, I thought, not a total surprise, I think markets had forgotten the September dot plots that showed, roughly an evenly split committee. And after the meeting, a number of the Fed presidents, particularly President Schmidt and a few others, had expressed some disagreement and some concern. So, I think the market, had they really been listening, would not have been as surprised. But to be fair, it is highly unusual for a chair to be so explicit about the uncertainty in the December meeting. And they clearly try to get it off the table as much as possible.
But speak to that, though. What do you think was going on? Because you're right, there was a sort of almost clarity about the lack of clarity. And he seemed to almost lean into the idea that there was this dissension and debate taking place. And that's something typically that I felt that he has veered away from trying to acknowledge when there has been that kind of dissent.
There are a couple of things going on. One, it's important just to say the obvious, right? He had two dissenting votes this time, one for even further cuts, one for no cut whatsoever. So obviously, add that to the September dot plots, and at some point you just have to sort of tell the truth. There is dissension. Secondly, I think they want more optionality around December. I think almost everybody is probably somewhat uncomfortable that the markets seem to be so much ahead of the Fed, had seemed to expect not just a cut in December, but a couple more next year. And I think he went a long way to say things like the so-called neutral rate is probably roughly where we are now. He really wanted to be much more balanced in talking about inflation risk as well as a weakening labor market. And I think all of that at the end of the day is to get the Fed control of the outcome as opposed to the markets driving the outcome.
Hey, Roger, how much of a concern do you have about stagflation at this point? It's not a clear stagflationary market, but there are certainly whiffs of it if you're looking at the job market weakening, but also inflation being stuck at around 3% year over year. That may be why you're seeing a split where you've got people saying you shouldn't go anywhere and people saying you should cut 50 basis points. That's a weird time to try and navigate.
Well, first, I think I share, and I think I've shared on this show, a concern about stagflation as a potential outcome. I describe it as mild stagflation. Beck, you may recall that a little while ago I came on and talked about a CEO survey where the CEOs were also mainly focused on a stagflationary outcome. And you're absolutely right, and I think Chair Powell was clear about it. There are no riskless choices now. Inflation is however you measure, well above the 2% target. The labor market is weakening. There's a mystery about the labor market that we should be clear. How much of it is supply and how much of it is demand? And this time, Chair Powell leaned a little more into the supply story. And the implication of that is if you think the problem of the labor market is labor force participation declining, immigration reducing dramatically, there's not much that monetary policy can do about that. And then you add to it just the general uncertainty. So I think they're right to be cautious. And yes, I am in the camp that says the mild stagflation risk seems like more likely than not outcome as of today.
Roger, in terms of the tools that you think this Fed can impose as it relates to employment or unemployment in this country, we continue to read stories about big tech companies and others laying off folks, or at least having plans not to hire more, et cetera, et cetera. Historically, you'd say, okay, if we let up a little bit, maybe corporations would spend a little bit more and the employment picture would improve. It's not so clear to me if you believe that some of that some of those layoffs are imposed, if you will, by AI, what role and what tools the Fed has to goose those numbers in any which way? What do you think?
Actually, and I think Chair Powell mentioned that a little bit yesterday. There are a couple of things that he said that lean in that direction. One is exactly the point that you made. Secondly, he talked about how blunt this tool is, and it doesn't help particular classes of unemployed people. There was a question that came up from one of the reporters. And then finally, back to the point I just made, if the slowdown in the labor force is due primarily to supply, and we have this low layoff, or maybe now rising layoff, but low demand market, the Fed may be stuck. And that's why stagflation risks are the worst possible for them. And he was very explicit about it. And indeed, he observed the information, notices, the announcements about layoffs, but said at this stage, at least, it's not really showing up in the aggregate data. So I think he nodded in all the directions that were appropriate, some that you've talked about. But you hit the main point, which is they may be they are, by their own admission, in a very difficult position, one that no central bank likes. And it is, as he's observed, showing the dissensions in the ranks as people assess different outcomes and as they have different tolerances for inflation above target or unemployment that's too high.
Roger, well, let me throw one last thing at you, which is, we have a number of guests who've come on, I would say, in the last month that talk about an AI bubble. They talk about a sort of a level of almost indiscriminate spending in the artificial intelligence space. If you were the Federal Reserve and you thought to yourself, this feels like it's getting a little bit out of control, I'd like to tamp that down. I don't want that to get, I want to encourage investment, but I want it to be disciplined. What would you do?
Look, your tool is very rough. He said something yesterday that is very important, which is 25 or 50 basis points is not what's driving this massive building of data centers. It's being driven by expectations of great returns, inability to keep up with demand. So I don't think they are in a position to actually attempt to tamp down this capital expenditure any more than they could tamp down the equity markets very successfully. So I think the most you can do is observe it, talk about it, and then see if it shows up in some way in the macro data. So again, I think they are from a bit dealing with a major issue that some may see out there.
Roger Ferguson, it is always great to get your perspective, especially on a morning like this after a big announcement from the Federal Reserve, and you have been our Yoda on so much of this, so thank you.
Thank you.
Wait, thank you, Roger.
When we come back, the CEO of Brooks Running is going to join us to talk next about consumer trends, the impact of tariffs, what he's seeing just in terms of interest in running shoes. Happens to be right before the New York City Marathon. Also later, we'll get reaction to President Trump's announcements on China trade. We've got former ambassador to China, Nick Burns, who will be joining us right here on set. Squawk Box, we'll be right back. Welcome back, everybody. The New York City Marathon is this Sunday. That race attracts athletes from all over the world and CEOs from major brands because of its prestige and global appeal. Joining us right now is one of those CEOs who are flocking here to New York City this weekend. Dan Sheridan is Brooks Running CEO. And Dan, thanks for coming in.
Thanks for having me. It's nice to be in New York.
It's great to have you here. Now, you guys are not an official sponsor of the New York City Marathon, but you do have a lot of people running wearing your shoes.
We do. This weekend, I call it the Super Bowl of running. It's, the culmination of our sport. All the brands come in to activate, and we're going to have a huge activation here this weekend.
What does activation mean?
So we'll engage with our local retailers. We also have athletes running, so we support them through the weekend. We'll be out on course as a group of employees are here. And we have a very unique activation this weekend with Anthony Ramos, Broadway star, actor. He's running his first marathon, and he trained with one of our professional athletes, Desi Linden. And so we're
never heard of him.
So is he
Don't
running
really
for time,
care.
and what are you looking for?
I don't think so. I think Anthony, this is his first marathon. So
Just
first
trying to
marathon.
get across the line. I've never done it.
It's if you have not done a marathon, you got to do a marathon. It's maybe one of the hardest
How
things ever.
quickly do you think you could
That's why
train
it's
me
not
up?
on my bucket list.
I would say 3 months we could get you in marathon
Really?
shape, Andrew. Yeah, we could get you in marathon shape in 3 months. Yeah.
I got to run, what, 5 days a week for that? I'm
Yeah,
training,
it depends. I think
Okay.
5 days is probably baseline, and a lot of cross training and weight training and the like.
and I'd be helped out by one of these shoes that has the carbon lever.
Yeah, so that's the Hyperion Elite.
Yeah.
Many of our athletes will be running in that this weekend. You'll see it out on course. This is 7 ounces under your foot, very
And it's
lightweight.
super light. The one thing I will say is shoes have evolved to this crazy point where that's the equivalent of like 7 paper clips on your foot.
Yeah, I mean, this is what's driving our industry right now. Innovation. Consumers are paying for performance products. We just finished our third quarter. We're up 17%.
17% in revenue?
In revenue. It's our 9th consecutive quarter of growth.
Sounds like a scam.
What about profitability? I know you don't have to report results.
From Washboardjim.
Of Berkshire Hathaway, you're owned by them, but we have seen import prices come up because of the tariffs that have been on shoes. Are your revenues?
My
up
shoes ain't gone up.
More per shoe? Are you seeing?
I'm sorry,
more
Becky.
Shoe sales, and what's the profitability on that?
Yeah. So
I think you're lying.
The trade tariffs and conflict have been challenging for us, but what we're seeing in our category is really strong category results. So the category is up 10%.
Actually,
in the
prices have
US,
gone down.
which is trending above that. Average retail prices are up about 6% year to date. So this is a very strong category driven by
hell?
strong consumer demand for performance products, and it's based in participation. Around the world, more people are running and walking than ever. We were in China a couple months ago. We were in Japan for the World Athletic Championships. It is happening around the world. So
But
there's
profitability questions back to that.
profitability for us is trending in the right way because
Okay.
the category is so strong. So
Okay.
full
So
price.
even with the tariffs, you guys are more profitable because you're able to.
God.
Yeah, we've got some headwinds, obviously, with the tariffs, but we've got our arms around it now. It's predictable. We think we know what the rates are going to be going into 26, and so profitability is in a really good spot for us.
The idea of the popularity of running, people thought that was going to be another one of these COVID things that kind of pulled forward and then died off. You're not seeing that.
No, it's very, very sticky. And we think it's this coalition of probably 4 generations that really came out of the COVID pandemic. We're seeing more people than ever enroll in races, go for registration. New York had 200,000 people try to get a bib for Sunday, 55,000 run. London had 850,000 people for a 60,000 marathon.
Do you attribute any of that to the healthier lifestyles that people are doing? I mean, alcohol sales have been down. You don't see people smoking like they used to.
Oh, they're smoking
It's
weed,
just a
baby.
healthier lifestyle embracement.
We believe that. It's a one-way street. We don't think people are going to go back to an unhealthy lifestyle, and that benefits Brooks. And we're seeing it in our numbers.
Oh, this is Brooks.
As we stated. So it's a very, very strong category. I always say that as a business, you get to choose the category.
Well, maybe you're not lying, because
and
that's
the
my favorite
consumer you
shoe.
compete in. We chose a
Okay,
good category.
real quick, just from a competitive market share perspective, there's a whole bunch of interesting things happening in your space. Before we were off air, we were talking about New Balance. All of a sudden, they're getting, I think they're having a lot of success right now. partially as a fashion.
Yep,
sort of
New Balance is a good
moment,
shoe.
for them, but also from a technical perspective. I'm seeing a lot of folks back in New Balances. Nike seemed out of favor. They have a new CEO. I think they're making all sorts of new products, some of which people think are pretty exciting. How do you sort of see the landscape right now? If you were to sit with a whiteboard of your competitor set.
Yeah. I have said this over the last 6 months. This is the most competitive category in sporting goods. And the reason is because the category is so hot. So we're sitting right in the middle of that. There's great product from a lot of brands. We believe we have a better product than most people.
But stack rank them from a technical perspective. I mean, look, people were gaga for Hoka's for a while. And right now it doesn't have the heat
I don't like
that
them.
it had before. As I said, Nike didn't have the heat, may have a little bit more heat right now, I don't know.
Yeah.
The New Balance, how do you see that?
Well, the way we approach our competitive set is through product innovation, right? So we sit in this competitive category, and,
Okay, then-
and from a brand perspective,
Right.
we think we're right in the mix with all those.
But who is interesting to you right now? Who do you say, that's clever? I mean, like when
Brooks.
On, came out with that shoe that's basically like make it for you.
Yeah.
Some of the racers are wearing. You go, okay, that's
Nike's in last
The
place.
brands that are interesting to us are the ones that focus on deep insights for runners, which Brooks does. They focus on innovation for innovation's sake, not just for trend and everything. We've been on this trend, Andrew, for 25 years. Our compounded annual growth rate over a 25-year period has been over 14%. So those are the brands that are coming in to try and
it's
steal.
hard to get the head of Coke to say something nice about Pepsi. So I appreciate what's going on here.
Dan, thank you for joining us and have a great time this weekend.
Thanks for having me.
Thank you. Appreciate it. Stay dry. It's wet out there. Let's hope it doesn't rain this weekend.
I think the marathon weather is going to be good.
Okay. What's the perfect temperature? Marathon temperature?
I think
Use you can use
in the mid 50s is for me.
for you.
Me. Yeah.
Not too hot.
Okay. Meanwhile, Farmer Giant, Merck just reporting its earnings. Let's tell you what's going on. Earnings coming in at $2.58 a share. It's better than the $2.35 the street had expected. Revenue of $17.3 billion. That also topped estimates. And sales of its immunotherapy drug, Keytruda, reporting sales now of $8.1 billion. That was below expectations. Merck narrowing its revenue and earnings guidance for the full year. The stock off about 2% now as we round that up, but we'll be talking a lot more about those earnings in a little bit. When we come back, a read on the consumer from a company currently run by Brian Niccol and a company formerly run by Brian Niccol, Chipotle and Starbucks, folks. And then later, the latest on the government shutdown. Senate Majority Leader John Thune is going to join us in the 8:30 half hour. We'll also talk about what kind of deal may have been struck in the past 24 hours between the United States and China over tariffs, and then also the possibility of testing nuclear weapons all over again. Squawk Box, come right back. Welcome back to Squawk Box this morning. We are watching shares of Starbucks earnings of 52 cents per share. It missed estimates of 56 cents, but revenue beat expectations and same-store sales returned to growth for the first time in nearly 2 years. Global comp sales were up 1%. U.S. comp sales were flat for the quarter, but the company said that they turned positive in September. CEO Brian Nichols is going to be with the gang on Squawk on the Street at 9 a.m. in a first on CNBC interview. We'll take a look at that stock. It is off, though the good news was, as I said, things do seem to be at least somewhat turning around. We'll see where they go. I was telling you, I don't know if we talked about it on the air, but the protein in the coffee. I think I couldn't imagine. Every time I've been drinking them like crazy because I'm protein crazy, and there's always lines now in a lot of places, and people are ordering the protein drink. So I think it could be a growth driver.
Do you know what protein powder they use? Because Consumer Reports just did a study of they did 15 different protein powders, and all of them had measurable amounts of lead in them. Some of them far exceeding the weekly amount you're supposed to be.
So my understanding is that they're using a high protein content milk that is similar to like a Fairlife. The milk
ones are better. The milk ones are better.
Now there's a different issue about some of the milk-oriented ones, which is about microplastics. That's a separate issue. That's just if you're really
and meat-based ones, the powders are supposed to be better than the plant-based powders.
Whey-based protein is better than
than the plant ones because they pick up lead from the plant from this stuff. They don't even know exactly where all the lead is coming from, which is a concern on that. But the milk-based ones are better.
We'll see. But it is going to be interesting. I want to see not this quarter, obviously, because it's just a new product, but a couple quarters from now, whether that'll, goose or juice, I should say, their results.
Yes, there you go. And then there is Brian Nichols' old company, Chipotle Mexican, that stock is plunging this morning. It's down by almost 19%. That comes after earnings for Chipotle were in line with expectations. Revenue was a slight miss, but the company cut its same-store sales forecast for the third straight quarter. Traffic fell by 0.8%, and the CEO, Scott Boatwright, said that Chipotle is seeing consistent macroeconomic pressures and that consumers across all income groups were visiting less frequently. He flagged that the pullback was especially pronounced in customers who are between the ages of 25 and 35 years old and customers who make less than $100,000 per year, but those comments obviously spooking the market, and that is the sell-off you see as a result.
Coming up, President Trump and China's President Xi reaching some agreements on some key trade issues overnight. Former ambassador to China, Nick Burns, is going to join us right after the break. We'll break it all down when we come back. Welcome back to Squawk Box. A high-stakes meeting in South Korea between President Trump and President Xi, resulting in deals, we think, on rare earths, fentanyl, and tariffs. Joining us right now is Nicholas Burns. He's a former U.S. ambassador to China and a professor at Harvard University. I said we think because we've heard from President Trump. We haven't fully heard from the Chinese on all of these issues just yet. And so I'm curious, just read the tea leaves for us.
Not a lot of detail, but I think where we are is an uneasy truce in a long, still simmering trade war.
Okay.
I mean, on the positive side, they met, and that's actually very important. They hadn't met since 2019. If you want to get any decisions out of the government of China, you have to meet with Xi Jinping. So I actually thought that was positive. President Trump's going to be going to China in April. Xi Jinping will come to the U.S. in the autumn. In diplomacy, this is structural. It's foundational. Positives, fentanyl, leading cause of death in our society, Americans 18 to 49. The majority of the precursor chemicals come from China. So Xi Jinping said, we'll help you on fentanyl. He made the same commitment to President Biden when we met with him just last year. I hope the Chinese are going to meet this commitment.
Did they do it after they made the commitment to Biden?
There was a progress on shutting down online selling platforms of these precursor chemicals, and they're exported by the Chinese black market into the drug cartels. And they make the synthetic opioid. They arrested some people, but not enough progress. So both Presidents Biden and Trump have been trying to push them on fentanyl, and let's see if the Chinese will come forward with better action. Progress on agricultural sales. This is important. 1/5 of all U.S. ag exports go to China. 2 years ago, $41 billion in sales, 14 billion of which was soybeans. So obviously the American farmer has been hurting. The Chinese have played hardball. There's been no purchases. So I think this is probably the most substantial achievement of the meeting they just had. And then of course the Chinese agreed they'll suspend the export controls that they put on their rare earth metals. That would have roiled global supply chains. So I think there's some real positives here. The negatives are this is not a trade deal. And if there was a trade deal, a comprehensive trade deal, they would have announced it. So I would expect further, almost like two boxers in the ring,
but then
sparring.
give me the split screen of this. So we, at the very top of this hour, 6 o'clock, we talk about this potential tariff framework, followed by news that President Trump is announcing that we're going to begin testing nuclear weapons again live for the first time in decades.
In 3 decades.
What does that mean in this context? The fact that announcement came within hours of this trade framework.
That we're still sparring, that we're still trying to gain leverage over each other. I mean, the timing of that, a couple of hours before the two leaders sat down, had to be related to the leverage the U.S. wants to bring to the table. President Trump did say later it's about another country, Russia. And what it means is, and we've been at this since 1963 in prohibiting nuclear testing, that whole regime is breaking down. Between the United States and Russia, China comes into it because China is engaged in the largest buildup of its nuclear weapons force of any country in nuclear weapons history. They're trying to reach parity with the U.S. by the 2030s. So the fortunes and the balance of power among these three countries, the United States, Russia, and China, is very carefully calibrated.
But so that the timing of this, you think, speaks to does it speak to the tariff issue and whatever the relationship is with China, or it doesn't? I mean, I think to the extent that he's suggesting it's related to Russia, I understand that, but the timing is so close. And
I do not believe it was coincidental. I think the timing had to be. You're about to sit down with Xi Jinping. You haven't seen him in 6 years. You announced this major development that changes potentially American policy. I think it was intentional because there are a lot of unresolved issues in this relationship. The Trump administration rightly opposes what the Chinese are doing to help the Russians in the Ukraine war. There are problems on Taiwan. The president said that actually didn't come up.
You think that this was a message that was sent to say back off from helping the Russians when it comes to Ukraine?
Well, also that the United States is concerned about China's buildup of nuclear weapons. They're completely opaque. They refuse to talk to us at any
Did they do
meaningful
nuclear
level.
testing?
Pardon?
Did they do nuclear testing?
They have in the past.
Yeah.
They haven't done it recently, but they have in the past. So I think you're looking at a relationship that's forming. There's some good news in the announcements on fentanyl and ag sales and the others, but there are a lot of differences here that have prevented them from getting to a trade deal.
President Trump said yesterday that they discussed high-end chips, not Blackwell.
Right.
which is the best that NVIDIA currently has to offer. What are your concerns about what we should be giving them, what we should not be giving them?
The Chinese are trying desperately to convince the Trump administration to allow the export of advanced American semiconductors for AI purposes into the Chinese market.
So not the H20, but the...
Not the H20.
Yeah.
In fact, the Chinese didn't even buy the H20.
Right.
And that was another drama. But this is very important for American national security. President Biden prohibited 3 years ago this month the sale of these chips. And why did he do that? Because the Chinese companies would then give those chips to the People's Liberation Army to basically try to have a technological leap over the U.S. military and our long-running competition for who's the biggest and most important tech power. And so this is extremely important
Jensen
for...
Huang and others in the industry have argued that if you are not giving them, not necessarily the latest and greatest, but if you're not giving them any access to chips, that it will short-circuit American dominance in this field over the long term. that
The
you
Chinese,
ultimately
the
want.
Chinese do have access to memory chips, but not to the most advanced logic chips. Why? Because under the civil military fusion, any Chinese company has to transfer its technology to the PLA. And the PLA is trying to outpace the United States technologically in this big AI race, and we don't want to be the #2 military power in the future. What I find unconvincing about the argument from NVIDIA is the entire Chinese strategy is to make the world more dependent on China and China less dependent on the United States. You might get a year of sales, 6 months of sales, but the Chinese will innovate and they'll kick NVIDIA and Intel, other companies out. So short-lived commercial progress, but what's at stake is the national security of the United States and preventing the PLA from competing with our military.
Nick, I want to thank you for coming in this morning. It's
Pleasure.
great to talk to you, especially on a morning like this.
Thank you.
You bet.
All right, take a look at shares of Eli Lilly after quarterly results are out. The company earned $7.02 a share. That was way above what the street was expecting of just $5.69. Comes on revenue of $17.6 billion, which is also above expectations. Sales of Zepbound were $3.6 billion. Mounjaro sales, $6.5 billion. Both of those two weight loss drugs coming in ahead of estimates. And in fact, the company is saying that they see sustained demand for weight loss drugs. Lilly's raising its earnings and revenue guidance for the full year, and that stock is up by almost 5.5%. The company's CEO, Dave Ricks, will be on Squawk on the Street. That's coming up at 9:30 a.m. Eastern Time, a CNBC exclusive interview. And Squawk Box will be right back. right, take a look at shares of eBay. That stock is tumbling down by about 9% this morning. It comes after eBay beat earnings estimates and revenue estimates, but the company's profit forecast for the current quarter missed expectations. That has investors concerned about shrinking margins ahead of the holiday shopping season. Before today's decline, eBay's stock was up about 61% for the year to date. At this point, it looks like it's up by about 44% for the year to date. Meta and Alphabet both reporting quarterly results, but this morning the stocks are going in different directions. Joining us right now to break down the reports is Mark Mahaney. He is Evercore ISI's head of internet research. And as a result of what you heard last night, Mark, I think you changed your price targets, moving it higher for Alphabet and down for Meta. Did I get that right?
You did right. That's right, Becky. So I think both of these companies are showing that they can deploy AI to improve their core businesses. I think Meta sort of proved that to the market about a year and a half ago, and that's why the stock has actually performed really well and continued to do that last night. But they surprised the market by how much they want to invest in their next initiative, which is chasing AGI, which is chasing superintelligence. And so core business is great, but the market is choking a little bit on the amount of investment capex and total expense guidance that the company is giving to the street to chase superintelligence, to be the AI leader. Google, on the other hand, there's been this huge overhang on Google for the last year and a half, and people didn't believe, the market really didn't believe that they could use AI to improve their core business, and they were worried about this threat from ChatGPT. And what Google proved last night is that they could deploy AI to also improve their core search business and YouTube. And you just had this kind of inflection point quarter. You don't get these too often, but revenue growth accelerated for search, for YouTube, and for cloud. This company clearly proved last night that they should be included in that category of AI winners. And that's what's caused the stock to jump 100% in the last 6 months. We took up our price target on Google. We took down our price target on Meta.
You know, we were talking earlier about sentiment on the street and how quickly it can change. That the sentiment has been that people want all of these companies to spend more and more capex on AI and chasing that growth, that they think it's going to pay off over time. But is there a point where the street gets fickle and changes its mind on that? And are we seeing that right now with Meta, or is this just a blip?
We may be seeing that now with Meta. I don't know that it's a permanent change. I mean, if Meta's clearly ramped up its spend on capital expenditures, on operating expenditures to deploy AI, and if they hadn't shown this material acceleration improvement in their ad revenue growth, their core business over the last year and a half, the stock would be a fraction of where it is today. But they did show that. They have shown that they can use AI to materially improve the service, Instagram, Facebook, for threads, WhatsApp. They've been able to do that to improve the user experience for both advertisers who've gotten a better return on their ad spend. That's why the fastest growing ad platform now is Meta. And they've also improved the user experience. That's why you see people spending more time with the services. So, check that box. They did a great job there. The question is, what about the next bet? And Zuckerberg is saying, I'm going after it. I want to be the AI leader. And the market, I think, is uncertain whether Meta will be one of the AI leaders. And there's also a different monetization path. Whereas an Amazon, a Microsoft, and a Google can all monetize AI through external sales. Cloud is what I'm really thinking about. That isn't Meta doesn't have that product, so that it puts a little bit more pressure on Meta. So the market's going to be a little skeptical. My guess is that Meta's probably going to trade sideways for 3, maybe 6 months until they can sort of prove that they can be that AI leader, which is a hard thing to prove.
Very quickly, Amazon reports. What are you thinking? Do you buy or sell ahead of it?
I buy it ahead of it. The bar, they've got to do something like 18.5% year-over-year AWS growth. That's kind of the over-under. If they can do better than that, then that actually would be a quarter in which they grow the same as Azure sequentially in dollar terms. And that would change the narrative on Amazon. And then you get so many amplification catalysts. So I really like the setup on Amazon into the print, but they've got to deliver on AWS.
Okay, Mark, thank you.
Thank you, Becky.
It is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross. Working along with Becky Quick. Joe's off today. It is raining in New York City. A lot. But But and we had a little rain in the markets to tell you about. Quick check on the futures right now. That looks like it'll open down about 131 points. The Nasdaq off about 27 points, and the S&P 500 looking to open off about a little over 3 points right about now.
All right, Comcast is out with quarterly results. Check it out. Earnings coming in at $1.12 a share. That was 2 cents above expectations. That comes on revenue of $31.2 billion, which is also ahead of expectations. Free cash flow, $4.9 billion. You've got domestic wireless line net additions at 414,000. That was the best quarterly result on record. Comcast actually ended the quarter with 41 million Peacock paid subscribers. That was slightly below the street's 42.5 million forecast. Business services connectivity revenue rose by 6.2% to $2.6 billion. Media EBITDA jumped 28% to $832 million. That was driven by Peacock. Total connectivity and platforms revenue came in at $20.18 billion. That was slightly below estimates, while total content and experience revenue came in at $11.7 billion, and that beat expectations, with media and studios ahead and the theme parks in line. Epic Universe contributed to a 19% revenue increase at the theme parks, and check it out right now, that stock is up by about 2.8%.
Look, the question longer term is how this whole stock is going to trade. It's off 30% for the year.
Yeah.
Thus far, or I should say year over year, and so part of it is a longer term question about what's going to happen to the media assets. Obviously, we're being spun off into Versant.
Right.
There's the question about whether they bid and have to bid big if they're going to go and try to do a deal with Warner Brothers Discovery,
right,
and try to really take on this other bid from Paramount. We talked about Rich Greenfield has this sort of unique and interesting idea to where effectively Brian Roberts would have to make a massive bid just for those assets to outbid even the possibility of Paramount taking the whole thing,
right,
and then putting that in some kind of separate company, keeping some of the assets, the other NBC assets inside Comcast to avoid having the FCC have to approve it. I mean, there's a whole bunch of things that are going to happen likely over the next, call it 6 months to a year.
It's an industry that is in flux, to put it nicely.
That's the polite way to put it.
Right.
Talking about things that are in flux, let's talk about what the Fed is doing right now. The Fed cutting rates by a quarter point as expected, and now the focus turning to the December meeting. But another cut may not be such a sure thing. I want to get more from CNBC's senior economics reporter, Steve Leisman. I'm so curious about what you thought after we heard so directly, and we were talking to Roger Ferguson about this, in terms of some of the commentary from Jay Powell yesterday afternoon.
It was very much the commentary that we were talking about at this time yesterday, Andrew, where I talked about the idea that there was a divide on the committee over what to say about December. Well, the quarter point cut brought the funds rate down to 3.75 to 4%. That's the lowest level since rates were jacked up to fight inflation back in 2022. But investors are left with the question of what's it going to take for the Fed to cut in December? Fed Chair Jay Powell was definitive that a cut was not a done deal.
We have, strong views across the committee, and as I mentioned, there were strongly different views today. And the takeaway from that is that we haven't made a decision about December, and we're going to be looking at the data that we have, how that affects the outlook and the balance of risks, and I'll just say that.
So what was different? Well, there was the lack of government data. Committee members, as we reported yesterday, were split on the outlook and whether the bigger concern is growth or inflation. Growth data has been relatively strong. The jobs data could just be cooling and not falling off a cliff, reflecting the committee's divide. Even the vote to cut rates this month came with two dissents, one by new Fed Governor Stephen Myron. He's on unpaid leave from the Trump administration. Once again wanted a 50 basis point cut. And from the other side, by Kansas City Fed President Jeff Schmidt, favoring no rate change at all. Chance of a December cut falling from 84% before the press conference to 73% now, so it's still the odds-on bet. But the probability that it happens in January rising from 42% to 85%. So the real story here is the direction for cuts remains priced in. The pace is what's in question. Despite Powell's comments yesterday, several Wall Street firms, including JP Morgan, Goldman, and Barclays, continue to forecast that December cut, with most believing what will happen is the alternative jobs data will weaken enough to support a move. Andrew?
So help me with this. You talk about what was priced in. This doesn't seem like it was priced in. Why do you think the market was caught so offside?
You know, sometimes, Andrew, I think the market hears what it wants to hear. You get a little momentum going in the forecasting out there, and everybody says, well, this guy's banking on it, the market's got it priced in. And what I think they didn't do was take a step back and listen to what committee members were saying. That's what we talked about yesterday when we looked at 3 Fed presidents, voting Fed presidents, who had expressed some concern or some caution about cutting down the road. The other interesting thing here is the market may be too focused on the median estimate from the Fed's forecast of the dot plot. If you look at it, yeah, 3 rate cuts was the median, but then look at the actual spread. And we talked about this again, we talked about this yesterday. 7 members wanted 1 or no cut. 9 members wanted just 1 more cut. And so the 3 were not in the forecast there, Andrew. So I think people are seeing what they want to see, hearing what they want to hear, especially with the momentum in the stock market, and saying, well, everything's going to be great, instead of taking a step back and saying, well, what's really going on? It's tough work. There's 19 folks talking, but you can figure it out, as we did yesterday.
Are you surprised that he was so open about the dissension?
I think what was, yes, in a way, he was, and I think it's an interesting question if you want to get a little more technical, Andrew, the idea that all of the forward guidance now comes from the chair. It's not in the statement. Very difficult, obviously, to put the lack of consensus on the outlook in the statement, but it's Powell who gives that. And I think the story was that he felt a real need to claw back that flexibility and to bring the market off of its certainty over that rate cut. He did exactly what you said. He kind of stepped out and specifically said, you know, we are not done on this, and the market is wrong on this, or at least the market is too certain about this. I think that's where we are. They may end up cutting, Andrew, but I think there has to be some resolution about the outlook for the economy and this dispute between should the Fed be more concerned about inflation or the jobs report. And the jobs data we have is just not that bad or that concerning right now.
The professor, thank you, always. You make it clearer better than anybody I know. Appreciate it, thank you.
Right.
When we come back, Andrew Yang, he ran for president, he ran for New York City mayor. We are going to get into a wide-ranging discussion, everything from AI and jobs to the current political climate. That's next. And later, FDA Commissioner Dr. Marty McCary on a new plan to speed up the approval process for generic drugs in an effort to try and lower healthcare costs. That's coming up at 7:30 a.m. Eastern Time, and Squawk Box will be right back.
Welcome back to Squawk Box. Join us right now for a conversation on the impact of artificial intelligence on jobs, the AI bubble, the New York City mayoral race, and so much more. Andrew Yang, he's the former Democratic presidential candidate, former New York City mayoral candidate, and now founder and CEO of Noble Mobile. It's a new wireless carrier. It's a very cool idea. It's aimed to encourage customers, if you can believe this, to limit their use of phones. And we're going to talk more about that again as well. But let's start with New York, because we are getting ever so close to the actual election. I'm curious where you land on your candidate of choice and what you think is happening in the city right now.
I talked to folks who have access to the early voter data, Andrew, and the early vote's been good for Cuomo in terms of the demographics, the location. It's going to be tighter than a lot of people think. I have chosen not to endorse in this race. I have people working for both campaigns, and I've endorsed on both sides. I also met with both candidates. Haven't met with Sliwa, though, that I know him from a while ago. I just urge people to vote their genuine conscience and desire, and not hew to traditional party lines. That's the message I put out.
What's your assessment, though, given that you've actually met with both men? And by the way, we've had Cuomo on the broadcast, we've had Sliwa on the broadcast. We have not had Zohran Mamdani on the broadcast, though we've sought the interview many times. What is your assessment of him on a relative basis to Cuomo right now?
So Zohran is a very charming, very charismatic, and very intelligent guy. And you meet with him and you feel, okay, this guy listens, he's sane, we're gonna be all right in terms of having a pragmatic leader. And then there are some people who sit with him and get that vibe and then just don't believe it. Right. Having spent time with him, I do believe he's sincere. I think his deciding to keep the police commissioner was a very positive signal, because she has a huge amount of gravitas and credibility with the rank and file police officers, and that's something that a lot of people in my camp were pushing.
So here's a question about that.
Please.
So I live in New York City, and I think Jessica Tisch has done a fabulous job in the city. Yeah. And so that would be a good sign for him.
Yeah.
What I can't figure out is, my understanding of all of this is that she will take this job under him with the proviso at some level that she has to be sort of left alone to go do this on a semi-autonomous way. So I think it's very easy in a way for him to say, I'll put you in the job, and for other folks to look at that and go, that's a good sign. And 3, 5 months from now, 6 months from now, say, hey Jessica, I want to actually reallocate some of the money that you're using towards, reallocating certain police forces to do other things. And she says, that's not how we're going to do this. And then she walks out the door, and the city got the mayor that thought they were getting Jessica Tisch, and they actually don't get Jessica Tisch. What do you make of that?
If something like that were to unfold a few months from now, or a few months after he takes office, if he wins, there'd be hell to pay. But
there really wouldn't be hell to pay, because he would be the mayor.
Well, there'd be hell to pay in terms of the police force, which, as someone who's been in this context, is a huge deal. And Zohran, I believe, realizes he has a lot of fences to mend. He's been apologizing to groups of them, saying, hey, I'm sorry about some of the things I've said in the past.
But
you think
that he disavows all the stuff that he said as recently as a couple of years ago?
I think it's a huge win for the city, Jessica Tisch, and Zohran, for him to say, look, you got it. Because the fact is, he knows this is not something that he has a strength in. And if Jessica Tisch can manage a vast police force, that's good for everyone.
Let me ask you a different question, and it goes to this sort of capitalism, socialism thing. It's such an interesting, even debate that's happening in a city that basically is the capital of capitalism, if you will, for the world.
Yeah, we're sitting in it.
We're sitting in it. When I talk to people in the city who are voting for Zohran Mamdani, they say, Andrew, he's not a socialist. You don't understand. He's not a socialist. He's a democratic socialist. And I say, have you ever seen the things that this gentleman has said, even in the past, 24 months, about socialism, about the idea that he genuinely, you can go online and he literally says that he would like the government to seize the means of production. The words came out of his mouth. He talks about how he wants that socialism, not democratic socialism, but socialism is his, what he is after. And the split screen of somebody who said those things, as I said, within 24, 36 months of today, and then effectively saying, I don't mean those things, I think is why there's a lot of people in the city who don't believe what he's saying.
And you know, there's a bad habit nowadays, Andrew, is that a political candidate will say something either in the recent past or, you know, maybe right now, and then some voters will be like, he's just kidding. You know, and we've seen that in different contexts. I think that Zoran's been pretty clear about where he stands on being a socialist. I think.
Where do you think he stands? Where do you think he stands?
Which is, he says, I'm a socialist. I mean, I believe him. And so if there's a voter who looks at it and be like, he's not, I mean, you know, like you should just ask the man himself. But if you look at the polling among Democratic primary voters, socialism isn't the smear or negative philosophy that like a lot of people like you and me and Becky, and I'm sure a lot of people watching this at home, regard it as, because a lot of folks have been living in what they see as capitalism in a way that hasn't worked for them. And so I don't think socialism is like a, you know, it's not hurting him with his base and a lot of
What does the
Democratic
early
voters.
polling data suggest? Because if you look at the prediction markets, they're saying it's 99% plus that Mamdani will win this election.
Right now, a betting person would say that Mamdani is on track to win, but the margin is definitely tightening based upon who's turning out to vote. That you've seen a surge of voters in the early precincts among people that are going to end up polling for Cuomo. That's older voters and that's voters in certain boroughs.
So how do you think about Cuomo? You know Cuomo.
Yeah.
By the way, he's a flawed candidate too. All of these candidates are super flawed in all sorts of different ways. And some people are voting, that I know are voting for Cuomo, are doing it basically because they just can't pull the lever for Mamdani.
Yeah.
And they're doing it almost holding their nose because they think of him as a flawed candidate given a lot of the reasons that he left the role as governor.
There are a lot of people in my circle who are doing the same. You know, when I had lunch with Andrew Cuomo, he seemed like he'd grown, honestly. Like, spending time with him, he seemed like he'd matured, where if you'd been through some of the stuff he's been through, you can either kind of shrink or expand. And it felt like he was in the race for good reasons. But, you know, voters are going to decide. They're deciding right now.
What does this say about money in New York City? There used to be a view that if you were wealthy in New York City, you were in the real estate industry or the banking business or what have you, given the amount of donations and everything else, that you know, City Hall was controlled by the elites. And no, right? I think that,
I don't know. I think this is a
and
pushback.
this is
And it's
the
not just
ultimate
this election.
pushback
This
to
is
that.
what we are seeing across the country.
Country.
People do not want to see over the last decade plus the elites controlling
Well,
things.
and-
You look at it in the media, you look at it from the polling
Right.
booths, you look at it from any perspective. That's one of the things that technology has allowed, is the upending of anybody controlling anything.
Well, Zoran's closing ads are, New York is not for sale, to your
Yeah,
point.
yeah.
And so his message is, look, I'm going to return it to the people. And there are a lot of folks seeing that like, ooh, I like that, because they haven't enjoyed what they see as the period of elite control, which has gone for, you know.
Bill Ackman, and I'm pointing over here
quite a while.
because Bill Ackman was just here recently talking about the mayoral race, made a comment online in the past, say, 48 hours, suggesting that Polymarket and some of these other prediction markets could be rigged, and that actually you shouldn't necessarily believe them in terms of how far ahead Mamdani may very well be, and maybe he was saying that, frankly, to encourage folks who might otherwise not come out to the polls to vote for Cuomo to do so. Do you believe that these prediction markets can be rigged and are being rigged?
I think they can be wrong. I think they can be moved by a lot of people deciding to vote in a direction with their wallet. But I think it'd be very, very difficult to rig them for something this big. Not that long ago, people might not have as keen a sense of what is predicted to happen because these prediction markets weren't there. You might see polls and then candidates. And by the way, I've been a candidate. You know what you say when the when the polls aren't going your way? You say, it's okay. Like, we're going to get some new voters that like the pollsters can't even find. And that generally does not happen, though it did happen for Zoran in the primary. And that's one reason why he surprised a lot of people.
Assuming he does win, given that he is the front runner, what's your expectation in terms of how the White House and this administration ultimately treats the city of New York? Because thus far, we have not seen the National Guard in the streets of this city. But there is a lot of anxiety perhaps, that we could. And by the way, we might, with Zoran Mandami as the mayor, we might with Andrew Cuomo as the mayor. There are reasons to believe, though maybe conspiratorial, that we haven't seen the National Guard in this city because Eric Adams has been our mayor and he's been under the thumb of this president. And I think you can say that almost empirically to some degree, based on this unusual settlement that he reached with them.
Well, one data point you do have, Andrew, is that the Republican National Committee has already been ginning up advertising the expectation that Zoran wins, saying like, look, this is today's Democratic Party. I'm sure the Trump administration would love to have him as a foil. Now, to your point, it's not like Andrew Cuomo has been on the good side of Trump either, but I do know, and this isn't controversial, that Republicans would be pumped to have Zoran in their advertising.
Just back to the capitalism piece, and then I want to get into AI for a second. This idea that the country, and large swaths of the country, and definitely large swaths of the Democratic Party, seem to be saying, look, this capitalism system is just not working for them, and that they are apt to want to try something else. What do you make of that, and do you think that's going to be a larger trend in this country? Is this just something that's happening here? You know, I know some Democrats and Republicans who say, you know what, let it happen because it's going to prove to everybody that it doesn't work. I don't know if that's the right path either, frankly.
Yeah, we don't want to live that. You know, no one wants to go through that period. So first, let me say I think this is all misguided and misplaced in the sense that socialism has failed where it's actually been implemented. But I do think that the anger and frustration around this version of capitalism is going to get stronger and stronger. And it's not just a New York thing, it's an America thing. By the way, and we're about to talk about it, AI is compounding that because if you believe in the American dream that your kid goes to college and will get a good job, I mean, that's going to become less likely as entry-level jobs get automated.
So, to the AI piece, we keep talking about, you know, Microsoft, Meta, Google just came out with their earnings. They're spending an extraordinary amount of money on all of this. I keep thinking, for them to actually grow into those earnings, meaning grow into those valuations, they have to create an extraordinary amount of productivity.
Yeah.
That means that there probably has to be a lot less jobs ultimately.
Yeah.
And then the question is, who's going to pay for all of this stuff?
Yeah, where's the revenue going to come from? Because right now the valuation suggests that revenues have to 10 or 20x pretty quickly in order to justify the tens and hundreds of billions that's being invested in computing infrastructure and AI and everything else. And that money would have to come from somewhere, either consumers or corporates. Look, AI is real. It is decimating entry-level jobs. You are seeing it from the Amazon report, from Chegg. But at the same time, I do think that there's exuberant optimism in terms of the pace at which those revenues are going to show up and the pricing power that these AI firms are going to be able to enjoy because there are several of them.
Right.
There's also competition ultimately from Chinese models.
We got to run, but before we do, let me plug Noble for a second. Just what's been the uptake? I mean, you've only started this. What are we on?
Like week 5 or 6.
Week 5 or 6.
Yeah, but it's been awesome. We get people every day, and early data shows that people are actually using their smartphones less. It turns out that people like money, and if you pay them to use their phone a little bit less, they do it. We have a national tour with Scott Galloway going on in November. New York, SF, Chicago, LA at offlineparty.com. And these are phones that are drawing hundreds of people. Sorry, these are parties when people don't have their phone out. And you and I don't know how old you guys are, but we used to refer to those as parties.
Without the phone.
Without the phones, and then people look at each other. They sometimes even have conversations.
And you're paying. And just to be clear to the audience, if you buy access to your phone, you effectively are paying people not to use it.
Yes, we send you cash every month for you to put your phone down, look up, maybe hang out with your kids.
It's extraordinary. Thank you. Appreciate it. Great to see you, sir.
Thanks, Andrew.
Thanks. Squawk Box will be right back after this.
Time now for today's Aflac trivia question. What is the name of Larry Ellison's personal yacht? The answer when Squawk Box returns. the answer to today's AFLAC trivia question. What is the name of Larry Ellison's personal yacht? The answer, Musashi. Named after the 16th century samurai, the yacht costs $160 million to build and is 288 feet long.
All right, welcome back, everybody. Corporate travel and expense software developer Navan is going public on the NASDAQ later this morning under the ticker symbol NAVN. That IPO priced at $25 a share, raising about $925 million, and that would give Navan a valuation of roughly $6.2 billion. Joining us right now is Navan's CEO and co-founder Ariel Cohen. We should also mention that Navan has been named on CNBC's Disruptor 50 list the last 2 years in a row. And welcome, Ariel, on your big day.
Yeah, thank you for having me here. Yeah.
You're looking pretty happy about how things have gone so far. I guess you're pretty excited to get to this culmination point.
Yeah, it's kind of you've mentioned what we do, but we really care about the traveler, the road warrior, the travel for work. And actually, this day with rain, it's actually when we shine.
Oh,
it's
because this is a day when people would say, I have to change my
I have to change my flight, I'm stuck in the airport, I need to do something, and you kind of always one click away from Ava, our chatbot, to actually fix your flight, connect you to a new hotel, change the flight, whatever you need. So this is kind of a good day.
I mean, you have some pretty big customers. I was looking through the list of it.
Yeah.
Geico, Zoom, Lyft, OpenAI, Adobe, Unilever, Anthropic, lots of others that are on this list. I mean, these are a lot of names. I guess in some ways these are some high-tech names, but they're saying you can better do this by outsourcing this to you.
The unique thing about us, because we focus on the traveler, we can support companies like Unilever, Heineken, the names that you've mentioned, all the way to companies with 10 employees. So if they have travelers, we are making sure that they're not wasting their time. It usually takes 45 minutes to book a complex business trip. With us, it's 7. And then when something happens, we support you in seconds. And you don't do expense management with Navan. I'm sure that everybody kind of stayed in a hotel. They needed to itemize the receipt, and if they took something from the meal, you don't do it. So, I've never went to a room or any meeting and somebody told me, "What are you talking about? Like, expensive, fun, and easy." So with Navan, you don't do that. You're not wasting your time.
How does it work? I mean, you can just take a picture of your receipt.
Not even that. We gave you, as part of the process, we know that you're in a trip. We give you a credit card. You're swiping your credit card in the restaurant, and we use machine learning and AI to actually know who was with you, what was the reason for the.
How do you use machine language and AI? You're like listening.
You're using us all the time. We know where you are. We are connected.
Now you're cooking me up. How do you know where I am and who am I?
So you signed up to the platform as part of you working for CNBC.
Yeah.
So we are connected for your calendar, for example. So we know
No.
that.
You're not connected to my calendar. I'm sorry. I'm not giving that much information. Can you still do it without knowing? I'm not going to give you access to everything going on my calendar.
So think about it more as a corporate environment where you are already, doing a business trip. And and the company knows, and that you're going to have this meeting, that meeting, another meeting. So the calendar is an information for the expense management.
What about
system. Email? Email it's actually too.
What about creating receipts? So one of the big issues for the purpose of the IRS, at least in the United States, is that you often have to create receipts. Not create receipts. You're supposed to show them that there is an actual receipt. Are you generating your own receipts? Or are you effectively capturing receipts from the retailer?
Yeah, it's a really good question. When you are doing this process, you can get the information from the retailer, like your credit card, what exactly was happening.
Yeah, I don't mind that you having access to that.
And you already use it.
Right, that's fine. You can. They already measure everything I'm doing, but how do you know who I'm meeting with? I should be able to.
It's basically whoever was in the calendar meeting, again, business meeting.
But if it's not in the calendar, you can't track it.
Then we don't do that, exactly.
But how quickly, I mean, you're competing with some big companies too, the likes of an Oracle and an SAP. What's your advantage over those companies?
So you just, when I've mentioned expense management, all of you kind of, you said we don't like to do that, right? And you also nobody likes to spend hours on calling on the phone to a travel agent to book their trip or to change something, or exactly a day like this with rain to actually wait for quite some time on the line to change. So that's what we do. We know to support you really fast. We know that there is an interruption. We are trying to really understand your journey as a traveler.
How good is Ava if I tell her I want to get switched from this flight that I'm on United to American because I know that my departing flight is not going to make that connection in time?
So we kind of were an AI first company from day one. 10 years ago when we started the company, we thought that AI would be a way to optimize the search results, to save company money. Companies that are using us are saving 15% on their travel budget.
Right.
So we've developed Navan Cognition. This is our own agentic AI platform. And Ava is actually built on top of this. She will take 50% of the discussions that we have with travelers. So think about a day that there is a hurricane, there is rain, there is, this year there were so many things in airports.
Right.
So the reason that you don't need to wait when you're talking with us is that she will take all of this and kind of
Can you
shine.
just go back to the receipt issue? Because that's actually a legitimate pain point for pretty much everybody who's engaged in filing expenses.
Yes.
What do you do there?
So we're trying to understand what happened. There is some IRS rules to your point earlier, and then it's very much dependent on the place, on the country, on the rules. If we need a receipt, it depends on the amount, it depends on globally on VAT, it really depends on all these things. If we need a receipt, we're actually automatically opening the camera. We are already there. You click and that's it.
You're automatically opening the camera.
Yeah, so when you swipe the card at the end of the transaction, there is a camera in your phone.
So I get a notification, take a picture right now?
Yes. And if you didn't need it, and if we didn't, we know if you need a receipt or not, again, based on the rules. If you don't need it, we are just telling you, congratulations, you don't need to do anything.
And I never hear from you again.
Yeah, so it's really, so we are figuring out based on, the laws, the regulation, and so on, what needs to get done. Yeah.
Good luck.
Ariel, congratulations.
Thank you
and
so
we'll
much.
be watching later this morning.
Yeah, well, thank you.
Thank you. When we come back, FDA Commissioner Dr. Marty McCary on a new plan to speed up the approval of biosimilar generic drugs in an effort to lower healthcare costs. He's going to join us next, and Squawk Box will be right back.
Welcome back, everybody. The Department of Health and Human Services has announced a plan to speed up the approval of biosimilar generic drugs and a plan to try and help lower healthcare costs. Joining us right now with the details is FDA Commissioner Dr. Marty Makary. And Dr. Makary, thank you for being with us today. Let's talk through what you guys are what you are doing at this point. How's it going to help?
Well, good morning, Becky and Andrew. So the fastest area of growth of healthcare spending in the United States is drug price inflation. And the fastest area of drug price inflation is an expensive new class of medications called biologics. These are complex molecules. They're not small molecules. They are often derived and produced from a cell line in a laboratory, so there's a higher cost. They're about 5% of medications right now, and more than half the cost of drugs. And so the good news is there is a generic version that we call a biosimilar. But the problem is that there's been a lot of red tape and a lot of difficulty for biosimilar manufacturers to bring these medications to market because there's been a 5 to 8 year development process where the FDA has required sometimes these companies to go out and do comparative studies. We're saying now that we're going to require a smaller set of studies called PK studies. We don't require small molecule generic companies to go back and do giant clinical trials, and so we're no longer going to require that on a routine basis for biosimilars. And the goal is to bring more biosimilars to market. And Becky, as you know, I practiced surgery and cancer care at Johns Hopkins for 22 years. I've seen these medications, these do wonders. They're amazing. Autoimmune conditions, for rare conditions, for individuals with cancer, for transplant recipients. It's an amazing class of medication, but when it's not affordable, it doesn't work at all. The efficacy is zero. And so the idea is to get more on the market so they're more affordable and there's more competition. We've had 76 approved since the first one 10 years ago. We should probably be at 200 or 300. And so we're going to cut that time to bring a biosimilar to market in half, from 5 to 8 years down to 2.5 to 5 years.
I mean, that makes a lot of sense, particularly if it's cutting red tape, trying to, I guess, reinvent the wheel, improve this stuff that's already been proven to a large extent. I would guess you're getting some pushback from the industry, the drug companies that have come up with the originals, because red tape benefits them. They probably want to protect their investment, and I guess I would wonder what this does to innovation. Will it threaten those companies that do the initial spend with maybe they're less likely to take on the big risk to develop some of these?
Well, there's still a massive treasure chest for any company that can bring a biologic that works to market. The market exclusivity is a long period of time, and averages 12 years. And so we're still going to see tremendous innovation. We have a new program at the FDA that gets decisions out in weeks instead of a year. We have a lot of incentives, especially for domestic manufacturing. So we're still going to see a lot of innovation in the biologic space, and we need that. We want to see that. But if you look at the story of Humira, one of the most common biologics that has been out, it took another 7 years after Humira came off patent for a generic equivalent, that is a biosimilar, to come to market. And when there was just one biosimilar that came to market 7 years later, you didn't really see the price change that much. There was almost an implied price collusion. So we want to see more biosimilars come to market. Once there were 3 biosimilars that came to market to compete with Humira, you really started to see prices go down, and lowering drug prices significantly, that is, to get them down to a fraction of what the branded patent price is a massive priority for President Trump. We're doing it through most favored nation status pricing. Mm-hmm. We're doing it through allowing people to bypass PBMs and go direct to the manufacturers. Drug companies love that, and that's an opportunity to save.
Another thing the drug companies have liked is this priority review vouchers that they can apply for. I mean, these are pretty new, but I think you've gotten a pretty strong response from the industry. This is basically promising that you're going to do a fast review of these drugs, again, cutting out some of the red tape that slows things down.
That's right, Becky. You know, I want to see the FDA convert from being in a receive-only mode to being very proactive and partnering with companies because we want to see more cures and meaningful treatments for the American people. That is one of our big goals. And so we can do that. We can partner with industry and yet keep our review impeccably scientifically independent. So for example, Becky, we just announced 9 recipients of this new priority review voucher program that gets a decision out in weeks instead of a year. We're going to announce another batch in the next several weeks, and we're going to keep going. One of those vouchers that we announced came just 10 days after a New England Journal of Medicine article showing that a new gene therapy for a certain type of congenital deafness in children resulted in essentially a cure in 3 out of 12 of them, and another 7 had significant improvement. When we heard about that study, we went to the company and we issued a voucher to get a decision out in weeks. And I'm personally, Becky, going to the scientific reviewers at the FDA, and I'm asking them, are you seeing anything that looks amazing? Anything that just looks like a game changer? And if so, let's call the company. Let's talk about cutting the red tape and the idle time because we all want the same thing. We want to see a treatment for neurodevelopmental and neurodegenerative disorders. We want to see treatments for certain types of cancers. We want to see cures. We want to see a treatment for PTSD. And so we're going to do that by being proactive, and that's our new approach.
I mean, Marty, that's great to hear. Are there ways that maybe small companies can get their way through? What do they have to do to raise their hand to say, hey, we've got some great results, take a look at us too?
So the initial priority review vouchers were issued to a diverse range of companies, from those treating rare conditions, which is a huge priority in this administration, to drugs that treat pancreatic cancer, one of the most common forms of cancer in the United States today. We also are advocating for Congress to pass the Pediatric Priority Review Voucher Program. That takes the review down to 6 months. We're trying to pilot to get our decisions out in weeks. Now look, I don't know if it's going to work. It's so far, we went through the first one, it worked beautifully, but we're going to have to try new things if we're going to challenge this notion. Why does it take 10 to 12 years for a new drug to come to market? As a physician, we would hear about these amazing, promising therapies, something with early results in animal studies, right, or early phase 2, and we would wonder, like, when can we offer these to our patients? So that's why we're trying radically new things like this priority review to get a decision out in weeks.
Commissioner McCary, that's music to my ears. Glad to hear it. I hope you give us updates on how things are going along the way. We appreciate your time today.
Thanks so much. Good to be with you.
Thank you.
Okay. Coming up, 8VC founding partner Joe Lonsdale, his firm and Apollo Global partnering to fund the Innovators Rebuilding American Industry. We're going to talk about that and more when Squawk Box returns. Welcome back to Squawk Box. President Trump ordering the Pentagon to restart nuclear testing. This follows an announcement from Russian President Vladimir Putin that they successfully tested its Poseidon nuclear-capable super torpedo. Joining us right now is Joe Lonsdale, Palantir's co-founder and 8VC founding partner of 8VC and an Apollo Global. They just announced a partnership yesterday to fund the innovators rebuilding American industry, and we're going to talk about that in just a moment. But given actually your role at Palantir, I'm actually curious. There's sort of a fascinating split screen in the past 24 hours. On one end, you had this tariff truce, maybe deal, temporary something, maybe more than that, with China. And at the same time, you heard the president say, we're going to start testing nuclear weapons. And I think people are trying to make sense of the two.
Well, we had a good conversation, it sounds like, with Xi last night while we were sleeping. And he said it was 12 out of 10. He got what he wanted, which I think is good for the markets, positive overall. This conflict with Russia, the war was not as easy to end apparently as some of us were hoping. And I think he tested these. I mean, listen, these are scary things they have over the last 10 years Russia's developed. Yeah. And it's like I said, the self-driving car of nuclear weapon. These things go in the water, and our nuclear triad, we don't have these as far as I know. These are different. We don't need them. We have a triad already. These things are scary. They can take out cities, and he's talking about those. He's testing 14,000 kilometer, missiles with nukes on them. We have a lot of nukes too, and it's important we show that we have a deterrent. Trump's saying the right things.
And do you think, just real quick, that this is, I mean, we were talking to Ambassador Burns earlier, given the timing of that announcement, obviously, contextually, he talked about it in the context of Russia, but he also announced it within the timing of his talks with President Xi. So how related do you think these two are?
Listen, I think Trump knows you have to show strength, right? And I think you have to show strength in a respectful way. It's probably a better way to show strength talking about it versus another adversary when you're going into someone's house.
Do you think it was a mistake then, over the last 30 years, for us not to be doing such a thing? I mean, President Bush, many years ago, tried to de-escalate things in this context.
I think there's certain parts of the world where when you show strength, it's really important. I think America was so dominant in the 80s and 90s, especially after the Cold War ended, that you almost didn't even need to say it. I think at this point, if you look at what she said and thinks about China, he said he thinks the West is in decline, he's growing. We're showing him that's not true. We're showing him with our new advances we're making in the defense world. We're showing with what Trump's saying, we're not just going to fade away and be an easy target. You better watch out.
Let's talk about this deal with Apollo. What's this about?
As we all know, there's a lot of really exciting things going on in AI. It's actually working. It turns out over the next 10 years, we're going to reindustrialize the U.S. We're going to bring back advanced manufacturing. We're going to do it in every area. We're going to do it in bio. We're going to do it in aerospace. We're going to do it, in all sorts of parts of our economy. It's going to need trillions of dollars. A lot of cases we build companies that put a lot of equity in, they get growing, they're really big, but there's a lot of assets we're going to transform their value. That means lots of different types of financing. Apollo is one of the world's best at this. They manage around $1 trillion. We need types of capital and expertise from people like that for our companies to help build in the U.S.
How?
It's a different type of, I always think of Silicon Valley as being this asset-light type of, this CapEx-light sort of investments, and that's been great for it. But man, that has shifted over the last couple of years.
There's lots of things. So first of all, it's the fact that OpenAI needs infinite cash. And
right.
And in some ways that's separate though. So think about this, like one of our companies, Budget X talent from Waymo, these guys are some of the best in the world. They're doing autonomous excavators, right? 25% of all construction in the US uses these excavators. You can do them without people. Actually, that makes a lot more projects pencil. But if you're gonna start doing these projects, for example, you're gonna run a quarry much more efficiently. There's 6,000 quarries. These are assets you can transform now with technology. Wow. That requires a lot more scale of capital.
That is amazing, and it's great to hear the rebuilding of America and reindustrializing things here, but it sounds like it's going to be done with a lot fewer workers, blue-collar workers, than we've seen in the past. Well, is that the idea for it?
I think it's really important in economics to understand, in order to make these projects pencil, in order to make them efficient, you need to do them more efficiently. So overall, you can still create more jobs, more activity.
It will create more jobs overall.
100%. I think Jevons paradox is a really important point in economics, where when the price of the efficiency of coal plants doubled, so you need half as much coal, all of a sudden the demand for coal went up. Everyone was worried who was investing in coal back in the 9th century. Oh no, you're not going to need as much. Turns out if you could do more with it more cheaply, you need a lot more. And so this is especially when it comes to building things. You're going to have a lot more labor if you could do it more cheaply.
Yeah. All right, talking about building things, data centers being built all over this country. Everywhere. I mean, it's coursing through the economy. And the question that has been raised on this broadcast and elsewhere for the last month, if not more, is whether we are in some kind of bubble, whether there is a demonstrable ROI behind it, whether it's a religion, whether you can actually do the math, and whether the math makes sense. What say you?
I was sitting with friends actually a few nights ago in San Francisco from OpenAI and Anthropic and the usual suspects. And actually, it was funny what they were telling me. I'm gonna get myself in trouble here, but they were saying basically these companies are afraid to scare their investors, and so they're telling them they need a lot less capital, a lot less energy than they know they actually do. So you're going to see every 3 to 6 months as we have, oh wow, it turns out we actually need a lot more energy. We actually need a lot more capital in data centers. So if anything, I think we're underestimating how much investment's going to go into this space and how much they're going to need.
So I don't disagree with you about how much we're going to need to make it work. The question is whether you think that there's math on the other side to pay for it all, given the fact that, at least right now, the economics don't, look favorable in this particular moment.
The economics are extremely favorable for the apps and services companies, and with AI we're building on top of it. So I'm building a lot of companies in the real economy that are increasing productivity. Those things are very economic. In terms of the if it's economic or not for what XAI and Anthropic and OpenAI are doing, that's a very tough question.
But all of the apps are being built on top of those frontier models in large part, no?
Yes, but they're profitable. The things on top are profitable today with our LLMs today, and it's clear LLMs are getting even better. So we already have something that's very profitable, very worthwhile today, even if all of the development stopped. So obviously it's in my interest for them to keep investing money, keep getting better, but it already works today. So it's not a bubble in the sense that there are things that are worth trillions of dollars that, in terms of productivity even today.
And what do you make, though, of how these things are getting financed? We looked at a fascinating deal just a week or two ago with Meta and Blue Owl, which effectively is a private credit firm. They effectively guarantee that they'll be using the data center for 4 years. They guarantee some kind of cash out, I think, to 16 years, but they could actually get out at least partially of some of these deals. I mean, some people look at some of this and say, that's a little like WeWork, short-term rental, long-term commitment.
They're gonna need a lot of capital. I think OpenAI just is implying it's gonna go public at $1 trillion valuation, something in the news I read this morning. That makes sense to me. The retail demand for this stuff's really high. It turns out there's a lot of very wealthy people in America who want access to the top of AI, the top of defense, and so they're gonna need more capital. I think they're gonna get it.
And you have no concerns about any of this?
I'm an investor in the things that I know are going to be profitable, the productivity layer, the apps and services layer. I'm not as big of an investor myself in the model companies. So yeah, I am concerned that in situations like this, if you echo telecom, there could be too much money put to work.
How do you think, therefore, about an NVIDIA or an AMD or some of the big chip companies that have benefited from this, but at the same time, a lot of it's dependent on the continued build out and effectively payments longer term from a lot of the LLMs and others and the big tech companies to continue to support it?
Listen, I mean, it's very clear the AI thing is real in the sense that it's working to hugely affect productivity. It's just huge growth. If you look at the growth of revenue in these companies, they're going up quickly. In any situation like this, of course, you're going to get them investing way ahead and burning way ahead to grow. That's the nature of it. But it's clear it's not going away.
Palantir.
It's crushing it.
It's crushing it. I imagine you believe it will continue to crush it.
I love the Jensen announcement. It's the most powerful enterprise stack in the world.
Well, that was the question. Where do you think? What does Palantir look like to you in 5 years from now?
Listen, Palantir is the way that a lot of the biggest companies in the world are deploying AI and productivity and accessing it, and it's succeeding, and it's becoming the core stock.
Right, but the multiple on this is extraordinary at this point.
It's impressive.
Right, and so my question to you is, what has to happen to either grow into that multiple or shift? I mean, how much business do they have to capture, and what does that business even look like in the future?
I think they have to keep growing at the pace they're growing, and it will not look nearly as expensive if it keeps growing at that pace, as you said.
Okay. Any other fun things that we're missing here? I feel like you always come.
Yeah, what do you know that we don't?
Yeah, I feel like you always know stuff that we don't.
There's the Department of War is building a lot of important stuff right now. It's doing it aggressively. We need to get some things done, Trump said, by 2028 to be ready, and I think they're doing it. So I think there's a lot of investments right now, a lot of building.
To be ready, is that to be ready for Taiwan?
To deter our enemies. Listen, there's a lot of the way it used to work there is the primes all want things to take till 2035, and they want you to do things the traditional way. And what's really exciting right now is you have a bunch of these new top companies like Saronic, like a bunch of others that are actually already delivering hundreds of ships, that are already building things in the U.S. And we have the fastest ship built in the U.S. coming out of Saronic this year. versus since World War II. And so we are reindustrializing. It is working, and we're proving it.
Joe Lonsdale, thank you, sir. It's always great to see you.
Thank you.
Appreciate it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Andrew Ross Sorkin. Among our top stories this morning, Novo Nordisk is boosting its bid for obesity drug startup Metsera to $56.50 a share. That would value the deal at about $6.5 billion. That tops Pfizer's existing $4.9 billion offer. Metsera is developing a next-generation weight loss treatment that could deliver GLP-1-like benefits with fewer side effects. Pfizer calls Novo's bid reckless and unprecedented and warns that it carries regulatory risks. The Federal Reserve cutting interest rates for a second straight time, lowering the Fed funds rate by a quarter point. But Chairman Jay Powell saying another cut in December is not a foregone conclusion. And automaker Stellantis reporting a 13% jump in net revenue, thanks mostly to strong sales in North America and Europe. The company is sticking with its outlook for the rest of the year, but it's also warning investors to expect some one-time charges as it deals with political, economic, and regulatory challenges. And Stellantis shares are off by about 6%.
Meantime, the U.S. and China reaching a deal on rare earths and fentanyl-related tariffs. Amy Javers joins us now with more from Washington. Good morning.
Yeah, good morning, Andrew. The highly anticipated meeting began in an ominous note as President Trump's Marine One helicopter was in the air en route to Busan. His social media site lit up with a message noting that China is quickly catching up to the U.S. in number of nuclear weapons and announcing that the U.S. will restart nuclear weapons testing, which it hasn't done since 1992 at the end of the Cold War. Now, despite that nuclear saber rattling, the meeting between Trump and Xi Jinping went forward exactly as planned.
We will be having some discussions. I think we've already agreed to a lot of things, and we'll agree to some more right now. But President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
And for his part, President Xi struck a measured tone in his description of the tensions between the two sides.
Given our different national conditions, we do not always see eye to eye with each other. And it is normal for the two leading economies of the world to have frictions now and then. And in the face of winds, waves, and challenges, you and I, at the helm of China-US relations, should stay the right course and ensure the steady sailing forward of the giant ship of China-US relations.
Now, President Trump told reporters on board the return flight on Air Force One that a meeting had been a success and that a trade deal with China would be ready to be signed, quote, pretty soon, because not many stumbling blocks remain. He said the two sides had agreed to a number of items, a one-year agreement on Chinese exports of rare earths, the U.S. reducing fentanyl tariffs on China from 20 to 10% effective immediately. China, he said, would work very hard to stop the flow of fentanyl. Trump said overall China tariffs will now be at around 47%, and he will not impose his threatened 100% November 1st tariffs. Trump said he is going to go to China in April. Now, it's not clear what all this means for TikTok, guys. The Chinese Ministry of Commerce spokesman said overnight simply, China will properly address issues related to TikTok. And in the end, the president said that nuclear weapons post made just before the meeting was not directed at China after all. He said it was directed at others. Back over to you.
Okay, Amy Javers, appreciate it. Thank you very, very much.
Let's get a check on the futures this morning. The Dow has been lower. It's still off by about 130 points. S&P futures have improved. They're now up by about 1 point. The NASDAQ futures have turned positive as well. They're up by just over 6 points. If you're watching Treasuries, though, you'll see that the yields there continue to be higher. 10 years just below 4.1%, the 2 years at 3.6%. Let's get over to Mike Santoli, who has more on what we've been watching. And man, it's been a pretty busy 12 hours or so of market activity, watching what people thought heading into the Fed meeting, watching what they thought after, and then getting all those tech earnings last night, Mike.
Yeah, for sure, Becky, a lot to absorb. And in fact, yesterday was a day, I was saying this during the day, that all of the main tenets of the bullish case for stocks were kind of on display and there to be tested, which of course included the AI momentum, naturally the Fed cutting rates into a decent economy, and then of course maybe some trade peace or some de-escalation there. So all of it was sort of priced into a degree, and maybe the outcomes were a little bit more mixed than the market was ready for. So we're hesitating on the S&P 500. Obviously, big breakout in the last few days to a new high. We did cross above the 6,900 level. Clearly, this is above where most year-end targets are from Wall Street, so we're overachieving on some level, but it does seem as if, maybe there's some complication. Also, it's been a very narrow rally. Not a lot of stocks participating to the upside in this last little run. That's been getting some attention. But take a look at the semiconductor index, which is really the absolute center of the strength of this market. This is a 2-year chart. I have the 200-day moving. Actually, this is a year-to-date. But on a 2-year basis, this is as overbought relative to its 200-day average as we've been since July of 2024. At that moment, we actually did have a pretty stiff correction. It's just getting very stretched relative to its own trend, and it's kind of doing a lot of work to hold the overall indexes together. Finally, been talking for a while about how the cyclical parts of the market are not really playing ball with the idea that the economy might reaccelerate. And here you have the financials and the equal-weighted consumer discretionary relative to the overall S&P 500. You see them kind of fall away. After the Fed comments yesterday by Powell, you definitely saw some retrenchment in that area as yields went up, and just a little bit more anxiety around the path of underlying economic growth in the absence, of course, of official government data, guys.
Mike, you mentioned this, just the breadth of the rally being so narrow, and I know there's a lot of ways to kind of measure this. The gains are represented by how many companies, less than 10 companies maybe at this point. What's the latest that you've been using to kind of break this down and take a look at it?
Yeah, I mean, there are multiple ways to do it. I mean, one standard way is to just look at the S&P 500 compared to an equal-weighted version of the S&P 500. And a year ago, I have to say, it was a very trendy trade for 2025 to say, hey, why don't you rotate into the equal weight? Everyone's concerned about the concentration in the market. The equal weight is now at relative lows to the S&P 500. So it hasn't really worked because you've still had so much wealth creation at the top. Now, the mitigating factor is the equal weight, the average stock, it's still on a 1-year basis doing fine. It's still tilted higher. It's just not nearly keeping pace with the major ones. Now, the other way to do it is the percentage of stocks making new highs when the index makes a new high, the percentage of stocks that are, say, over a 50-day moving average. All of that is lagging in this last little run. So for the duration of the rally to really persist, you'd want to see that kind of move to the upside.
Man, you are our very own in-house AI.
I had
no idea I was going to ask you any of those questions, and you came back with
I
three
just opened
really
the
great
tap.
answers.
It's always going in the funnel. So yeah.
And it works better than some of the chatbots for sure. You are our own brilliant guy. Mike, thank you.
Thank you.
We'll see you later.
See you.
Okay, coming up, a Harvard professor, author, and podcaster, Arthur Brooks, on the current political divide, the government shutdown, and so much more. And speaking of shutdown, Senate Majority Leader John Thune is going to be our special guest later in the hour. Don't go anywhere, Squawk Box. I'll be right back.
everybody. Let's take a look at shares of Roblox this morning. The company reporting a loss of 37 cents a share, but that was less than the 49-cent share loss that the street had anticipated. Revenue on a bookings basis was $1.9 billion during the quarter. That also beat estimates. And Roblox is raising guidance for the full year. That stock was initially higher after the report, but it's turned negative in a pretty big way, down 8.5%. So we'll have to see what the company is saying, what else investors are seeing here. But obviously, that is a sharp reversal after the initial reaction.
Our next guest is going to be weighing in on the mood of the nation amid the government shutdown, AI-driven layoffs, maybe a little bit of New York City, capitalism versus socialism we get to.
There you go.
You always keep us happy. Harvard professor Arthur Brooks, he hosts the podcast Office Hours with Arthur Brooks. It is new, and you got to check it out if you haven't already. His latest book is called The Happiness Files. It, of course, is a New York Times bestseller, and we love having you here because you make us happy.
Well, thank you, and congratulations to you on 1929. It's top in the charts, man.
We're trying to be happy.
It's wonderful.
Trying to be happy.
Reminding us of history.
We talked about actually what it means to be happy, and actually that the journey of a project is actually what makes you happier than the success. Because I was saying to him that last week, even though the thing had done very well on the list, I said, oddly, I didn't actually feel as happy as I thought it would be.
And it came as a surprise. That's called the arrival fallacy.
I was alone. I was in a hotel in Richmond, Virginia when I got on the New York Times bestseller list, and a friend of mine called and said, I imagine you're so happy. And I said, I almost feel relieved and, in truth, a little lonely because I was by myself in this hotel in the middle of Richmond.
A hotel in Richmond.
And then so I was talking to him last night about what it means to be happy, and he said it's not about arrival.
It's not. It's not. Never. You know, this is a show watched by some of the most powerful people in business. They're the best show for if you're a CEO to watch, of course. And everybody watching this show knows that if you're living for the arrival at the goal, you're fooling yourself. Now, many people watching us, they have a problem. It's called success addiction. That usually starts when you're a kid and you get, rewarded and you get attention from grown-ups because you do these amazing things. And then you start achieving and you start to really get your sense of reward from getting these accolades. And so you do well in school and then you go on to get these really good jobs. But the problem with all that is not just workaholism. It's based on this idea that you're finally going to arrive and then the bliss is going to be constant, and that's wrong. This is one of the reasons that Olympic athletes typically have a clinical depression after they win their gold. It's even worse if you win the silver, by the way, because you're thinking about the gold for the rest of your life. And so the important thing to understand is you got to build your life so that you're enjoying the journey all along the way.
And it's not just enjoying the journey. I think it's also having gratitude. I was reading something recently that said happiness is a compilation of gratitude minus envy.
Yeah.
So you have to be happy with who you are, what you have, and stop comparing yourself.
And that's a hard thing to do. We're evolved as a species. Homo sapiens has evolved to be ungrateful, suspicious, hostile, and afraid. And the reason is because in the Pleistocene, 250,000 years ago, our ancestors passed on their genes because of their negative emotions, not because of their positive emotions. You have to make an effort to be grateful. I mean, look, I study this stuff. I'm a professor of this stuff, and I found myself 2 weeks ago saying, first class on United Airlines has really gone downhill. And it's what's wrong with me? It's like I'm such an ungrateful wretch. And the reason is because of my genetics. I'm designed to be ungrateful. And so everybody watching not everybody, but most people watching us have really charmed lives. They have really good lives. And their spouses always tell them, why don't you stop and smell the roses?
Right.
I bet you, Andrew, that your wife is like, Andrew, why can't you stop?
Yeah.
Can't you just stop and enjoy it?
What's so interesting, though, about, by the way, we have so many, as you mentioned, super successful people who watch this broadcast, who have gotten to the top of the mountain. They're at the top of the mountain.
Yeah.
And for whatever reason, instead of just skiing down the mountain and saying, I got there, they want to stay there.
Yeah.
They want to go. They look up. They see another mountain.
There's got to be another mountain. Of course.
So what's that about?
That's all about the fact that your rewards come from winning. They come from winning the next thing. That's what we're built for progress.
That's an addiction.
It is, but it's also really how we're built. I mean, it's funny, there's a big mystery in the diet literature about why diets don't work. 95% of diets, approximately, you gain all the weight back, even though you lose the weight in the first place. The reason is because all of the gratification in a diet comes from the scale going down each day.
Right.
And then your reward for hitting your goal is never getting to eat what you like for the rest of your life. Congratulations.
Right.
Arriving at a goal is deeply, deeply unsatisfying, and it freaks people out. You get the corner office, you're the CEO, and you get all the headache of being the CEO, but you can't actually achieve that thing anymore. That you're not going toward your goal anymore, and that's a problem for happiness.
I got a different one for you. I don't know if you see on the screen here. We have a title. It says Arthur Brooks on Mood of Nations.
All right.
It doesn't feel like the nation's that happy.
Yeah, no,
It feels like there's a game of chicken going on as it relates to what's happening with government shutdowns.
Right.
There's polarization. There's questions, by the way, even now about capitalism, socialism, what system's working for people in their own happiness. What do you think is happening here?
So we have two problems with happiness. Happiness has been gradually declining in the United States since about 1990. So we're, 35 years in on a gradual decline. That's the happiness climate problem. And it has to do with people are less likely to practice their religion. They're less likely to get married and have children. They're less likely to have close friends. And they're less likely to actually see their work as a calling than they ever did in the past. And the 4 habits of the happiest people are faith, family, friends, and work. Those are the big 4. And you and I have talked about them. We talked about this on the show 4 or 5 times. But then there's the storms, the weather of happiness, and this is something we really have to grapple with. Technology has changed the weather of happiness.
You're talking about this thing.
Yeah, for sure.
We're all addicted to.
I've just finished a book that's coming out in March. This is the first stop. When this thing comes out in March, is we'll be talking about this and how we've changed our brains with the misuse of technology. That we're actually using the wrong hemisphere of our brain all the time, where we can't actually apprehend and understand the meaning of our lives, which is horrible.
What hemisphere are we
Right, the left hemisphere of the brain is the things and tasks. The right hemisphere is the mystery and the meaning.
Yeah.
And we need to be living in real life, in real love relationships, and having metaphysical experiences such that we can understand the meaning of our lives. But the more time that we're glued to our devices using technology, the more that we're relegating ourselves to the wrong side of the brain.
Yeah.
Political polarization is another thing that's actually just ripping us apart. We're being effectively manipulated by the 5% extrinsic margins in politics who want us to fight each other. And that kind of polarization is really hurting the mood of the nation a lot. We actually need a rebellion of people who want to be happier, rebelling against their own side, whatever that side happens to be. And that's a hard thing to do. This can persist it won't persist forever, but it's a hard thing. We need to do it.
You have been preaching an almost optimistic approach to our country for a long time.
Yeah.
I feel like we've known each other
years
for 15 years.
Yeah.
And you'd come in and you'd say, at some point, the country's going to turn. What is the turn?
Well, the turn, actually, these turns in history, and I'm not a historian, but what you do find is the mood of a nation tends to follow 50-year cycles. That's generally the case. And 2022 looked an awful lot like 1972.
1972?
Yeah, 1972.
Okay.
Radical.
Wait a second.
Yeah.
Wait a second.
What was the happiness index then?
Yeah, it was very low.
Are you telling me it's going to be a long time?
Yeah, it's going to be a long time, but here's the good news. That we tend to actually have sort of an apogee when we get to the 25-year mark. So it's like...
Well, actually, I'm happy now.
Yeah, I mean...
Whatever.
Well, this is the broader point. Happiness is not a societal phenomenon. It's an individual phenomenon.
Right.
And so each person watching us can say, the mood of the nation, it's all screwed up. New York City's going to have a socialist mayor, or I don't like the president of the United States, or whatever they're talking about. You want to fix that? Pay attention to your relationship with the divine. Go hang out with your kids. Go make better friends.
Okay, but let me throw a new element into the mix that did not exist literally 36 months ago.
Yeah, tell me.
Artificial intelligence.
Yeah, man.
Your new friend is this.
Yes, I know.
Right?
This is really what I'm
and that's what I'm concerned about. And by the way, if we were talking with Joe Lonsdale earlier, if the new friend is as successful as some of these valuations would suggest, we all may not actually go to work with friends because we won't have jobs. And so I think there's a lot of also anxiety out there around all of this.
There's a lot of anxiety about that. There will be perturbation of the economy. There will be dislocation. That's going to happen. It always happens with technology. But here's the thing for each one of us to understand. We're all interacting now individually with AI. We are. And anybody who isn't is just behind the curve, and they're going to need to. It's either, you're going to either use it wrong and it's going to make you miserable, or you can use it right and make your life.
What does that mean? Tell us how to use it right then.
So the artificial intelligence or any tech is an adjunct to the left side of your brain, which is your tasks. It's never going to help you or complement the right side of your brain, which is mystery and meaning and love.
Yes,
It
don't
won't.
use Sora to
It
make a
won't.
bunch of pornographic videos.
Yes, so exactly. So if you're using it to free up your time so you can go spend more time with your kids and your spouse, good for you. If, on the other hand, you're using it as your lover or your friend or your therapist, you're going to get sad and anxious and lonely, and the reason is your brain knows it's being used incorrectly. Even though you don't know it, your brain's going to...
That's interesting. So I have a bunch of friends, and I'm not, this is not me, but I do have a bunch of friends who talk about using this as a therapist of sorts.
It can't be done.
And have argued to me, actually, that it's been quite successful. In fact, I was just talking to somebody the other day who said that they thought that they had a human therapist,
right,
and they thought that they were using ChatGPT, and they thought that this understood them better.
Yeah, that means they have a crummy therapist.
Are you a fan of therapy?
No,
Human
I mean, just in
therapists?
general, I think that there's a role for, I mean, of course, you know...
For extreme situations. But
Yeah, of course,
like
mental health treatment is
weekly
so
on
incredibly important. Thank God for psychiatric care in this country. It's saved the lives of members of my family, to be sure. But the way that a lot of people use therapy today is to eradicate problems in their life. You go to therapy a lot of the time, you say, I'm sad and anxious. They're going to say there's something wrong. You know, if you go to the campus counseling center at your university and you say you're sad and anxious, they're going to try to treat you because it's a liability problem. Look, I tell my students at HBS, you're studying at Harvard. If you're not sad and anxious, you need therapy. It's a hard thing to do, and good for you for doing this hard thing. We have a pain eradication, a suffering eradication mentality, and that's a mistake.
I got a different one for you.
What?
It seems like people are more medicated than ever.
Yeah, they are. They are. They absolutely are. And part of the reason for that is because the industrial complex around mental health today has talked about elimination of pain. And the truth of the matter is you won't find the meaning of your life if you don't understand suffering. Your suffering is sacred. It can be disproportionate. It can be dysregulated. There are people who actually absolutely need these drug regimens, which have been miraculous and saved a lot of lives. But many, many, many people are turning to them as opposed to understanding the meaning of what their life is all about. Life on earth has a lot of suffering in it, is the bottom line.
Maybe the good news is people are drinking less.
People
Stop
drink
self-medicating.
less. There's a lot more cannabis. And this is also something that I really admire about young people today among my students. They're using actually mostly fewer substances than people of my generation, because the truth is anything that is euphoric is neurotoxic.
Right.
And so you have to be very serious about the decision making you have. Now, you can make the decision, I'm going to have a glass of wine, good for you. But the truth is, if you're bored or anxious and that's the reason you're using euphoric substances, it's going to lead to trouble.
Right.
You just started a new podcast. You've become a member.
Podcaster.
You're a podcaster now.
Yeah.
You happy about that?
It's super fun because what I'm doing, well, I've been writing a column in the Atlantic for a long time called How to Build a Life every Thursday morning. I have 275 columns in the bank, which means I've done the work, I've done the research on this, and in my podcast I talk about different areas of happiness in depth. Mostly I'm talking to the camera. Sometimes I have some guests, and that can be pretty popular too. But the most popular podcast that I've done so far is I talked about my 6-part neuroscience-based morning routine for greater happiness and wellness, and it got millions of viewers, got millions of listeners on the basis of that.
You can use that morning routine. Can you do that morning routine if you host a morning show?
It sort of depends on what morning means to you. I mean, you get up at 4:30.
I'm up at 4:30. She's up at 3:30.
You're up at 3:30 a.m. It's well 3:45. You get an extra 15 minutes. That's a game changer, isn't it?
And some days I sleep till 4.
Yeah, I get up at 4:30, and it's really important. The key thing to remember is that your day is much better if you get up before the sun. And there's a lot of neuroscience research on that. And then you have to design your day around the rhythms that you've got for your work, to be sure. But I work out super hard first thing in the morning, and then I go to mass every morning. And then so I've got, wake up before the sun, body and soul.
Did you do that this morning before you came here?
Yeah.
Wow.
And and this is great. This show's perfect for my schedule, as a matter of fact, because and I'm not a natural morning lark, by the way.
Yeah, me neither.
I thought all the way through my 20s I was a night owl. Well, it turned out I was just a musician who drank too much, and
I will say this routine
saves you in some
It's
it
really
kills you slowly by the lack of sleep you get, but it
well.
does save you in other
That's because this morning starts last night.
Well, I'm glad that this works for you, so come on back.
I love it.
Thank you.
Favorite show. Thank you.
See,
Appreciate
we
it.
don't need therapy because we have you. Thank you, Arthur.
Thanks.
Up next, stocks to watch as we head toward the opening bell. And then Senate Majority Leader John Thune will join us for the latest on the shutdown and paying federal workers. Squawk Box, we'll be right back.
Welcome back to Squawk Box. And take a look at the futures. We are in the red this morning. It's raining outside and raining on the markets. Dow off about 217 points. NASDAQ looking to open down about 100 points. The S&P 500 looking to open down about 20 points. I want to get over to Frank Holland to take a look at this morning's pre-market movers. Frank, what's going on?
Hey, good morning, Andrew. We're going to start with two big pharma movers this morning. Take a look. You see Merck shares. They're lower, just about 3% lower. After sales of its immunotherapy drug Keytruda, they fell short of estimates. The company also narrowed its outlook for the year. Meantime, you see it right here. Eli Lilly up just about 4% on better than expected earnings and revenue for Q3. It also raised its guidance, saw strong sales for its weight loss drugs, Zepbound and Mounjaro. Next up are shares of our parent company, Comcast. You can see it's up just about 2% right now. And earnings and revenue beat. Domestic wireless net additions, they were 414,000. Best quarterly result on record. However, the company saw its broadband customers decline for the fourth straight quarter. Right now, shares are up just about 1.5%, but you can see year-to-date pulling back more than 20%. And we want to cap off some of the big tech earnings movers of this morning. Let's start off with Alphabet. Shares are higher this morning, up over 8%. The company exceeded almost every metric that analysts follow. Very different story from Meta, which took a one-time tax charge of nearly $16 billion. You can see those shares are pulling back over 9%. Also, we got Microsoft, also lower right now, over 2% lower after it took a one-time $3.1 billion hit for its investment in OpenAI. Andrew, back over to you.
Frank Allen, thank you, sir.
Which dropped pretty significantly in the futures.
NASDAQ dropped over 110 points. S&P futures down by 20 points. The Dow weakened by over 100 points too. We'll continue to dig through to see what's happening, but obviously a lot of volatility this morning, and we will keep an eye on that too. Up next, though, the Fed rate cut and the markets. Professor Jeremy Siegel will join us right after this break with his outlook for the S&P 500 and much more. And then Senator John Thune will be our guest. We'll talk to him about the shutdown, other things that we're seeing in these trade talks with China. Squawk Box will be right back. All right, welcome back, everybody. Take a look at the futures once more. S&P futures down by 17. The Dow futures off by 182. The NASDAQ down by 94. Let's get some insights on yesterday's Fed rate decision from Jeremy Siegel. He is chief economist at Wisdom Tree. He's also professor emeritus of finance at University of Pennsylvania's Wharton School of Business. And Jeremy, we were speaking earlier today with Roger Ferguson, the former vice chair at the Fed. His take was kind of interesting on this, that first of all, he applauded that Jay Powell very firmly said that this is not a glide path, that the next rate cut may not be happening on this. And he's a little concerned about the potential for stagflation here, too. What's your takeaway?
Well, you're certainly right, Becky. You know, he said not only is a rate cut not a sure thing for the December meeting, he's emphasized by saying far from it. Those words, I think the Dow dropped 150 points in 5 seconds after that. I think my take is that this will slow down the bull market. I don't think it's going to stop the bull market. But they are looking at strength in the economy and basically saying, you know, that it's not a sure thing. Now, we have 6 weeks. The next meeting is December 10th. I think the next 6 weeks are very important because even though it ends, December 10th is 2 weeks before Christmas, we're going to get a good idea about how the consumer is going to be reacting to a number of tariff increased prices, from all the goods that they're going to buy for the holiday season. And we're also going to see whether layoffs from AI accelerate or not. So I think what they're saying is, I want to see that data. And by the way, whether the government opens or not, and I'm certainly hoping by December 10th it's going to be reopened, but I think they're going to have enough data. I think they have enough alternative sources of data to determine whether there is going to be a slowdown of the consumer. The good news is, I think the Fed has our back. They're essentially saying, if we do see a slowdown, we will cut. But if we see the strength that we are seeing right now, we're gonna maybe wait another meeting and see what happens in January.
So you said you think that this slows down the bull market but doesn't stop it. Is that because you think that the market doesn't need rate cuts in order to continue to push higher, and there's enough happening on the corporate front, on the economic front? Or do you think that eventually the Fed has to say, okay, we're going to give you what you want?
No, I think that, my feeling is we should be a bit lower. But I also have always said that I don't, we see now the 10-year at 4.10. I never thought, people were talking about the 10 years going down to 3.75, mortgage rates are going to go down. No, I really just thought that lowering that short rate was going to normalize the term structure, which means that, long rates are supposed to be above short rates. Now we have it found 4.10. We're going to get down to 3.88 on the Fed funds. Now that's narrower than usual. But I never thought that the really long rate is going to do it. Listen, it's basically earnings. Earnings are great. Guidance has been good. The AI story is still alive. But a lot of investors are going to say, okay, I'm not going to get 3.75%, 3.5% long rate. I've got to recalibrate that, and I think that is putting a lid on it. So I do see an increase, but I think a slower increase as a result of the caution of the Fed.
Mike Santoli was just with us talking about at 6,900, the S&P 500 was already pretty far ahead of where most Wall Street analysts were anticipating, most strategists were anticipating we'd be for the end of the year. How about you?
Yeah, well, it's even above what I am, and I'm pretty bullish on the stock market. It's that 7,000 looked like kind of a slam dunk. It's not a slam dunk anymore. It certainly, I think, can be there. And I don't think that, we have a market that is really vulnerable at this particular point to a big decline, unless we really do see, the tariffs sentiment beginning to impact consumer spending. And again, the good news is the Fed does have our backs there. They will lower. If things really fall off the cliff, they will probably even go down 50 basis points. I'm not predicting that, but it's always comforting the market to know that the Fed is looking at it and is not stubborn about whether they're going to lower rates or not.
Okay. Jeremy, if anything, what concerns you?
What concerns me is, again, I'm looking at what the consumer is doing. I like what's happening at trade front. I think that those fears are certainly being mitigated. I've always been worried cybersecurity. We talk about maybe doing nuclear testing again on the military front. I always thought that cybersecurity is as important as military security because our world relies so much on us being connected. And I always said the scariest thing is for America to wake up in the morning and not be able to connect to any of their accounts because of some sort of cyber attack. And we have to absolutely make sure that is secure.
That was a little more than I was hoping for.
I'm not predicting it. I'm just saying, we need to spend money on that. Security today is more than just military security with armored tanks and atomic weapons.
I was talking about concerns for the market. I didn't mean concerns for the entire existential existence. But we'll take it.
You know, the market, as far as the market's concerned, I mean, I think the market concerns are really, I mean, are twofold. One, huge layoffs that we see from AI that really send consumer confidence down, or people come away and saying, hey, you know, I bought this for Christmas and it was, you know, $45 and now it's $55. I'm going to slow down my spending. And we see those two reductions. Again,
those
I think
are the
if we...
run-of-the-mill things I was talking about. I
mean,
hear you.
those are the two things that I think, but as I say, the good news is that the Fed, I think, has our back there. They say, yeah, if I see that, we will absolutely lower rate on the December 10th meeting. So, you know, that's the comforting thing. The worst thing is when you have a stubborn Fed that says, oh, no, I believe, you know, inflation is what I look at. I'm not going to look at real spending.
Professor Siegel, thank you. Have a great day.
Thank you much.
Okay, when we come back, Senate Majority Leader John Thune is going to be with us as we head to a break. Take a look at crypto prices right now. Got some Bitcoin sitting just at about $108,000, $109,000. And as Becky mentioned earlier, the stock market taking a bit of a turn ahead of the open. Looks like the S&P 500 is going to be, well, it's getting, I was going to say the S&P now off about 24 points, Dow off about 180 points, NASDAQ off about 145 points. We'll come right back.
We are now in day 30 of the government shutdown, and joining us for the latest out of D.C. is Senate Majority Leader John Thune of South Dakota. Leader Thune, thank you for being here today. It's kind of hard to believe it's been 30 days already. Yesterday, you said that talks had picked up substantially. Who's talking?
Republicans and Democrats, and I think Democrats and Republicans among themselves and across party lines. I think there are a lot more conversations going on now, Becky, than perhaps there were a couple of weeks ago, but there should be. I mean, this is a just absolutely ridiculous position to be in. I've lived through several government shutdowns in my time here. Nobody wins. If there's anything about it, it's the stupidity of it. This is something we ought to be able to work out. Simply funding the government so that we can fund the rest of the government through the normal appropriations process. And it's the Democrats have tried to make it about everything else, and all we're simply doing is saying, let's pass a funding bill and keep the government open.
In those talks that are happening across aisle, I know you said yesterday that it didn't include Democratic leadership, but what's the path or the framework for anything that would get you to a point to be able to reopen the government in those talks that are taking place?
Right. Well, it's 5 more Democrats. We're at 55 right now in the Senate. Every time we bring that bill up to fund the government, we have 55 votes to open up, and it takes 60 in the Senate. It takes a supermajority, as everyone knows, and so we just need 5 more Democrats. And yeah, it'd be nice if it would run through their leadership. I think their leadership is in a box. You've got the New York mayoral election coming up. You've got all these left-wing groups that are, clamoring for attention and to fight with Trump. And I just think the Democrat leaders are scared and threatened by all this outside noise and afraid to open up the government. So if this happens, I think it happens through the rank and file Democrats who come to the conclusion that this isn't in anybody's best interest. And I think that's going to happen, Becky. It's always a matter of time. I mean, like I said, I've been through a few of these, and there isn't anything instructive about it. Nobody wins. This is just to me, it's a stupid exercise. It needs to end, and the sooner the better.
But you think that if it ends, it's only going to happen through rank and file Democrats? It's not a time after Election Day or some other time where the Democratic leadership gets together with you and you figure a way to do this?
I think there'll be
because that's pretty unusual, and that would
Yeah.
show a huge sign of weakness for Schumer if that were the case, if he loses his caucus and they vote around him.
I think it will make a difference after you get past Tuesday. You got those 2 off-year elections in New Jersey and Virginia. I think there's a lot of attention being paid to. We don't want to depress turnout by appearing like we, supposedly we caved or folded or something like that. I mean, I don't view it that way through that lens, unfortunately. I think this is about real people who are being hurt every day by this government shutdown. And federal workers who aren't getting paid, everybody from air traffic controllers to TSA agents to Border Patrol agents, you can go right down the list. And so that's really what this is about. But if it is about politics, hopefully after next week, maybe it gets a little bit easier. But I just don't see much evidence at the leadership level, and of course both the leaders are from New York, the House and the Senate, much evidence that they want to do anything but keep this thing going. And keeping this thing going means that just millions more Americans are going to get hurt. And there's going to be a lot of pain out there. But these consequences are becoming real now that we've been in this for 30 days.
Leader, how do you feel about, there's a number of proposals by some of your colleagues on both Republicans and Democrats to almost piecemeal certain parts of the government to stay open while the sort of larger, broader government remains shut down. And there's a question whether that, from a policy perspective, is a good idea or not, whether you effectively need the forcing mechanism, or if you actually were to approve some of these different proposals, ultimately whether we would never get the government to open again.
Yeah, and I think that, to me, that's my view, Andrew, that all that does is extend the shutdown. If you take away a little bit of the, pain here, and a little bit of the pain here, but still you've got, millions of federal employees who aren't being paid, and many of whom are furloughed, but yet people are working. I mean, people in this building today are working and aren't getting paid, and then, as I mentioned, all those who work in key areas of our economy. So I just think that you need to open it up, and the simplest way to do that is just to fund the entire government, not pick little winners and losers or do these sort of one-off bills. And I understand the rationale for that and why it seems politically feasible, but it doesn't make sense if the longer view is this government needs to be open on behalf of the American people. I mean, it's costing the economy. The things I know that you all pay attention to on a daily basis. This is not a good thing for our country, and the longer it continues, the worse it's going to get.
Leader Thune, while you're here, let's talk about some of the other issues that are happening in the world today, certainly impacting America. We did hear the takeaways from President Trump's meeting with President Xi of China, and it sounds like it's kind of a stand-down situation where we'll be getting rare earths minerals, we'll be selling more agricultural agricultural goods to China. Part of the trade-off may be that we ship them more semiconductor chips, not Blackwell necessarily, but maybe higher chips than had been approved to this point with the H20. You've been pretty hawkish when it comes to the export of semiconductors. How do you feel about that?
You know, it is. These have all these things, of course, with China. There's an economic issue here, but they all have national security implications, and so yeah, I'm obviously concerned about their role in the world and the things that they're doing in other places, and Russia and Taiwan, etc. I do think, however, when it comes to the economy, that our economies are sort of inextricably linked together. We're the two largest economies in the world. There's a symbiotic relationship that exists there. The good news, obviously, for a state like mine, coming out of the announcement yesterday, is that China's going to start buying soybeans again. The soybean market had been shut down. We had a big harvest this year, nowhere to go with it. So, you know, there's an economic relationship that I think we need to continue. Obviously, there's going to be a give and take in relationships like this. But I believe that the administration will do what's in the best interest not only of America's economic security, but our national security as well.
President Trump also announcing the resumption of nuclear testing starting immediately for the United States. Not entirely sure what that means, but it would be the first nuclear testing since back to 1992 when President George H.W. Bush put a ban on it. Is it warranted? Is it necessary?
I don't know the answer to that for sure. I'm anxious to hear the rationale and the explanation for what they're thinking there, Becky. I do think that right now the world is a very dangerous place. There are actors out there with nuclear capabilities, and obviously I think the president has employed a peace through strength approach to dealing with our adversaries around the world, and this perhaps is part of that. So I'm sure we'll all get an explanation for what the thinking is there. But you know, obviously, when you live in a dangerous world, you have to be prepared.
And Senator, you serve on both the Commerce and the Finance Committees, along with Agriculture. We are in a dearth of economic data right now because of the government shutdown. I'm guessing you probably have better information than the rest of us. How do you feel about how the economy's going right now?
I talk to, as you do, Becky, a lot of industry leaders. I know you had a number of them on this morning, and I just think that, you know, the overall mood out there is pretty strong. You look at what the market's doing, and you know, movement on interest rates, et cetera. I do think that, you know, fundamentally we've got some workforce issues that we have to deal with, but I think as a general rule, as long as we have the right policies in place that make it easier, not harder, and less expensive, not more expensive to invest in America, you'll continue to see companies make those investments. And I'm encouraged by what I see, but obviously, you know, we pay a lot of attention to the warning signs out there on the horizon, and there's a lot going on in the world today globally that I think, you know, we need to pay attention to. But if we're doing the right things here at home on the policy front, on the regulatory front, and with respect to energy, et cetera, and workforce, I think we can keep a really strong economy that creates those better paying jobs and lifts all the boats for every American.
Leader Thune, thank you for your time today. If you had to make a prediction, would you say the government will reopen next week?
I'm certainly hopeful, Becky. I think it's a possibility, but I have Scandinavian heritage, so I tend to see the glass as half empty. But I do think that I feel like we're, at least people are realizing what's at stake now, and I think that, you know, as the pain intensifies, I think we're trending at least in the right direction. So we'll see what happens.
Certainly hope that's the case. Leader Thune, thank you for joining us.
Thanks, Becky.
Up next, we've got the stories making headlines right here on Squawk Box this morning. And as we head to a break, check out shares of Starbucks. Earnings, 52 cents a share, missed the expectations of 56 cents, but revenue did beat expectations. CEO Brian Niccol will be on Squawk on the Street. That's coming up at 9 a.m. in a first on CNBC interview. We'll be right back.
Happening on Squawk Box this morning, a whole lot. Novo Nordisk sweetening its bid for Metsera, biotech specializing in the weight loss industry. Metsera previously agreed to be acquired by Pfizer. And a day after Nvidia surpassed the $5 trillion market cap level, JP Morgan reiterating its overweight call on that stock, citing strong AI server spending. Then several stocks related to rare earths are up big this morning. This after Trump and Xi met in South Korea. China agreed to pause a new export control on key metals exported to the United States. And we're also just watching the market, in the red, but we got some green there, the rare earths.
Oil giant Shell reporting earnings that beat the street's estimates, citing robust operational performance and better contributions from trading. Still, earnings were down nearly 10% from a year ago, and cash flow from operations also fell. The CEO saying that the company is making clear progress across its portfolio. Shell announcing another $3.5 billion in share buybacks over the next 3 months, marking its 16th straight quarter of at least $3 billion in buybacks. That stock right now up by 2 cents. Rival oil giant ExxonMobil is set to report tomorrow morning, and we have a first on CNBC interview with Exxon CEO Darren Woods. Don't miss that right here on Squawk Box.
Does it for us. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Thursday morning. Welcome to Squawk on the Street. I'm David Faber. That is Jim Cramer. We are live from Coastline at the New York Stock Exchange. Carl has the morning off. Let's give you a look at futures as we get ready to begin trading. 1/2 hour from now, we are looking for a lower open. Our roadmap does begin with the state of mega cap tech. Meta, Microsoft, Alphabet all have earnings moving in different directions. Meta certainly the outlier, I guess, in the sense of it is moving down.
Long odds out for this man.
All right, more on that. You just heard it from Jim in a minute.
Oh boy.
Also, President Trump cuts tariffs on China. He has an agreement, at least in principle, with Premier Xi on fentanyl and rare earths. Talk about that. Investors as well weighing what that news, coupled with Chair Powell's comments about rate cuts or the lack thereof at the next Fed meeting, is going to mean for the market. So plenty to digest. It is, by the way, the busiest day of earnings season. Starbucks CEO Brian Niccol will join us shortly. Lilly CEO David Ricks also will be a guest in this hour. Let's start, though, with some of the biggest companies the world has ever seen. I guess Meta, speaking of the world, 3.5 billion people every day
Meant nothing.
access something having to do with Meta, whether it's Facebook, Instagram, or WhatsApp, or wherever you want to go, Jim. And yet you are frustrated with the conference call and the earnings?
I thought that the revenues were terrific. The reaction to the conference call is that finally we're at that point where people are spending too much. And he's spending too much. People did not like Mark Zuckerberg's assurance that you have to spend.
All right.
There's
Wait, let's just stop there. Spending too much on the continued build out for AI.
Yes.
And that number, it's around 75 billion for 25, but I guess it's the words in the call where they said CapEx growth will be notably larger. CapEx dollar growth will be notably larger in 26. What do we take that to mean?
Okay, well, there's 2 ways to look at it. One is that at this point, he just says, I'm going to win no matter what, and I'm going to spend. This is the opposite of the year of efficiency. I'm just going to spend, which some people immediately said spend recklessly. I don't agree with that. I think the crucial moment on the conference call, which is completely being overlooked, is page 14, which is that he's got to go for very high quality, good video, which is going to be fantastic for advertisers. But you have to have the highest end NVIDIA to do that. Now, let's remember, before we just castigate this guy too much, Hock Tan's on his board, the CEO of Broadcom. You think he's just, he's got maybe, I think, the smartest, toughest investor in this particular element. And then he has himself, obviously, he's proven. But there's downgrades, there's price targets. It's almost as if people just said, we've been waiting for this guy to trip up and we're going after him. And then, of course, he has this charge, which was actually from the great, big, beautiful, whatever bill. David, I want to take the other side. And I'll tell you why I want to take the other side. I've not made a lot of money betting against this man when he does these kinds of things. And if we listen to Jensen Huang, Jensen's always saying, the CEO of NVIDIA, that if you buy ours, and this is something CoreWeave would verify, if you buy ours, they don't expire. They continue to be valuable. Also, I think that I would say Zuckerberg has created the cheapest power, and some of that's energy. They said, Jim, don't focus too much on energy. Our power grid is better than everybody else's. But they're saying, look, we will be able to use this power. You may not think that we need all this accelerated compute, which Jensen says is just as good as AI. We're going to do it. And he's not getting any latitude. So, David, let me ask you, is this the end of spend and get rewarded? Or do we just say you have to justify it much better, which is what Alphabet did?
Well, Meta is different than Alphabet or Microsoft in terms of its CapEx spend because it doesn't have a cloud offering. At the very least, when you see those enormous numbers from Microsoft or from Azure or from Google Cloud, CapEx overall for the companies, but you know that a lot of it's going in there, and there is a return already.
Yes, and Thomas Curry, and he doesn't get credit in the call, but he did Google Cloud, and Google Cloud is a monster. People are going to be talking about Google Cloud tonight compared to Amazon. Now, the shoes for Amazon are now big. I don't know. I mean, as much as the long knives are out for Mark, they may be out for Jassy, too. These people have all taken the kind of a share approach. It's Andy versus Mark. I mean, I don't know how that happened. Even Philippe is being given a lot of latitude. He's on the conference call for Alphabet, which was a tour de force conference call.
It was, yeah. I mean, in Microsoft, I mean, the numbers, again, and I want to circle back to Meta. We're trying to fit everything in here before we get to Brian.
That's what I was trying to do, but they told me like this, Jim, come on.
Like Coldplay. Yeah, Alphabet, I mean, more deals over $1 billion through Q3 this year than the previous 2 years combined. Cloud backlog up 46% quarter to quarter. 13 product lines now with over $1 billion run rate. Generative AI products up 200% year over year. And then Microsoft, as you said, I mean, these numbers, cloud revenue up 26% year over year. So we will see where we get from Amazon. We will see whether there's any pressure or whether they re-accelerate growth at Amazon Web Services, which is the hope of those certainly at this point who've been buying that stock, which has been the underperformer from the Mag 7 for sure.
I know.
And then let me come back to Meta, because you make an interesting point. It feels like we've seen this a number of times, Jim, where the stock gets hit because people are worried about their spending, and then invariably you get head faked, and the stock's a lot higher.
Look, I think you go down 100 because it's almost like if you think you're going to sell it at 75, you're doing it because you think it's going to be down 100 today.
Right.
Now, this was not a down 100 call. This was actually a fine call where he's saying maybe you don't understand the value of an old NVIDIA. Maybe you don't. Again, Michael Entrader, whom I backed him from CoreWave.
Yes.
He's on the same page.
Yes.
He's on the exact same page as Zuckerberg, which is saying, look, I need the compute, and if I don't need the compute, I'll still find out a way to make money. That was viewed as very cavalier.
I mean, the other important takeaway here is they are not just not backing away at all from CapEx. They are just, the numbers just keep becoming more staggering, if I can put those two words together.
Microsoft is being leaving out here, which I thought was an excellent call.
Yes.
They were constrained. They didn't have enough compute.
Right.
Alphabet had the right amount of compute. So what does Zuckerberg say? He says, look, God, I don't really care about what Wall Street says. I'm going to get us the right amount of compute. People don't like when someone says, I don't care what Wall Street says, which is the sub-rose in nature.
No, Microsoft said, we expect to remain capacity constrained through at least the end of the fiscal year. Demand signals across bookings.
Right.
And RPO, which is basically backlog product usage, accelerating faster than we expected.
Right.
That is the quote from Microsoft.
I know, so
and again,
it's any different for, well,
and then the numbers, as I like to point out to our viewers, obviously we talk about the market cap numbers all the time for these companies, but the sales numbers, the cash flow numbers, they're
amazing. And you want one other?
Yeah.
This guy, Philip Schindler, greatest head of hair in history.
Okay.
The chief revenue officer.
All right.
Now
You gotta get to Brian Nichols.
I have to go because there's someone in my ear whom I really love and respect. She's telling me I gotta go.
Yeah, you gotta go.
Shares of Starbucks, they're getting hit. Even as the company reports its first same-store sales growth in nearly 2 years, signs of progress in its turnaround efforts. I am so glad that we are being joined on CBC by Starbucks Chair and CEO Brian Nichols. Hey, Brian, great to have you. Maybe you'll put some sense into us about suddenly why a stock is down of when I think that you believe the turnaround is in hand.
Yeah, good morning, guys. Yeah, look, Jim, I think we had a great quarter, and it was actually a critical moment in our turnaround program. And the thing that we're most excited about is really in August when we launched our Green Apron service program. we saw a change in the performance in our stores in a really meaningful way that got noticed by our customers, and then ultimately showed up in our September performance with positive transactions, with positive comp in the U.S. That continued into October, where we continue to have positive transactions, and we continue to see our partners really executing the Green Apron model with excellence. And this is just a little fun fact I even got this morning. We had the highest number of customer compliments in the last 5 years in the fourth quarter, and customer complaints since we launched Green Apron service are down 10% year over year. So you combine what the customer's feeling, experiencing, and then I think you're seeing them show up with our transactions being positive really since September, and we've continued to see that happen. So critical moment for our company. We're really proud of where we are, and I'm really excited about where we're going. We got a clear line of sight on this thing.
Okay, clear line of sight to me, that would sense that you're going into a critical season for Starbucks, and it sounds like you've got momentum. How is the cadence?
Yeah, that's exactly right. You know, the holiday season for us is a big moment, and I got to tell you, this is the first real program where we've got everything coming together. We've got the Green Apron service standards in place. Our partners are staffed, they're trained, they know what they need to be doing to give people great connection, great craft, and then you layer in, we're gonna have terrific marketing around the advertising, the eggnog is coming back, the eggnog latte, and then you layer in great merchandise, and just the whole vibe of the holidays. Nobody does it better than Starbucks, and you might even heard me yesterday, I think we're gonna make this an iconic holiday season for us.
Oh, absolutely, and I do want to talk about the zeitgeist. There are people, our friend Kevin Hochman at Brinker, who was talking about some pressures. Chipotle was a very hard call last night, and Scott Woodward talked about, and the CFO talked about the challenge of the 25 to 35, which worries me. But you did not seem similarly challenged. You did not talk about the fact that your price is wrong and people are rebelling, and there's some problem with Gen Z. I don't hear that in your call.
You know, look, what we're seeing in our business is our value scores are going up with every age group. We also track an important measure. Is the Starbucks experience worth it? And the thing that's really important there is experience. We go well beyond just what is the price of coffee, because our coffee, our espresso, is world-class. And then when we pair it up with a world-class experience, that's when people say the value proposition's great. And they actually are telling us right now, it's a brand that's worth it. So if I'm going to choose to spend my dollar at Starbucks, the good news is we're seeing every age cohort tell us, you guys have made tremendous progress. And really, I got to compliment our partners in our stores, because they're the ones that are delivering the experience. They're delivering the craft. We've set them up with the right process, the right staffing. And I think we're just seeing a direct result of that with then transaction growth, both in the morning day part and as we move throughout the day. And I couldn't be more proud of what the team is doing in every single store.
You know that I have felt that China has gotten so much better, and we've got some better relations with China, that perhaps it's not worth selling even a stake in it. I know you disagree with that, and you seem to be able to come up with a plan, particularly for the tier 3 and 4 cities, that would indicate that you would have numbers better if you did some sort of sale in China.
Yeah, Jim, I mean, look, I'm really excited about what the China team has done. You know, you saw we had our second consecutive quarter of comp growth. Actually, our international business had a terrific quarter around the world. But specifically on China, one of the things I'm excited about as I've gone through this process of really talking to some terrific partners is everybody agrees the China story is going to go from 8,000 stores to 15,000, 20,000 stores. And one of those key pieces of the puzzle is getting our development going in the tier 3, 4, and 5 cities. And that's where I think us choosing the right partner to help us do that successfully and quickly is going to be a big unlock for this business. And we've got a great management team there. And I think when we combine them up with a local partner, I think we're going to see really terrific results out of the China business, not just now, but for the long term.
Hey, Brian, this will be the only follow-up I have then. It's David. I mean, you know, there was some reporting earlier in the week that indicated a $4 billion value. I know there was pushback on that. Can you give us any sense in terms of what your expectations are in terms of pursuing that partnership and where it may end up on valuation?
Yeah, sure. So, you know, the way we keep looking at it is there's the valuation of, you know, the enterprise right now, and then there's also the value in this ongoing revenue stream as it relates to the royalty that we'll get out of this. And when you kind of put those two things together and keep the stake that we have in place, we see this thing well beyond $10 billion of value for us going forward. So, the bids that we've seen, the way people are evaluating not just what the business is today, but what it can be in the future, gives me great optimism. And that's why I'm confident we've got a lot of the right partners that came to the table. And as we kind of finalize this here in the coming months, I think we're going to end up with a world-class partner.
Yeah, so upcoming months. So you think this will be done, what, by year end, perhaps?
Look, you never know on the timing of these things, but we're doing, I think, the right things, and we'll see where we ultimately get this closed out. But I'd love to get it done sooner rather than later because I think it will just unlock tremendous growth for our business.
So, Brian, last night I went over the April 2019 conference call that you led at Chipotle, approximately 1 year after you got there. They read very similar in terms of the turn and the importance. Would I be remiss if I said that the turn in Starbucks is on plan, like the turn was in Chipotle? And if anyone looks at where Chipotle went to after you said it was ready, it was one of the greatest turns ever. Do you think that this could happen there?
Look, I definitely believe we are ahead of schedule.
Oh, they're talking to the nerd.
I definitely believe this Starbucks business has tremendous opportunity in front of it. I'm very optimistic about
I'm not.
what the coming months will demonstrate around the strength of our turnaround. And then I'm very optimistic about where this goes over the next couple of years.
I'm not.
We're fixing foundational things, right? The Green Apron Service Standard is a foundational element around
Green Apron Service Standard.
Specifically on great craft.
No more Black
great
Lives
connection.
Matter t-shirts?
And as we continue to do these uplifts where we'll make the actual store environment feel like a great coffee house again, I think there's a lot of power in that. And then when you layer in what I know is great innovation around menu, and marketing, and digital, rewards.
Look at this guy.
You just start going,
Well, look, I gotta let you go. But
Look at that guy.
I feel like it's scale and staffing, two things that are just so what you do best, are so blocking and tackling, and all those other things.
Your
come
coffee
together.
sucks.
That Brian Nichols, the CEO of Starbucks, is not going to go up today. There's a lot of negativity about restaurants, but how about the next 2 years? I kind of care about that. Thank you, Brian.
Well, now they're 2 years out.
You continue to be a believer.
Biggest man, because I gathered him at Chipotle.
Yeah.
And, that was
fair enough. By the way, I want to get to Chipotle a little later because they had some comments about the consumer, the new CEO there, that were not particularly constructive.
What this man said.
And that's not.
I've been around a lot of CEOs. I don't like this one. I don't like the company. There's a lot of things that but the fat cats, look here. BTIG reiterates a buy on Starbucks to 105. Starbucks shares are trading lower following the fourth quarter earnings miss. Goldman Sachs adjusts the price target up $2, 97 to 95, maintains overweight. Cohen maintains target of $84. Citigroup lowers it $1. Guttingham adjusts price targets 88 from 90. HSBC lowers the price 85 to 90. Washboardjim says it's not worth $50. They still haven't. All they got to do, if I was a CEO of Starbucks and I'd stand up and debate this guy, I'd say all we got to do is say we are no longer woke. We will no longer speak of politics. Because this was the worst of all of them. And I guarantee it, you bring 50% of the people like me back to the store. And I still can't see paying $6-7 for a cup of coffee. Not when I'm paying 30 cents for freshly grounded beans. I mean, this last batch of coffee I got, I spent $3.38 on this real small bag, and I went to see how many cups of coffee I got out of it, and I got 10. So that's an average of 30 some cents per cup. And then the added creamer would be about 50 cents a cup. If I got the same coffee at Starbucks, I would have spent $7, $8 for a freaking cup of coffee. And it not be as fresh or not be as good. Freshly grounded beans makes it, I mean, it only takes like 10 days before your ground beans to go stale on you. And I grind it up to where I get about, 5 cups of coffee, maybe a little bit more, 7. Then I grind me another batch, just a cup, 3/4 of a cup of beans. And they'll pump the heck out of this stock because these fat cats are so heavily invested in this company, and they have a different. It's like that article I read yesterday that the short sellers blame retail traders for them having some of the poorest years in the last 4 years because their shorts aren't coming in like they want them to. You know, they used to be able to short a stock, get the word out, and they'd all climb on it, and you'd have just a handful of people making millions of dollars just on one trade, and then they'd pump the heck out of it. And that's not working no more. That's just my opinion. My opinion. Let's repeat. That's just my opinion. For I am Washboardjim, the founder and developer of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Anybody disagree with me? Randy? Meta? Randy agrees. When's the last time you had a Starbucks coffee, Randy? Or have you ever? Piper Sandler maintains overweight on Starbucks, lowers price to $100. Never. I refuse. I remember when I walked in one and had all them Black Lives Matter shirts on, and I said, I'm fucking done with this place. Well, okay, there's my rant of the day. I support the black people. I support the Asian people. I support the Chinese people. I support Arabs even, Muslims, Jews, Russians. China. There's nothing better than dating an Asian woman. Except the last one that I dated. They called me narcissistic. And got mad because I wouldn't give her enough money. See, I mean, you don't go out on the first date with a chick and she's, can I borrow a couple $100? I said, baby, if you'd have played your cards right, I'd have bought you a car. I'd have paid all your bills off. I was walking into IRS today and they had some mud. They tracked some mud back in on the back wall. So I went and got the mop bucket and filled it up with my soap and water and got to mopping. And all of a sudden I heard the hacker going off. This chick down there, I mean, she just started hacking. She was freaking dying. I said, God, not again. I've never met anybody in my life that was so lethargic to the smell of anything. Even if I farted, she'd probably enjoy it. I had to, I told her the other day, I said, you saved me about $100 in cologne a month. I don't even buy deodorant and shampoo anymore. And I use women's deodorant under my arms so it don't smell. Oh God, here we go. Hello, ma'am. Well, that's all right. I'm sorry. I didn't mean to bother you, but I just wanted to tell you a story. I'll tell you later on tonight. We only got 5 minutes till the market opens. Jimmy loves you. Bye. Okay. Well, I've seen the SPY was down at support level. It read it open. Oh, yeah. We got a snake into a symmetrical flag. We could have us a little breakout right at open or a double bottom approach to 683.30. That was my solid support before it starts to get nasty. This here pink box, 683.30. Oh, God. It started hacking on me. I go, shit. Come on, girl. It's not that bad. It's just a smell. I don't think I've ever met anybody like it. I don't know if have you ever met anybody that was so sensitive to smell? I mean, I met another chick that was like it, but she's not as bad as this one. This one goes into a frickin' hacks. Like she's dying. There's the bounce already on the video. They're starting to reverse already. I'm going to jump into SPY. I'm seeing some oh, here we go for the double bottom. Hello? Jim, are you going to buy the SPY to open? Yes. I'm looking at calls. Okay, I'm with you. Now they're reiterating bubble. AI bubble. At Sorgan, well, everybody we bring on here says we're in an AI bubble. Today's the 30th. Tomorrow's Friday. So the 6th, we'll see where these prices are on these and how many options. One that has the biggest volume is the one I'm going to jump in. We got a double bottom here. And I mean, it's perfect timing. Now, yesterday I got into trading. This thing stalled out on me for about 10 minutes and about screwed me up. But I was able to add on, and I mean, it was down quite a bit. Almost, Jim, you're down about 95%. Have you ever thought about selling? No, I can't. Oh, the bell's going to ring, and I'm not even going to know it. It'll be 2 days in a row. Okay. Woo! Ain't that loud? So the 686s or 685s. Oh, what am I doing? Shit. $686s.
Fortune celebrating the winners of this year's Cyber 60 list, leading cybersecurity startups over the NASDAQ. Solstice Advanced Materials, that's a specialty materials company, spun off from Honeywell.
Yeah, it should be a higher multiple than the rest of the chemical group because it has a bunch of durable streams, including, by the way, uranium.
At $1.
Uranium, right. Obviously, if you
Feels like there could be some risk.
I don't want to spend too much time on Honeywell. A lot of spin to come.
Right.
And the real split off of that company, and you have said maybe the value won't come until the market is truly aware of it, a la the GE split off. Oh my God, where do you want to start this morning, Jim? I'll leave it to you.
Well, we're going to start with the SPY, the 686 strikes,
Is it really wrong
at
to
$1.
go back to Meta, which is
No, of course it's not wrong. Meta is down 11%, Alphabet is up 4%, and Microsoft is down 2%.
Yes,
so
6%,
there's
not
the
great.
quick running on. I mean, you're talking about many trillions in market cap right there.
Right.
There it is.
This is the beginning of people saying, you know what, if you spend, we will punish you. Now,
You really believe that? Or is it like
No,
one
that's the
time in
narrative.
nature?
No, that's the narrative, okay? Now, I will come back the other way and say, you know what, just because a guy doesn't play with an open hand about what he's going to do, remember, he's got video is advertising, he has an advertising model, stay focused on that. But what's going up the most, let's just go there for a second, Cardinal Health. Because this is a company that was really just a plain vanilla middleman that is now value added. Wow. I like that because
I did not have that on my scorecard that you mentioned Cardinal Health.
Jason Holler said over and over again on Man Money, Jim, we are not like the other guys. Boom, he's not. Congratulations, Jason Holler.
All right, can we come back to the mega cap tech names?
Whenever you want, Mark.
Because I do feel like they're of great importance. Amazon is down 2.7%.
Yeah, because
Amazon, by the way, has not reported earnings. It will. We are getting a sense, though, as to how the cloud business is doing for both Azure, that's Microsoft's cloud business, and Google Cloud, both of which had, and I'll tell you the numbers in just a second, but significant. Microsoft Cloud revenue was $49 billion
Right, I think Amazon
for the quarter, up 26%.
This might be Jesse's night to shine in terms of how much he's spending. Although you've got to remember that beautiful Microsoft conference call when it came to Azure, taking share, that's what they said. The share would be taken not from Google because their numbers are greater, it would be taken from Amazon Web Services, which Andy Jassy ran. Now, David.
Microsoft, by the way, Jim, plans to increase its total AI capacity by greater than 80% this year and double its data center footprint over the next 2 years.
We'll have to go over what Amy Hood said with the fine-tooth comb. She just talked to the CFO, really talked about the need to address the constraints and how much they need to spend. By the way, all of their actual enterprise software, the traditional software, was extraordinary. Copilot was fantastic. We overlook those at our own.
We do. They're saying rapid adoption and usage of Copilot. 900 million monthly active AI users, they say, across products. And I'm seeing here, 150 million plus active Copilot users is what at least they have shared.
Just because of the OpenAI deal, now it's given back the OpenAI points.
Yeah.
OpenAI kept as a sub-rose at text of that whole conference call because of how much they are giving them, what's OpenAI going to look like. And then there's these fatuous rumors that OpenAI is going to be $1 trillion company when even the company itself is saying, Jim, don't go north of 500, please.
Right, OpenAI right now, a private company that has recapitalized.
We're at 108, 110.
Continue to point out there are those who are challenging that and may end up in court next March to do so. Another story, but you know, maybe at some point OpenAI will come public. It maybe will even be in 2026. I have no idea what the valuation.
Come on, baby, brick.
OpenAI's revenues are increasing at a rapid rate. So are its costs.
You know who I am.
So are its costs. Some
I'm
of which
Washboard
are
Jim.
Obviously, yeah, a lot of which is going towards the likes of Oracle, which is then going to NVIDIA, and I mean, you on and on from there in terms of what they need to do to get as much compute as they can.
Absolutely, but as I look at Meta, which I said would be down $100, as I look at them, they're doing a $25 billion bond offering. Okay, that feels like Oracle, but they don't have a web service, as you point out. I think that when you look at what's
Bind 177.
So this is my view. They would not confirm this. Okay.
BMNR.
AI, you want to go into every vertical? Try to come into the shows from vertical. Just try it. We will crush you.
Yeah, there are a lot of pullbacks today.
As he plays offense on video, and people have to recognize what he's saying is, we own this.
Apple's at the 200 on the 10-minute.
OpenAI, I'll go play and
change that to the 5.
which would go up against Amazon, but don't you come in against us, because I will crush you. That's Zuckerberg. Will you confirm that analysis?
No, I understand. And by the way, I mean, over $50 billion in quarterly revenues. The numbers, again.
5 minutes, it's at support.
Having done this for so long, I just find it Alphabet as well. $100 billion quarter.
I am defending Zuckerberg tonight. I'm defending him today and defending him tonight.
All right, that's fine.
And I am out there all by myself.
No, you're not out there by yourself.
NVIDIA's at 202.
I am alone.
You're not alone. I know you love this idea, but you're not. You're not.
All right, but anyway, I think that it's worth every penny, and the stuff doesn't go bad. People are acting like it's milk. It's like homogenized milk. Well, if you buy it, it's going to spoil.
What
are they, fools?
I want to change it up now.
They are obtuse like the warden of sorts.
I want to change it up now and get back to the both the economy. Obviously, we're coming off a 25 basis point cut by the Fed. Questions about employment and the consumer.
Saying to the president, you know,
we don't know. We're going to do what we want. But that gets me to Chipotle and the consumer.
It was a tough
take a listen to
don't.
Yes.
Oh, come on, man.
Take a listen to some sound from the CEO of Chipotle. I'm not hurting you. I'm playing sound from a conference call.
Right, go ahead.
What we're faced with today, we talk a lot about this, is while we have opportunities, we believe that the consumer slowdown is really affecting our business in a meaningful way. But we would never let a good crisis go to waste.
Never let a good crisis go to waste.
Significant. Went on to say, you've seen a sizable step down in the consumer that's under $100,000 in annual income.
God.
Specific to it is the group.
This is cheap.
34-year-olds may over-index to that group.
Oh my gosh, I like this is too cheap.
And we believe that consumers are now eating at home more often, not necessarily eating with our competitors. And so it's not about share gain from somewhere else. It's simply about people eating at home more, Jim. Perhaps an important reflection of the economy, or
I'm not sure.
I don't know.
I'm not sure because Kevin Hoffman from Brinker's Big Chili's did not say that. I didn't get that verbiage from any of the restaurant companies, and it's a challenge company. The comps that decline in low single digits. This is Chipotle. This is Chipotle, and it has, I will say it, lost its way.
Well, the stock reflects that now, down some 46%.
The narrative of Chipotle is that it's great no matter what. That was the narrative of Starbucks before two different CEOs.
Sophie's down under 30.
They sabotaged the darn thing.
What's that other one? Sophie and
Okay, bad. And I like the company.
All right, let's move on to another earnings movement.
Carvana.
Of course, is Eli Lilly, and you have the CEO for us, Jim.
Yeah, okay, so this is really important because I've followed Dave Ricks for a long time, and shares of Eli Lilly are on the move. The company blew past estimates for the third quarter and hike guidance, which is very different from almost every other drug.
On the move down.
And that a lot of is because of the weight loss. If the market weren't so bad, the stock would probably be up 40 or 50. Joining us now exclusively on the phone, I'm sorry, I would love to be, but on the phone's good. Is Eli Lilly Chairman and CEO Dave Ricks. Dave, when I saw you at the JP Morgan conference, there were a lot of people who were kind of bummed that you were not able to raise guidance because they thought
We're at the bottom support. This channel has to hold right here.
Hey Jim, good morning, and good to be with you today. Yeah, well, as you said, we had a super strong quarter in Q3. The real star, of course, is tirzepatide, Mounjaro, Zepbound. In the U.S., both gained share in a fast-growing market leadership in the U.S. in both diabetes and obesity, and then really probably the upside here.
0.78.
Was driven by really strong international performance.
We got 15 contracts.
Early this year, Mounjaro in places like China, Brazil, India, and what we're seeing is a global demand.
I should have sold that at a 110.
We're just a few years into this, but tirzepatide really a strong performer. And the balance of the portfolio did really well as well. So very strong operational quarter. Proud of the team there, and a number of good pipeline readouts too, with the oral pill or orforglipron completing its phase 3 program, and we'll submit here in Q4. And another cancer medication got approved, our oral SERD, imlunestrant. So exciting progress in Q3, and beat and raise, and go do it again in Q4, and get to 26. We're excited about the trajectory of the company.
No, Dave, you had a very
Well, if this doesn't hold, I gotta get out of this thing.
speech that you gave in Chicago at the Economics Club, where you used the term billions, as in billions of doses of the pill. You and I have talked over and over again, the persistence of using a needle, the injection, is not great. Will the pill...
Let's see what Peppolini's wearing today. It's very important that she wears something that shows cleavage today. Google's down some after earnings. So I got 85-cent average. Oh gosh, I mean, I don't like coming in here feeling real miserable because that stupid chick coughing her ass up. I'm green now. Good morning, Bobby. Good morning, Loki. Good morning, YouTube. $0.93. I think I might just get out of these, let this thing settle a little bit, but Well, a little late. We're at 95 cents. Yay. Now, if we'd, I don't know. We're just now getting up to that second linear channel. I'm going to get out. I think it's best. From Washboardjim, the founder of the Sneaky Snake Trade Strategy, where I talk about chart patterns, moving averages, and being in the now. I have a few left here. I want to make that perfectly clear. All out. Yeah. All out. Damn, 131. Unbelievable, that's what we are. This thing can run up to 68, 98.97. You got a little resistance right here. Yeah, we just hit it. God, 164, shit. Anybody see that coming? I felt real bullish this morning. That's for sure. I love setups like this, especially when they fall back in my channel and held support. That's what you are. Good job, Rob. Livid Goose, did you get into that? Very nice start of the day. Whoa. For I'm Washboardjim, I talk about chart patterns, moving averages, and being in the now. Good job. Okay, well, even Starbucks bounced. I guarantee you there's a lot. This is, you know, when you get a stock like this, it dips like this. Starbucks, the only reason that I'm going to say that it's worth trading is because all the fat cats love this company. That's not because it's doing well. It's because they think it's rebounding, and it's going to take 2 years. And eventually, every stock turns around. 2 years is not really a good call out. And who knows, you know, in 2 years they might find out that coffee causes cancer. Just like butter does, or they say milk does, or anything that we like. But 132 million cups of coffee is drunk in America every single day. And I've already had 2. And I'm just one of millions that drink it. I think the average person probably drinks at least 2 a day. That's a good question to ask. How many cups? The average coffee drinker consumes 3 cups of coffee per day. It's the most wonderful scalp of the day. SPX has hit the 200 EMA. Oh, damn, not on the daily, on the minute. It's the most wonderful time of the day. Okay, we're at the 63. It's the beautiful time of the year. We're all curious, how does he do it? for his name is Washboardjim. He's a technical trader. And you get a time, Gork me. Gork Washboardjim, the sneaky snake trading strategy. I gotta go pee. I gotta figure out, man. Damn girl, man. She's just so sensitive on smell. I've never met anybody like it. And it really drives me nuts. Because I can't do my job. I gave her a box of chocolates the other morning. I regret doing it. I said, fuck, what can I do? Nothing works. I love the smell. I love good, clean smell. Fresh. Hot. She started in this morning. Oh, God. Okay, well, I'm about ready to go and hit the restroom and make me a cup of coffee. I'll be right back. So far, not a bad day.
Really trying to push down the shale production here in the United States, recapture a little bit of that. Saudi Arabia trying to increase market share a little bit, leveraging some of the excess capacity that they do have. And then last but not least, keep your eye out on South America. Venezuela, there's a reason why we have the military moves there. I'm not going to kind of opine on that too much, but we do know that they have a vast amount of oil resources, and Saudi Arabia and the Middle East itself probably does not want to see South America really expand their foothold on OPEC Plus as well. So there's a lot of different dynamics on the geopolitical front, which is kind of putting a little bit of a lid on the oil patch just in general. And then we have probably lackluster just demand here in the United States, and that's reflected in gasoline prices. So a lot going on in the oil patch right now.
It certainly is. A lot of moving parts. Thank you so much for helping us get across it and helping us look at the fine print this morning, KG. Always appreciate it. I'll speak to you a bit later on. Coming up, we will dive into Jerome Powell's comments yesterday and break down what may be next for the Fed as the government shutdown continues. Morning Trade Live is back after this.
Oh boy.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. We're back on Morning Trade Live. Chipotle is selling off this morning after comp sales rose just 0.3% in the third quarter amid a decline in customer traffic. The company is projecting low single-digit declines in comp sales for the full year. Shares are now down more than 45% in 2025. Let's take a look at the winners and the losers on the session. Chipotle down 16% right now. We do have a few names that are higher this morning to the tune of 19, 17%, so in strong double digits there for
What the
Cardinal
fuck?
Health.
Come on.
C.H. Robinson, Align Technology up at 9%, and Huntington Ingalls are also up at 7.5% in trade today. Let's take a look at the losers board, the laggards on the session. And obviously it's been a very big sort of earnings-driven week for a lot of these movements that we've seen. Chipotle, as I mentioned, down 16%, so getting punished off the back of some of those comp sales and some of the forecasting as it's grappling with the cost-conscious, value-hungry consumer right now. We've also got Cigna lower by 15.5% in trade today. FMC Corp down 45%, getting absolutely punished in trade this morning. All right, moving on. Joining us now is Eric Didden, who is President and Managing Director of Wealth Alliance. Thank you so much for your time this morning, Eric. Look, we've had some time to digest what we got yesterday from the Fed. So the markets got what they wanted with a 25 bips cut, but the thing that they sort of struggled to come around to was the fact that he was basically not giving any kind of commitment to what's going to happen in December. In fact, no strong case for cutting come the next meeting. What did you make of that and the market's reaction?
Yeah, thanks for having me this morning. And yeah, a little disappointing. Far from a foregone conclusion was the words that Powell used, and definitely disappointment in the market there. Now, he's consistently said that he's
What do
going
I
to
think
be
of it?
down and dependent. Just one problem: he doesn't have the data.
I'll tell you what I think of it.
So they're shooting in the dark a little bit.
Give me 1 second.
And obviously, the stock market has been very
Gavin Newsom
strong.
sucks.
There's tremendous capex, right? Look at the Mag 7, over $500 billion of capex this year. So there's a lot of stimulus happening outside of the Fed.
This is what I think of Chipotle. If she eats at Chipotle once a week, I want nothing to do with her. And that's Jenny Horny. I think it's cheap. I mean, it's real cheap. If I was to go long in it, this is what I say, what I think. If it breaks the double top, triple top, I'd see if it come up and broke 33.41 first. And then if it broke it, I'd see if it pulled back and jump in the trade. That or I'd go in small if it broke the triple top. And then if it pulled back, I'd add on more. Oh God, look at there. What just happened there? Somebody. What just happened there? Did you see that? I'm a market maker. I'm definitely a market maker. I didn't say pull back now. I said wait. Dang. I don't know what happened there, man. That's funny. Yeah, I'd have to wait for it to break 33.41. I'd say it's cheap if you're a long-term investor. I'd wait for it to break 33.41, then run it up to 38. Do you see a dip like that right in front of me? I'm gonna look at options out about by Christmas. December 19th. I'd go December 19th, a $35 strike. If I was to trade this one. Get 5 contracts. NVIDIA double bottom. Boop, boop, doop. SPX is pulled back to support. Prepare ye. I just missed it by a candle. I'm gonna go get my coffee going and I'll be right back. I'm ready to take another one. Boom a chicka, boom chick chick. Boom a chicka, boom chick chick. No, let me see here. From Washboardjim, I trade the sneaky snake trading strategy. Your color will be changed here for trading purposes. Boom, 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 boom. I'm having anxiety over that chick this morning. She was really hacking away, just on a smell of mop soap. I mean, it looked like she was near death. Ugh. I said, I don't want to start having nightmares of this chick. Double top. IWM double top. So you see the 63 how we held. Now we're coming to a double top. Kava. Let's look at that hour. Oh shit. Come on. Had a little bounce there to double top on SPY and on the SPX from that bottom support that I called. Anybody take that one? Of the world. It's an inverse head and shoulders. She went to hacking this morning. I just don't know what to do. Inverse head and shoulders. Oh yeah. Yeah. I love a good smelling house. I love a good smelling woman. I wonder what kind of perfume Nicole wears. If it would pass my sniff test. I have to say that's pretty. Jenny smells good or not. If she eats at Chipotle, she doesn't. Woo! From Washboardjim, I'm the sneaky snake trading strategy. How many times can I say that today? That's a good question. Does anybody see the 3 white soldiers in The Spy? Somebody sees it on the 5-minute. As for now, I'm going to go into the kitchen. Oh, my coffee's been sitting up there fermenting for at least a half hour. Oh, this is going to be good. Good and strong. So Jim thinks if we see 54.75 on Kava, we could have found support for a swing trade. Now Kava, I'm a little surprised on this pullback. Earnings are going to be coming out soon. Did we already hit it? What's going on here? Oh, we already hit it. I mean, it takes a whole different... Oh, boy. Has anybody read today? Magnificent, are you read today? You're fed? You're red. How in the heck did that happen? What trade are you in? The SPX. I wouldn't say you're stupid. Maybe on the borderline being stupid. Just joking there. We want to hold 68, 56, 63 today. And right now you're at a pretty good spot right now for it to start to reverse. But if we see 68, 56, 63, I think you'll be in a better spot. But I like it here. This is looks to me like a little head and shoulders. It's the most wonderful time of the year. Sherry, I told her today, I said, I'm just going to use clear water on your floor from now on. Definitely 68, 56, 63 is solid support. I got two reasons why. Double bottom and an inverse head and shoulders. If it dipped down there, I wouldn't be too scared unless it dipped below it. Washboardjim. I have a feeling you didn't mislead that. Am I in a trade? No. I'm thinking about lunch right now and then be in a trade. Is my stream working? It should be. No, it's, yeah, it is. Is it? Stream paused. How come? Why did it pause? It's working now. I don't know why it paused. Huh. Maybe it's something I touched. So I wrote on my all my friends on Facebook, 99% of them are liberals. I wrote them today and I said, with Antifa and all the assassination attempts and what else did I write? Mass shootings, I have come to believe that the Democratic Party is more like the Manson family. I don't think I'm allowed to play in any of their music bands anymore. They probably cut me out. We can't have you. You don't believe in Antifa. That double bottom held there. That right shoulder line held. SPX. I'm going to get ready to eat lunch. That would have been a good little trade. CMG has to break 33.41 before I jump in it. And I called out in the video this morning, double bottom. It has to break the 200 if you didn't take the double bottom down here. YouTube, this is what I'm having for lunch today. Homemade sloppy joes, a hamburger, and about 4 or 5 tablespoons of cottage cheese. Apple's reversing out of a snake. Meta, double bottom. Meta, double bottom. Oh, my coffee. God, that's some good stuff. Mm. Oh. IWM has a triple top. IWM has a triple top. Cleavage. I swear she's trying to take Nicole's job. Now what the heck is that? Cumulative sector ETF flow. What's this guy trying to say?
As well, so I would put the sentiment backdrop on the front burner for the first quarter of next year.
Okay, so if we're putting the sentiment burner, putting the sentiment on, keeping a close eye on it here, you mentioned maybe buying puts as a strategy or in healthcare. What are some other ways that investors can protect themselves from getting caught up in this?
So I would take a look at an ETF. The ticker is CAOS, Chaos, by the folks at Architect. And what that fund does is it has a box spread that generate income from options. And then it also has built-in puts. So that way, when there is a market shock, those puts go in the money and the NAV of the fund jumps up. It's a good way to protect yourself without having the tail risk that eventually bleeds out over time, right? Most volatility type funds have the problem that they have continuously roll contracts and are losing
That's
the
interesting.
assets of the fund. Whereas this one, you have this built-in income, and then when there's a spike in volatility, those puts come into play. We think that's a really good solution to help investor portfolios, especially whenever there's a prolonged decline.
Well, Todd, we appreciate you taking the time to be here to talk broad and also ETF trends as well. That's Todd Sohn from Strategic Securities. Thanks again. And plenty more to come.
She's
here
trying
on
to take her
Trading
job.
360 for us. Next, of course, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will be here to take us through the technicals. And
Does anybody have any connections with Schwab? I'd like to get a message to Nicole saying that Marley's showing cleavage. We have an expansion pattern on the SPY. We have an expansion pattern on the SPX. We have a triple top on the IWM. And I have a belch coming out of Washboardjim. And a triple top on the QQQ. Actually a quad. CMG's trying to break resistance. CMG's trying to break resistance. God, Oracle down again. Fuck. That's a hard sell-off. U.S. to end the 540-day automatic immigrant work permit extension. What? Is it legal immigrants or illegal immigrants? If they did that for the illegal immigrants, I think they're crazy. H-18 visa holders are given card applications. It happened. It's a Biden policy, so it's definitely got to do with illegals. I guarantee it. Once the new rule takes effect, these automatic extensions will end, leaving immigrants whose work permits expire unable to work legally until USCIS issues a decision. Boy, that's going to piss off some people. I'd like to see if it was for legal immigrants or illegal immigrants. People that come here legally, I don't think that would be right. But if it was a Biden policy, I guarantee it'd have to do with illegals. Joe Biden mulls legal status for undocumented spouses amid election year focus on migration report. President Joe Biden is considering a new initiative to grant legal status to undocumented immigrants married to U.S. citizens. Biden has faced a surge of illegal crossings at the U.S.-Mexican border, implemented a new asylum ban to curb this. Oh well. Oracle took another beating. I don't know if this is a breakout setup or not. It could be. I've had my coffee for today. I'm having it. It's real strong. Real strong. If this don't put me to sleep, I don't know what will. Tesla owner says SpaceX will have a base on Mars one day. Open. That was the one I was going to look at today. Open the door. So with that uncertainty with PayPal yesterday, no wonder that Open pulled back. And Rocket, it's got earnings this week. It's at RKT, if I remember right. Yeah, I knew it would be down 2. Let's go to the 20-day 1 hour. No, I don't look like this chart. Oh, what the hell was that? Narcissistic Jim. It's time to get your shit together here.
Jim's back, trading the yeah. Yeah. Jim's back, trading the king on his throne. Punta Cana's gone now, he's back in his zone. $40 for a hooker, he'll never forget. Some deals are shady, but fewer regrets. Markets of money making, turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Charts on the screen, the market will tank. Chai tea in hand, and he's ready to bank. Numbers dance on in the chart like a hot Vegas night. Waiting on bull flags like they're gonna take flight. Markets of money making, turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Refocused and dialed in. Got a market to conquer, and we're ready to win. Yeah. Punta Cana was a blast, but it's now in the past. The market is his bitch, hit the money making switch. The king's got swagger, he'll never fall. When the bell rings, we're making money for all. Markets of money making, turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase. Markets of money making, turn on the machine. Buy low, sell high, living the dream. Stacks on stacks of financial feast. Jim's the ruler, got accounts to increase.
Shutdown cost government contractors $12 billion so far. United American CEOs to meet Vance as shutdown strains travel. Well, they better do something because Snap's going to run out. People are going to go out and steal food. They're already doing it, but I mean, I've been watching some gnarly videos about lifetime holders of that are dependent. I mean, I don't think I've ever collected food stamps. Maybe one time. And it was for a very short period. Real short. After I got my GED and I got a grant for going to college. If I got my GED, they gave me a grant that would pay for some of my college because I had epilepsy. It was through some kind of program like that, and it paid for my college. And I got 2-year associate's degree, so I got my GED. I went to college. I held a job. I didn't have to, but I did. I ended up buying a picture frame shop. This all within 2 years. So if you want to work hard, you can make it in this life. If you don't want to work, you can still make it. But you're always your government is your sugar daddy. If it always works out, I don't think it's never been dependable. But I took my trade. I had a trade, and that was picture framing. And I did a lot of stuff in 2 years. I took first place in the state competition in entrepreneurship event. I took the top 3 in the top 10 nationwide through a program. And I think we had like 2,000 contestants. And I got in the top 10, the top 3. I was number 3. I took 3rd place. And they called 10 of us down. Stadium of about 50,000 people. But I had 2 choices. Either change my life or end up like a lot of my other friends, in prison. I choose the latter, the first, change my life. What's Randy doing? We have 9 people in the room. Just 9.
You got false information. You got false information. Good looking lunch right there. Yes, that is correct, Bobby. I just finished it. Now this coffee got me all wound up. That's some strong stuff. I let it sit for a long time. Oh.
CMG is now at 135. And they're now at 145. Okay, we're at the 200 on the SPY. This is how you do it. I tried to tell them down there at the unemployment line. Okay, he's getting ready. From Washboardjim. I'm the proud founder of the Sneaky Snake trading strategy. Spy at the VWAP. Spy at the VWAP. Loading. Triple bottom. Spy at the VWAP. Spy at the VWAP. Spy at the VWAP. For I'm Washboardjim. I'm now looking at the spy calls. Where are you? Please. Panic button pushed. Should I go into tomorrow? If I did... Oh, can we still have time to do it today? It is now 10:37. I think we can. So I'm going to go look at today's. 686 are at 81 cents. And the 685s are at 118. If I go in tomorrow, okay, we're going to hit the shoulder the right time. The second time. I don't have an arrow here. Where's the arrow? There it is. I just put it in. Can I change the color of the arrow? Let's see. Arrow? Yes! I can. It's green. Okay. Okay. So I'll be looking at Washboardjim is looking at the 688s. At 111. There it is. The crowd is unbelievably smart. October the 31st. Strike. 688 at $1.09. There it is. Now, I don't know, there might be a little risky to this. I got to go use the restroom, so I'll be trading on my phone. Oh, no. Oh, no. It hit the right shoulder. We'll find out now for sure. Oh. Gosh. Wow, 102. I might have said stop if it goes below a buck. I'll be right back. Man, what? No. I'll be right back. Come on, baby. Back to even. We're on the right shoulder of an inverse head and shoulders, waiting for it to bounce and break out. Rob thinks it's gonna drop a little bit more. I hope it don't before I get out. We're retesting that shoulder right now. I wanna get in now. Okay. I'm still in it. We're at a buck. Low support. Should have grabbed about another 10 right there. When was that a buck? About back to even. I had a dream last night about, I pulled out an old, I forget what they call these now. One that, my very first one, my fret thing. Had dust all over it. Trying to figure out what kind of flag this is. Could come back down and hit this triple bottom, or it could just break the double top, then move up to the VWAP. Let's see where my chipotle is. We got a diamond shaped pattern for sure. So I think we're going to know something here any second. Within a minute or two. It's either going to come down and do a triple bottom at a vertical, or it's going to break out the double top or hit the double top. Then it forms that one pattern that I call an uncertain pattern. Actually, we got a yin-yang. We got a yin-yang. We got a yin-yang resistance. What's a yin-yang resistance? I'll show you. I'm going to put your starting your trend line. Oh. Start the trend line right there. And you're going to hit it on that right there. And that right there. So if it breaks that resistance, if it breaks this resistance here, then we'll go up. Here we go. Back to even. Kind of taking, feels like it's taking forever to do something here. So I have a chance to get out even. Now we've got a megaphone. Now we created that candle right there. So I get out of here with $2, $20. If we break the VWAP, we got these are two hard resistance levels to break. So right now, Jimmy's up $80. I mean $40. And we're at the VWAP. And the VWAP's not really been, maybe a little support right here. And the 200's not quite convincing. Well, 200's more convincing. Because you have a resistance there, and you have resistance here. And we broke it there, and we broke it here. So it's like a 50% chance, where this is just a 0 chance. But it's the VWAP. Sometimes it hurls a little bit more. Oh, God. We did break double top and the yin yang.
You covered. Get inside the minds of pro trade.
My point is that they're getting a higher rate of sales based on their guidance, but not the same.
I remember one time I worked for this kind of, I forgot the name. I worked for this woman that had a frame shop. It was kind of like a basement frame shop out of a mall. And she's going to move her business to St. Louis. So we loaded up all the equipment and stuff and got it in the truck, and I took a trip down to see my parents, and I was going to come back up. And I remember getting on the phone with her, and she kind of acted like a bitch. And so I was on the way up there, I'd start driving up there, and then I had another conversation with her, and she turned out that she was even acting more like a bitch. And I told her, I said, you know what? I said, I don't need this job. And she turned around and, I knew this was going to happen. I said, no, you didn't. Because I was all for going up here and helping you build this company up. And I just now, I almost completely forgot about that till just now. I never brought that story up, ever. And there were some screws that went to the chop saw. And she calls me up, and, you know where the screws are to the chop saw? I said, nope, I don't work for you no more. Well, it didn't break out. It hit the VWAP. I'm still in it. I'm down about $100.
Will Amazon run or tank as well for ER? Now they laid off jobs, so that ought to that's a good catalyst. But sometimes the catalyst changed. This is what I truly think. I think the fat cats want this market to go back. Once the whole thing just pull back some. Even as though earnings have been fairly good, actually real good. So I'm going to look at Amazon while I'm watching this trade I'm in. I might have to sell it. But then we could easily drop down here and land somewhere in here. We got a megaphone. But if we stay above this pivot point, we'll remain bullish. If not, we'll have a pretty good little knife. This is very important support right now. Well, what the fudge? Do I have to shut this down and reboot it again? It's acting like I do. I mean, this can skip all the way down to 682.50, Rob. Do you understand? Oh, God. I'm starting to get a little pissed off here because this ain't doing what it's supposed to do. Back up to the VWAP. So we're still bullish. I'm even. I'm going to look at Amazon. Oh, there we go. Come on. Break out. You know what? Oh, yeah. Pay attention to this, Rob. I'm giving you a learning lesson. $118, baby. Can we break the 200 SMA? Hey, Jim. This is Joe Biden. I'm coming over to sniff your microphone. Oh, yeah. Microphone. No, it smells real good. I smell your DNA on there, Jim. We were at 118. I was up at $90. We're back to 118, 119. Oh, yeah. Woo! Who's impressed? I'm on voice. I'm here. Yes, I nailed it. So I want to talk about this here, what we got going on here, because I want to let you know why I still felt bullish in the trade. I mentioned it. Does anybody know why I mentioned I still felt bullish inside of the megaphone? There's a certain word. It's got two words in it. And I'll give you a clue. P. Come on, give me an answer, someone. What's PP stand for? YouTube. Come on, somebody's listening in there. Magnificent. What does PP stand for? Besides going to the bathroom. Nope, you're wrong. I got 127 here. I'm feeling pretty good about myself right now. PP stands for what, YouTube? Who's on YouTube listening? I said it. We're now at $1.27. Jim, you're up over 95%. Have you ever thought about selling? 129. Pivot point. Very good. You'll get a trip to the Jamaica Islands once it's cleaned up. So I could sell them here. Rob, should I sell them? Rob's not listening. He wasn't listening to my lesson. Rob got off mic once he $1.30. $1.30. Where did Rob go? All right, Wayne. Welcome to the room. The spy calls. Woo! And after I get out of this trade, I'm going to explain it. I kind of walked you through it, but I want to explain it, why I felt bullish. There's 135. I'll take it. Okay. $1.34. Right now, I think I'm going to sell it. $1.31. From Washboardjim. I'm the leading founder of the Sneaky Snake Trading Strategy, where I play music, talk about chart patterns, moving averages, and being in the now. Okay. And this is really an interesting lesson right here to learn. First, we're going to move this over. Then we're going to move this up here. Damn. Fuck. $137. 38. Gosh, darn it. Okay, we're at resistance. Okay, Washboardjim's going to talk about it. SPY. You probably could go higher, but okay. Everybody got your listening ears on? Pivot point, it's correct. Bobby. So this is a trade we took earlier. This is a head and shoulders. This is a head and shoulders. So we've got the trend line that goes all the way across. We came down and we hit the shoulder once, and then we broke out, and we kind of stopped a little short, broke out to a triple top, then it pulled back, and it came back to that right shoulder line the second time. So that's the first, that's kind of a realization that if we hold that support, we can continue to the upside. Then the second half, is called a yin yang. It's kind of hard to see on this chart, so let's go to a different one. Yeah, here we go. So there's your right shoulder the second time on the 5 minute. And then you go to the 1 minute. And it's got a lot of crap on it too. So there's your 5 minute. There's 3 white soldiers right there. So this could be a continuation run if we break this triple top. Number 4, number 5, number 4. Fourth time up. But that's a bullish sign right there. And then I'm going to reboot this in a second. So we got the head and shoulders. We came down and hit the head and shoulders. That's an inverse head and shoulders. Then you got what's called yin yang, where you have a support. This is something that I made up. And you have a resistance level. So you draw a trend line all the way across. And we broke that trend line that last time out, that double top right there. Missed your snake, breakout, pull back. And then we created, with this breakout here, we created what you call megaphone. This is acting all funky. So you got a megaphone. God, I got to reboot this when I'm done. This is a megaphone expansion pattern. So I either had one choice, it was going to go down, and I was already in the trade. It run up, and then it pulled back. So inside of every pattern, there's a pivot point. And this is your pivot point right here, where we touch down right there and we touch down right there. That's the head and shoulders. So anything above this line keeps you very bullish in the trade. But once you go below that line, that shoulder line, you got your left shoulder, your right shoulder, and it came down and hit your right shoulder one more time inside of this expansion pattern. So anything above this here shoulder line considers you to stay bullish. And I stayed in the trade. Now I could have bought and added on to this trade if I wanted to, but I didn't want to because the market's moving so slow. So then you got a triple top. The top of that megaphone had that big engulfing candle that hit the 200. Then it respected the 200 and the 63 right here. So this is your pivot point. It's also the shoulder line of this inverse head and shoulders. And when it comes down the second time, it has to break out there. That second shoulder, if it don't break out, it's going to drop. And a lot of people don't tell you about that second shoulder hitting twice. And then you had different reasons to stay in the trade. You had the pivot point inside of the megaphone, and you had the right shoulder on that shoulder line where it touched twice. Then you had a nice aggressive run to the upside. And I held it because of this candle right here. This is an engulfing candle. And it bounced over and respected the 200. Another reason why I thought about staying in it. And then once I got up here, I was up quite a bit. So I decided I'll go ahead and sell it. You know, I'm up 300 and some bucks. Might as well get out of the trade. So I made 30% in a matter of 20 minutes, 25 minutes, less than 20 some minutes. But I was able to read the chart, and it more or less told me that I was still bullish as long as I stayed above this right shoulder line in this pivot. Now, if I'd have gone below that, I would have said, okay, we're coming back down here. Should I sell it, or should I buy the dip and take it risk at the triple bottom off the bottom of this here megaphone, or a double bottom? See if it would have stopped right there and added on. I think I would have been smart if I'd have bought me $900 more right here. I would have made $600 on the trade. So I hope that helps. Does that explain it enough? Yes or no? Say yes, Randy. Randy's not here. Randy's probably sleeping on the couch. Doge, D-O-G-E, to lead Pentagon efforts to acquire thousands of drones. That's really going to piss off the liberals. It's not cool when the GOP wants to buy armory. It's okay when the libs want to. EU wants reinsurance at U.S. won't block the AT1 wipeouts if banks fail. Well, the EU better get off their ass. Not bad. Man, it just seems like a quiet day, don't it? So I've only done like 3 trades today. Yes. I'm gonna make me a drink. If you want to get real, well, I'm just saying if you want to follow my strategy, it's good to learn chart patterns, moving averages, and being in the now. And then I'm going to shut this down and reboot it. We just now broke resistance. Maggot phone. See how long it's taken to move it? 1, 2, 3, almost 4 seconds. 1, 2, 3. Took 3 seconds. 1, 2, 3. So I'm going to reboot this. This has been a problem here lately. It's like they're personally fucking with us. One, two. I think it took 2.5, 3 seconds. Okay, I'm shutting it down. We're at the 200 right now, but I ain't going to take no more trades with this thing working so slow. We'll see how long it takes to shut down. Give me a time to go in there and make my electrolyte drink. Okay. Then I bring them in. Let me go out to my car. Right now it's 11:31.
Still shutting down. Been 3 minutes. Oh, leave the knife here. This looks good. So you got a double top right here. And pulled back. Now you got 3 black crows with a spinning top. Let me get on my, I hate to do this without a chart. Let me pull up my, they're at $1.09, the 688s. Let's see what the, I can't move this around, so let me get, trend spider up, because this looks like a good spot here. What the fuck? Spy. One minute. Yeah, we got a hammer now. So we got 3 black crows with a hammer at 109, 110. Could come down to the bottom of this shoulder. There's a support right there. Then it could come down to this heat map. Do a double bottom right there. These are the 688s. Right about now. $104. That seems a little risky for some reason, but we held that support line.
We're at 115. Chart patterns, moving averages, and being in the now. $117, baby. Oh man, I just can't stop winning here lately. No matter how hard I try to lose, I just can't do it. So I'm going to read what this is one of my favorite trades. This is one of my favorite. I got plenty of them, but this is one of my favorite ones. So we signaled this bounce here, and it ran up, and we got out of the trade. Then it started consolidating and pulling back. So after a good uptrend, you'll have a reversal where people just go ahead and they get out of the trade. Some of them get scared. Ones with inexperience. And you have what you call 3 black crows. Now, I've traded at 3 black crows long enough to know that that's a good possibility of a reversal to the uptrend, and you can use about any time frame. If it was a daily or a weekly and you get 3 black crows, you could be a swing trade idea. If you're doing it on a 1 minute, it could be an easy scalp. I mean, in and out. It all depends on the time frame when they show up. 3 black crows is a bearish reversal pattern in candlestick charting, signaling a potential downturn after a prolonged uptrend. It consists of 3 consecutive long-bodied bearish candles, each opening within the previous candle's body and closing at a new low. This pattern suggests a shift in the market momentum from bullish to bearish control. So when I'm scalping and I see 3 black crows like this, I want to identify the candles that are after that crow. Here we had some long wicks at the bottom. We had our harmony candle right here with an inverted hammer, a spinning top, a hammer, a hammer, a hammer, and another spinning top, another spinning top, another spinning top with long legs. That means the buyers and the sellers, depends on how the candle's forming. Like you have an equilibrium here, but here the buyers are winning, the buyers are winning, the buyers are winning. We have a little bit less control on the buyers here. Depends on where it stopped at. If it stopped up here, that means the buyers are in control. An equilibrium. So I want to see what kind of pattern forms, and here we had a megaphone pattern, which is bullish in most cases. Had a megaphone leaving that snake, leaving the 3 black crows. So once it starts to approach the first crow, which is this body right here, you see what the body is right there? That's a support line where it bounced up. And we hit that body right there. See that body? So that's where you want to get out of the trade. And when within 10 minutes, 9 minutes, 10 minutes, if you got in when I did, I got in pretty early. Came back down here and that's where I got in. So within 7 to 8 minutes, I was out of this trade. From 104 to 118. $140. Now I took a trade, I take a break and rest and drink my water, which we'll have an infomercial right now. So everybody has to have the right electrolytes in their gut. Some people don't even drink water, mostly sodas. A lot of people end up having bloated stomachs and not good digestive tract. So I get LMNT. Let me see if we can see it. LMNT, which has 1,000 milligrams of sodium, 200 milligrams of potassium, and 60 milligrams of magnesium. Electrolyte drink mix. It hydrates me, and this one here is the raspberry salt. It's good to do this early first thing in the morning when you have your first drink instead of coffee or whatever you have. It gives you energy and it gives you a better digestive system. For I am Washboardjim, where I talk about chart patterns, moving averages, and being in the now. I don't know how he does it. So we took this trade, had a real nice little breakout from 109 all the way up to 143. And this one from 104 all the way up to 118. And it hovered around at 118 up here for 3 minutes. And we're at 119, and we're at the top of the first crow. Yes, I sold. Very good. Call me, everyone. You definitely want to get out on that first crow. Scale out or do something. Can I make it? You know, it seems like kind of a boring day today. Might be hard. You gotta know when to hold them. Know when to fold them. Know when to walk away. Know when to run. You never want to count your moolah when you're sitting at the table. Time enough for counting when the dealing's done.
Oh. We're back down here again to retest the bottom. Should I take it again? I mean, this is nothing but a chop fest today. I'm going to do one of my favorite songs from one of my bands I used to play with. How many biscuits can you eat? Oh, there's a knife. I can put up my platform now. This definitely has support. Oh yeah, this is it. This is it. And we're going to move these up to 687. $687.
10 contracts. $687 at 115. You gotta know when to hold them, know when to fold them, know when to walk away, know when to run, yeah. You gotta delete this. Oh yeah. Delete this, baby. Yeah, oh yeah. We gotta know when to hold them, when to fold them, when to walk away, know when to run. You never count your money when you're sitting at the table. There'll be time enough for counting when the dealing's done. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. You never have money. Different cause. Be time of the day. Do. Ah. We're now at $1.18. Jim, have you ever thought about selling right here? No. No, I can't. What the fuck? Oh, what's going on here? Malfunction. I'm having a malfunction. What's going on here? Damn. You can't be doing that. Come on, hurry up. Ever since that blackout or whatever, my platforms have not been running well. We're back at that shoulder line again. Yeah. What's going on with this? I've had a couple of rough weeks with my platform. We could get back down to the orb, but this doesn't hold. 3 black crows on the 5-minute. It head and shoulders. I'm wondering if we're ready for a good sell-off. This is a third touch on that shoulder line. Yesterday I took a 5-minute nap. Turned out to be 7. Okay, snake. It's really not been that bad of a day. A lot of people are, I mean, this is a 5-minute and you're at the third shoulder line. So I don't, I kind of get a little iffy when I'm at the third, but I ain't having a problem with this platform. Only only Schwabby. I am getting a little nauseated. I think it wouldn't hurt for me to lay down for a few minutes. The video has higher lows and lower highs. I refuse to swing stocks. Oh man. Come on, baby. We got a snake breakout to the right shoulder. I could get out even here if I don't feel comfortable, which I ain't going to be too worried about, but I am kind of getting tired. No, I was going to play a song to wake me up here. Thank God. Oh. Here's a band I used to play with, but not, I mean, they were good, just in campsites.
I walk on down to the grocery store. Buy just the things that I like. Make it back home when I'm damn well
Good and ready.
Stay out and drink till I'm done. Nighttime drives me crazy. I bang my fist on the wall. Used to call me baby.
Now you don't call it all.
My brother
Yeah. Run over yesterday.
played Donkey Kong all the day long. If you were here, Lord, that
Never was but never.
I should be happy, girl, that you're gone.
Time drives me crazy and I bang my fist on the wall. Used to call me baby and now you don't call it all. 120. $123. You crazy, I'd bang my fist on the wall. Used to call me baby, and now call it all. Crazy, bang my fist on the wall. Now you don't call it all. Do, 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 do. Thank you very much. Split lip refill. You ever heard of them? I don't think we have that many music lovers in here. Come on, baby. We're at now 127. I could make a business decision, but maybe this could be the big breakout point that we've been looking for, Jimmy. So don't count your chickens for the hatch. 129. We're coming to the 200. Now this is, again, when you approach the 200 and you have a choppy day like today and a real slow movement, you might want to consider taking profit off the table. Do you understand? Now this is 3 black crows on the 5-minute. 130, there we go. Dadgummit, Jimmy, you did it again. That guy's nuts. Well, Jim, what is it? Is that a Head and Shoulders that you're looking at right there? Yeah, it is. You got your left shoulder at the 200 EMA. You got your head, and you have your right shoulder here. Now you put this to the 5-minute. See, I'm going to scale out some right here. And then if it does run and have a nice breakout, at least I know I took most of my profit. Do you know who I am? I am Washboardjim. The founder of the Sneaky Snake trading strategy. All right, now talk about chart patterns, moving averages, and being in the now. What do you think about that, Chris? Boom chick, boom chick, boom chick, chick. Boom chick, boom chick, boom chick, chick. God, here we go. We're now at 139. 140. That Washboardjim. Jim, can I ask you a question? My girlfriend wants to go out with you. Would you please say yes? I might think about it. But I really don't like to go out with my friends' girlfriends, if you know what I mean. Nancy, would you like to go ahead and get me a shot of vodka to go to with my electrolyte drink? Please, baby. 3 black crows and 3 white soldiers. 3 black crows and 3 white soldiers. I don't know how he does it, but that guy is a frickin' miracle maker. They're at 138. 3 black crows and 3 white soldiers. Okay. Tempted to go walk around the building once. So these are, each one of these candles is 5 minutes long. So if I open this up, here we go again, back to that inverse head and shoulders. So we had a triple bottom after the 3 white soldiers. Right here, and it pulled back. Then we had a triple bottom. We also had the shoulder line on the 5 minute. So bring it, magnify it, and we had 3 black crows to that shoulder line, which was a triple bottom, into 3 white soldiers. 3 white soldiers out of the trade. 3 white soldiers, tweezer top, out of the trade. Do you understand? I had someone tell me once, he said, Jim, can you explain it to me like a 5-year-old? And I looked at her and I said, can you count to 3? Because if you can count to 3, you can trade with me. And she said, I know how to count to 3. I said, let's start counting to 3 then. I want them. I want to explain it to you like you're a 5-year-old, just like you asked. 1, 2, 3. 1, 2, 3. 1, 2, 3. Boom! I'm out of the trade. 1, 2, 3. 1, 2, 3. If you can count to 3, you can trade with me. Most 5-year-olds, I'd think, can count to 3, or they should be able to. Am I correct? Oh, God. I'll make it even easier. This is about the easiest way I can probably think of it. We're going to count to 4. I usually don't go to these links, but what the fudge? Out the door. 1, 2, 3, 4. Baby, I love you more. 1, 2, 3, 4. Can you take any more? 1, 2, 3, 4. Oh, I adore. 1, 2, 3, 4. Someone knocking at my door. 1, 2, 3, 4. Oh boy. Talk about a Looney Tune. I've never explained it. It's never been to explain. Charting's never been explained to me like that before. That is if you can count to 4. Boom. Oh, ouch. Might hurt my guitar if I do that. Okay. It's such a beautiful world today. Almost everybody explains I mean, there's only a couple spots where they call 3 black crows a reversal pattern to the downside. Almost everything you look at. But when I look at them totally different. I look at them as opportunity. 3 black crows, boom. 3 black crows, boom. 3 black crows, boom. But if you look it up on the 3 black crows still goes down. 3 black crows still goes down. 3 black crows still goes down. 3 black crows still downtrend. 3 black crows. 3 black crows still goes to a downtrend but bounces up a little bit. 3 black crows, now you have a big uptrend. So that's the way I see most of the patterns working out. Every once in a while you get a continuation where they keep going down, but maybe, 2 out of 10 maybe. And if that happens, you just stop out and wait for the next set. It's almost 1 o'clock. So we're getting ready to squeeze what we're doing. I mean, this is going to be, we could get one good knife and then have a real big fat play at the end of the day. Because it's getting that time. It's 12:43 here in Missouri. It's 1:43 Eastern time. We got like 2 hours and 15 minutes. So, I mean, there's still plenty of time for it to come down and hit that double bottom off that orb. But we're getting higher lows and kind of a mixed messages on the bottom, where we had lower lows and then a lower high. So it's kind of making a symmetrical flag. On the 1 minute, this is where I tell you to start moving around with the averages. I mean time frames. So there's 2 minute. We got an inverse head and shoulders, so it could come down and hit the right shoulder one more time. 5 minute. Another head and shoulders on the 5 minute with lower lows, lower highs. Then on the 10 minute, we got a symmetrical flag, another head and shoulders with lower lows, lower highs, kind of a diamond shape. And then you got the 15 minute. Which is almost a double bottom. Head and shoulders with lower highs. Getting ready to squeeze. This is getting ready to squeeze more than any of them. Then you got the 30 minute. "30 minutes of Darvis box." So resistance is 687297 to break. To run it up to the top of the orb. Then you got the hour. And that's the last time frame. And I can't tell shit on that chart on the hour. So we got a fallen wedge on the hour time frame with last 3 hours resistance has been right here on the last 3 hours. Right there has been resistance. So if it broke that resistance, I'd jump in it and run it up to the next resistance, which is right there, which ain't very much. Let's go over the watch list. I mean, I've done good enough today. I don't need to trade no more. We're about to break the 200 on the SPX. Huh? No, I ain't telling you. I'm not telling you to buy nothing right now. I'm just telling you to scalp. Let's see what the ladies got to say. Marley. Marley's looking sexy today. She's showing some cleavage. Marley has a great personality.
Because they can get them at a discount now. And then when we see the supply really come into shortage in 27 and 28, and they start delivering and having active construction, those values are going to go up, the revenues are going to go up, the valuations are going to go up. So for the retail investor, if you can buy into contractors, subcontractors, suppliers, those are ones that you can buy at a point right now, and we see
triple
tremendous
top
improvement just because we're going to see pickup in the market.
Okay, and really great place to leave it. We so appreciate it for all that great insight and then the time today. Of course, Paul Giorgio, COO of Aldridge Acre Partners.
Jenny looks hot today.
Now, coming up next, last but not least, we're diving into the move today in Roblox. The shares are now down about 13% on the session, pacing for largest percentage decrease on a session since May of 2024.
Opportunities don't stop when the market day ends. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs.
You know, one of these girls about their turtlenecks, and Marley comes in showing cleavage.
24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly.
We're at the VWAP on the /ES.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and today we are looking at Roblox, which is seeing a substantial repricing to the downside, over 13% on the heels of its quarterly report. So joining us now is George Tillis, Senior Markets Correspondent for the network. So George, I mean, you know, it's not always that we see price necessarily like a complete depiction of the financial strength of an earnings report, but what really went wrong here? Because clearly, you know, something isn't resonating.
So, I mean, I guess in the bigger picture for Roblox, it appears right now that investors became impatient. That's how I'll kind of explain it from a top-down view. And the reason I say this is, even though the platform has been growing significantly, I was quite surprised. They reported, you know, monthly active users around 400 million. They also talked about how they grew their daily active user base to over 151 million. Their gross bookings numbers were higher by 70% to 1.9 billion versus 1.65. They even guided higher for gross bookings for next quarter. But I think the challenge lies is if you look at the EPS, they lost 37 cents on an adjusted basis. They were expected to lose 49 cents, but that was equivalent to the same losses last year. for the quarter last year at 37 cents. So if you basically do the math, they reported $257 million in net losses. Again, so you have to keep that in mind. Sales also came in slightly less than estimated by about $300 million, but nonetheless, it's still higher by 24%. So, I mean, the first off, in the quarter, the better than expected EPS was offset by worse than expected revenue. Even though the gross bookings numbers were a lot higher, which is a good sign, as well as the daily and monthly active users, and even the hours on the platform, exceeded expectations. The net loss is the problem. It's still expected to be there, and they actually increased
Roblox
guidance. If you look carefully, they were expecting, this year 1.09 billion in losses. Now they moved it higher to 110 to 1.13 billion. And so again, if you just look at the quarter and you annualize the $257 million loss, now I'm just using this roughly speaking. I can go back and look at all 4 quarters exactly, but roughly speaking, they lost essentially close to $1.3 billion. So they're still expecting to lose money, and the improvement in
how'd Boeing do today?
And that's why I think the stock is being sold off, because
Oh my God,
investors have been impatient.
Boeing got to my price
When you
level,
look at this, now,
almost.
there's always, in hindsight is always 2020. You get the benefit of looking back after an event, but if you go back to last quarter,
Netflix,
then to this
way
quarter,
overbought.
The stock has been really in a
Oh,
trend
damn, Netflix.
of moving averages.
We had an opportunity on Netflix this morning.
So a lot of times that's telling that there is either a breakout expected to happen, which could have been the case, but also a breakdown. And now, unfortunately, for long investors, there's a breakdown.
George, you talked about impatience from the investor base, but if I look at some of this and try to reconcile it, I can maybe understand that. It seems like they've achieved a ton of things investors wanted them to, whether that's engagement, whether that's an older demo,
Tesla,
whether that's more, daily active users broadly.
Tesla about hit my support today.
Per daily active user. So it's like you achieved all your goals, but it didn't add up dollars and cents wise the way you maybe sold it. Does that make sense?
No. Makes no sense.
Brought up, it really comes down to the patient investors are becoming more patient, because even though your top line growth is growing exceptionally well.
I disagree with you, George. It's the patient investor that, like me, the every ordinary day trader, retail trader. See, you fundamental traders have missed the boat. George, been sitting on the sidelines, hoping for a pullback and wishing, calling bubble every day for the last 6-7 months, almost a year now. And the market's done nothing but run up. Now, I'm a retail trader, and I'm telling you that we could have reached that bubble by now. And a patient trader like myself will make just as much money as when I wasn't so patient. Because I'm turning these scalps into 30 to 40 cents at a whack. If you know what I mean, brother. Patience is the best virtue right now, George.
And that's what's happening here.
Yeah, and I couldn't not agree more. And I mean, we're seeing obviously price today really illustrate, a lot of these major concerns. So appreciate it, George, for all of the insight today on Roblox.
George is wrong.
A bit on the session. But that'll do it for us for Next Gen Investing for, of course, this Thursday. We have the watch list coming up next.
Oh, God, the watch list. Is it going to be with Marley?
Whether you're an experienced investor
I
or
hope
just
not.
getting started, Charles Schwab offers a webcast that's right for you.
I wish Carl did a watch list. I'd listen to Carl. Carl's way is the best way. So I'm stretching right now. I'm going to walk into the kitchen and maybe prepare me some coffee after I have this electrolyte, last slug of this electrolyte drink. Again, this is LMNT. This one here is a raspberry salt with 1,000 grams of sodium, 200 milligrams of potassium, and 60 milligrams of magnesium. If you have a bad heart, I probably wouldn't recommend you to take this. If you have a limitation of salt intake, I would probably not want to take this. But me, I don't put salt on any of my food. Only my soups, and that's very little. So it doesn't hurt me to have, oh, here's Marley. Yum yum. I'd say Marley's probably got the biggest breast of all female traders that I've seen on TV.
Any screen, anywhere, free. SchwabNetwork.com.
Do 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 do.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or
Oh boy.
head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time, coming to you live from New York Stock Exchange on the corner of Wall and Broad. We've already had some back and forth action. We have a lot to discuss today. Some of the feature pieces, the future of robotics, and
Hey, see what Nicole's wearing today.
and the tech sector moving forward. Maybe in your life as well. ETF flow trends. We'll talk about some of the very
I'll accept
latest.
it.
Several ETFs to consider for your portfolio.
It's not really professional like,
Talk
but
all about Eli Lilly's latest earnings report. Good news there on Zepbound and more.
Marley's
And,
outdressed y'all,
details. In the
except
meantime, stocks
Jenny.
have been higher. Started off to the downside, but then turned into the green and went back and forth throughout this day. So you can see that the Dow is gaining 156 points, while the S&P is pulling back 25 points. We did see Alphabet, Google hitting a new record all-time high, while Microsoft and Meta pulled welcome back after the quarterly reports. We'll have Apple and Amazon later today. We got the Fed meeting. We do see mortgage rates creeping higher. A lot to discuss, folks. Right now, the 10-year bond yield is sitting at 4.09. Oil and gold are both higher. Gold's up about $15, and oil is about $60 the barrel. Also, we see here Bitcoin's at 107,000 right now. That is down 2.8%. Kevin Hanks, host of Fast Market here on Schwab Network, is with me. And I did mention the move that we saw on Alphabet Google. Tell me a little bit about that story. Nice numbers, right?
Yeah, their numbers are great. I mean, remember, this is a company that had a cloud over its head for quarter after quarter after quarter. Now that all seems to be dissipating in most cases. Here's the numbers. Earnings per share, $2.87 a share. A big beat on the $2.27 expected. Revenues, 102, first time ever over $100 billion.
Woo!
2.3 billion versus 101.1 billion expected. Revenue growth 16%. That was made up of services 14% and cloud 34% revenue growth from cloud. Advertising on YouTube, $10.3 billion. Good solid numbers. Their CapEx spending, something that's really starting to come into focus here as we get into the late quarters of this year. CapEx spending for 2025 to be between 91 and 93 billion dollars for expanding their data center. So that's where their CapEx is going. All this, Nicole, stock up over 3% despite paying a $3.5 billion fine to the European Commission for breaching rules for ad tech competition. So despite fines to the European Commission, still a really good quarter for Google Alphabet. Stock up.
CapEx spending, or capital expenditures, is the money the company spends on acquiring, upgrading, and maintaining long-term physical assets like buildings, machinery, and equipment. These expenditures are used to improve the company's efficiency, expand operations, and acquire Washboardjim's sneaky snake trade strategy. And they defer in routine operating expenses, OPEX, like salaries or rent. The cost is not fully expensed in the year of purchase, but the capitalized in depreciation over the asset's useful life. Washboardjim explaining CapEx. Okay, carry on.
And 72 billion. And the projections for 2026, here's all they would say. Notably larger is the way they guided towards 2026.
And why is it down, sir?
And I think the overall investing community is starting to say this is getting to be a bit much. But so
bit much.
You know, great earnings per share, great revenue out of Meta, but they don't like the CapEx spending.
Yeah, understood. All right, yeah, and
I don't have a problem with it.
The guest was talking about, the debt and capital structure, and that they were then out there with a $25 billion bond offering.
I explained
about that today.
Okay, I explained the other day about me owning a picture frame shop, and I turned down this contract for 1,000 mats. They needed them by the end of the week. So about a month later, I decided to go out and buy me a new mat cutting machine, computerized mat cutting machine that would have made me cut them mats within a week. All I had to do is pick up a mat, program it, pick up the mat, put it in the mat machine, and have perfect cuts. And it'd only take a couple of minutes, not even that long, where it would have took me 10, 15 to 20 minutes to cut a single mat. So about a month and a half after that, I got another contract. And I said, yes, I can do it. I can have this done by the end of the evening if you needed it. They wanted 50 mats. The college did for certificates. They said they needed it within a couple of days. I said, I'll have it to you by tonight. If I got the mat board in stock, and I'll get it in stock. If I don't get it in, because there's another, I know I can get the mat board today. I'll run and go get it. I'll have your order done tonight. And they said, okay, we'll come pick them up. And I had that order done. And I made a quick $500. Then I put in the maid. The capital expenditure, after about, I'd say half a year, paid off for the machine. And from then on out, it was just pure profit, except for expenses on mat board. Same way with the saw. I used to just have a chop saw where you chopped it with your feet. So I had to take me more time to cut frames with that chop saw than it would have if I had me a nice double-bladed hydraulic saw. And I got that saw in. Man, I could put them frames out. Boom, 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 boom. And I was able to, with that extra X-cap spending, I was able to generate a lot more money. Same as a vacuum cleaner or shampooer. I had an old cheapo shampooer. So I went out and I spent $2,000 on a carpet shampooer that had a wider blade on it. Instead of doing small, jobs that I couldn't do, I had this bigger machine where I could go in there and I could do a job. And I had that machine paid off within 6 months. I win.
Earnings, they have the capital, and they have to some degree the regulatory people to, that they can hire. They can hire technology people and pay them a fair salary or an appropriate salary. They've got the network effect of having more customers than some of the smaller banks, and so I think they have the profit to invest in this.
I'll show you a picture of me when I was
changing climate every day, especially in
my frame shop.
With all the rules that are changing, the adoption of all the different sort of types of money that seem to be coming out every day. So I think you got to go where they have money to spend and they can spend money. So if you're not making any money, you don't have any flexibility, and I think you need flexibility in this kind of market.
And out of those names, it sounds like you like them all. It's not like you had a favorite. FinTech, you had Coinbase, PayPal, and also XYZ, Block, Square.
Yeah, so again, those names are all the bigger names. They're, they're creating new.
This was a picture of me about a year after I got my GED and I started going to college. And I changed my life around. And I was at the college. We had a home and garden show, and I had put my frame shop in there, my picture frame shop, Picture Frames Plus, and these mats back here, like this one right here. Can you imagine how many mats you'd have to go through to get that perfect like that? There's times where I took 5 or 6 mats before I could finally get it right. And that machine, man, I could get that done in one whack and have it done within 10, 15 minutes after I got the measurements in there, where it would have took me all day, maybe 2 days, to cut a mat that looked halfway decent. There's another one here. Here's one of my diplomas that I did, triple mat.
I'd sell these ready-made picture frames, like this one right here. And I'd have artists come in, photographers, and I'd teach a class at the college. I even started teaching a class. And I'd have people come in and teach them how to cut mats and stuff, and then I'd sell them for everything for like 30% off if they needed it. And I didn't have to hardly do nothing. Just have them use my equipment. And I had shop down the street would sell this molding for 6 times markup. And picture frames like this would cost $20 to $30 a foot. And I'd sell it for double, and they were selling it for 6 times as much. So they were coming to me in droves because I'd sell them the same stuff for a third of the price, sometimes a half. And they said, oh man, I'm coming back here. I can't believe I only paid $250 for a 16 by 20, like something like this. Where if I'd have went up the street, it would have cost me $600 to $700. And I just started building business up, and I ended up selling it. I had a drawing right here that people come by the booth and talk to me. They could enter a drawing, and I'd give them a free picture frame. This thing back here on the wall. So I had a way of doing that. And here's a picture frame I did in Hawaii. When I worked in Hawaii, imagine how big that thing is. That's 3 different frames in there, and that's made of koa wood. I put that thing together. I could cut out names and stuff with that machine. This one here was a gift to me when I left Hawaii. They gave me this picture. Don't pet the dog, hee hee hee. You weren't the only Haoli here. I miss you. I'll miss you. Good luck, Jim. Jim, we aren't in the picture, but Gabby, have a good time. And that was 2 lesbians that lived together. I had a good time with all them Hawaiians. Let's see here. Figured I'd have more pictures up here. This was my girlfriend back in that was my girlfriend back when I was in college. I had 2 or 3 of them.
Can't find my picture frame shop. Oh no, I got a picture of it. Oh well. I had a good time doing that. It was a lot of fun. No, there's one. That's me back my second year in my shop. I had map boards all lined up there and wall frames. And I was in student government, Delta Epsilon Chi at State Fair Community College. This is me when I graduated college with my family. It's me right there. My mom, my dad, my nephews, and my sister, one of them. I was Homecoming King nominee. I mean, I really turned my life around. The more I think about it, the more prouder I am. Okay. Looks like we pulled back some here at the end of the day, just like Jimmy wanted. Can we get down to the bottom of the orb and have a real big fat play at the end of the day? Who's ready? Anybody got an estimate? Big C, 678 on the SPY. Is that what you're thinking? I see a 1, 2, 3 right now.
We could drop a little bit more. We could. I'm just saying. I'm not ready to take it yet. You could bounce here, but oh wait. No, I'm gonna vote accordingly. With Democrats, you got to. I'm an ex-Democrat, so I can tell you how we'd think. This is how I think now, though. I think it's good to open up America's eyes and see how many people were really dependent on government benefits, how bad it really was, because you're never really told how bad it is, but I just think it's an eye-opener, and it'll turn people against the Democratic Party, because people have become so dependent on food stamps. I mean, and making babies just to have a family, just to live free. I mean, I don't know what it would be like if I didn't work. I know everybody I know that doesn't work are half crazy. You can't hear me? You're not on. Oh, yeah, you are. Shiba, you want me to sing? YouTube. Do you like it when I sing? Hello, Lucas. Does YouTube like it when I sing? We got a symmetrical flag. We're getting ready to squeeze off 3 black crows. I think this is it. This could be the bottom. Back to the VWAP. And that's the spy. YouTube overwhelmingly wants me to sing. It's amazing. Can't believe all you guys saying yes. Woo! We're going back to the 686s. So if this comes up here in double tops, we could have an ascending triangle instead of a symmetrical flag. There's resistance right there. Higher lows and a horizontal. I think I got to get up and go pee before I take this next trade. They say sing away. Well, we've consolidated down here at the bottom for a bit. Uh-oh. What'd Jimmy say? I'm going to go back. I think I got this recorded. Jimmy says this might be an ascending triangle, and we've got just a little bit of time before we have a breakout. We're going to go to the VWAP. These calls are up $20 a contract. The 686s. They're now from 115, they're now at 135. I don't know how he does it. This Washboardjim is something else. So let me tell you something here. Time for another trick. So when I first started looking at this, I noticed that we had a symmetrical flag out of the snake. So I'm going to draw in the snake. And you know how to count to 3. That's why I played Sesame Street earlier. So we have 1'em, 2 bits, and 3. On the third time, we broke out. When we broke out of the flag, we created a symmetrical flag. So I said, we're breaking out. We've got a symmetrical flag here. So the symmetrical flag goes like this. Then we had higher lows. I mentioned higher lows. And then all of a sudden, when it broke out of the flag, I said we might have an ascending triangle, which is a bullish indicator. Just dropped straight across from the body of this candle. So we came up and we touched that. Then it came back and retested that resistance line. Boom! Now everything that breaks out pulls back to support. So we got the higher lows. Boom! Now this thing should come up and hit the VWAP. It should. After it's pulled back and retested. And we got 3 black crows with a hammer. And we got to look at the time of day. We still could be in for some volatility. It's not like it was this morning. This morning I jumped right in this trade. No hesitation. Oh, I want to see what Marley looks like. She looks hot today.
This connectivity play. At the end of the day, it all
I'll be
comes
right
down
back.
to physics. And the companies that know how to make the most out of physics, whether it's energy, materials, etc., have a competitive advantage, and they're going to continue to grow as a percentage of overall GDP. Right now, majority of GDP is in the real world, not digital services, and these companies are going to have, runway to, as I mentioned again, expand from kind of behind the scenes to robotics as a service themselves. So they're going to start operating in more parts of society. So I really believe that Wall Street is underappreciating the impact AI is going to have on the robotic space. And if you look at valuations, they're still at regular. Historic averages right now for the robotic space overall. If you look at Robo, for example. So we're starting to see this uplift take off, but like the next phase hasn't even started to begin. And so at the end of the day, you're going to get exposure to companies like Coherent, Infineon, even Ubitech, which we added at the latest rebalance. And again, as I mentioned, every quarter we evaluate and score companies based on factors like technical leadership, market leadership, what they're investing in. To give investors opportunity to have exposure to companies that they might not be as familiar with.
And what do you think about all the spending that's going on? I mean, is it a must? Because we've seen a lot of circular spending, but in order to stay ahead and have these industries really benefit, I mean, what industries are really benefiting specifically? We've been talking about a lot of them benefiting from the spending. You have to spend in order to grow, right?
Yes and no. I mean, right now we're kind of in this game theory power dynamics where, there is a winner-takes-all mentality in terms of like what you can build, but obviously on the flip side we see open source. We see increasingly less expensive models that can do more for less. And that trickles down into society. Everyone will benefit from that at the end of the day. You're going to get cheaper transportation. You're going to get, better materials. Better energy dynamics. Healthcare is going to improve, so you're going to have things like AI doctors and autonomous drones that will fly to bring you medical equipment. This will really start to penetrate and integrate into the real world. It'll take time, though. There is a lag period between capabilities and adoption, and that's something to really focus on too. But again, in terms of this, let's break it down. The CapEx so far has been mainly in the data centers, and that's projected to grow. I mean, we're up 90% year over year, I believe, and that's not projected to slow down. And in fact, we've seen comments from Zuckerberg and others on increased spending next year. That's pulling through the areas like robotics, and that'll trickle down into other areas. But again, it's also disruptive to a lot of SaaS players, for example. And so I think we're getting more confident around companies that have an advantage with increasingly less expensive compute, increasingly less expensive intelligence for decision making. The simulations, not just increase individual robot capabilities, but fleets and swarms of robots. So again, we believe and are really excited that this is one of the most exciting opportunities in play right now. And there's lots of runway. I mean, if you look at the year 2040, we're going to have humanoids in our homes. You can already pre-order some for next year. And again, we're still very early in that, right? Like first generation deployment. So it'll only continue to get better. I think one of our advisors, and we've talked about this a lot, we're going to transition from automotive leases to robotic leases in households. And so that's going to be global, right? So that's a huge market on its own, huge supporting system around it. But again, just really exciting time to be in.
I've got a robot out here, and it could jump 4 feet straight in the air.
Well.
Ran, I forget, so fast
Didn't do it.
in just a few seconds, but it was over $60,000. So
Should have held that
Get
sport.
price down if everybody wants one. This will be like our Tesla moment. We need a more affordable one.
Oh God, SPX.
They'll come down, I'm sure, like everything does, right? Senior research analyst at Verify. Zeno, great to chat with you. Thank you so much. Still ahead, we'll spotlight the increasingly world popular ETFs, right? Everybody wants ETFs because it really gives you that broad diversification instead of just one stock. What are some of the trends that
That's
we're
not
seeing
true.
now? Watch this, we'll be right back.
Okay, we're at the gap. SPX. SPX is at the gap.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
The
Trading with Schwab
6880s.
is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies.
$2.80.
Your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We want to take a look at the increasingly popular world of ETFs. In fact, seeing some records. Burke Ashenden has the latest. Vice President of Capital Markets and Institutional Strategy at Educator ETFs. Is it in fact a record year? Are you seeing record sections? What's going on?
It is a record year. They're calling it the Triple Crown. So it's flows, it's volume, and it's new launches.
ETFs are on a tear. It's been unbelievable to watch.
It's unbelievable how slow this thing
At
is.
this point, we've never seen flows like this. Flows right now are targeting $1.2 trillion by the end of the year. And it's driven by some factors that we haven't really seen before. That includes active ETFs, which now are 1/3 of market share this year. That is a new record for those. And you're starting to see a broadening out of the different kinds of ETFs. So you're seeing options-based ETFs, swap-based ETFs, help deliver client outcomes. And those outcomes are really what's driving the flows.
What's interesting is how you talk about this record-breaking inflows and more interest in actively managed and options-based ETFs. I mean, gone are the days that an ETF just tracks an index, right? Nobody's really interested in that as much anymore, right? What are they interested in? Do you see themes or thematic investing too?
Yeah, that's
is
a
it
great
tech?
question.
Is it Bitcoin? Is it,
Yes.
you know?
Sort of all the above. When I look at kind of the ETF space in general, it started with passive beta. It's ETFs were cheap, they were passive, they were equities, then you saw it move to fixed income, then you saw active ETFs really take steam. Within active ETFs, those options-based ETFs, buffer ETFs, floor ETFs, are disruptive because they're really taking a structured note type payoff, which are really popular with advisors and clients, and in delivering it in a better wrapper that's daily liquid, tax efficient, transparent. So you're seeing ETFs sort of break into these asset classes and groups of assets that historically haven't been ETF.
And then QFLR, for example, right, which has had an incredible, it's gone up about $10 from $25 to $35. You talk about this and it protects your AI gains. Tell me a little bit about that.
So Q4 is a strategy we partner with Parametric on. It's been growing very quickly. We talk to our clients all the time about this AI bubble. Everyone's coming to us and saying, is there a bubble? Is there
AI bubble again. They keep saying it.
The revenues are growing. If you start to look at data centers, the U.S. has 5,000 data centers. That's more than all of the other largest countries combined. So the U.S. is ahead of the rest of the world in this AI race. The question is, with a lot of these companies, is everything priced in at this point? Is all that positivity priced into the stocks? So you've got to be able to participate in the AI return stream, but you're a little bit concerned about your downside. That's where Q4 comes in. Q4 gives you a 10% floor on your losses, so max loss of 10%, cut off that left tail. But on the upside, it allows you to capture 70 to 80% of the market. So it's a great tool when clients come to us and say, hey, we want to participate. Are we too late? We say use something like Q4.
Yeah, it's interesting because people love the NASDAQ 100, which just hit a record high. I mean, this week it's been hitting record after record, but it does take away some of the volatility. So if you're worried, but you do want to be in the NDX or you watch the triple Qs, you can do something like the Q4 here for protection to the downside. And then what about INOV here? This is about the declining dollar story. How so? The international story.
Yes, so U.S. versus international, another really popular story right now. U.S. markets, just to start there, the U.S. in 2011, so about 15 years ago, it was 30%, U.S. stocks were 30% of the global market cap. You fast forward to today, U.S. stocks are now 50% of the global market cap. So it's hard to bet against the U.S. You cannot bet against the U.S. That being said, we have an interesting
You
phenomenon.
cannot bet against the
dollar is
U.S.
declining right now. You see a debasement trade in the market. So we took a look, our research team took a look and said when the dollar is declining, how do international equities do? And we found that developed market equities have 3x the returns of normal when the dollar is in a declining or weakening environment. In emerging markets, the same story, 5x the returns when the dollar is declining or weakening. So I know is an ETF that gives you a 15% buffer on developed markets with an upside cap. So it allows folks that say, you know what, I've been underweight international for a very long time.
Right.
I'm going to weight in with this ETF.
But you know, these ETFs, I mean, they're in there. I mean, you have the auto-callable as well. Are you still feeling like the market is going higher generally? I mean, are you
Unbelievable.
still leaning towards optimism and more highs?
You know, I think, I always say you can't be a perma-bear. You can't be out here calling for a huge correction every month. Folks just won't take you seriously. So you have to be bullish on stocks and the U.S. over the long term. There are a lot of reasons to be optimistic. That said, I talk to institutions, our pension endowment foundation clients. They look at the returns we've had over the last decade, and they say, you know what, we've been spoiled. We've had unbelievable returns in the S&P and the NASDAQ. Can we see those returns for the next decade? And that's really where it makes sense to insert a buffer or a floor so you can have exposure going forward, but have some protection.
Yeah, and I know that auto-callable has become popular popular. I mean, I've talked about it with Calamos, and this is something you have, the Innovator Equity Auto Callable Income Strategy ETF. Tell me why that is a good play, and who's a good target audience for that, for ACEI?
Yes, the name is a little bit of a mouthful, so sorry about that. But the ETF itself, auto callables, just to review, are some of the most popular structured notes. They sell like crazy. Advisors love them, clients love them because they deliver you a high level of income tied to equities. So that had never existed in the ETF wrapper. The reason that advisors like ACEI is that it gives you that high level of income. It's a great high yield replacement, can live in that dividend sleeve for advisors. But it's daily liquid, it's a single ticker, they can put it into one of their models for clients, and it's transparent and cost effective. So advisors prefer the ETF wrapper oftentimes more than a structured note.
Yeah, I mean, look, these have become more and more popular, and to your point, record setting. And of course, I said the long name, I know.
450.
Set me up for that. Burke Ashenden, Vice President, Capital Markets, Institutional Strategy at Innovator ETFs. Thank you so much for being with us. Really appreciate it. Still ahead, we bring in our panel, talk all about Eli Lilly, the very latest on their earnings, and of course, GLP-1, Zepbound, still helping this name along. We will be right back here on the watch list.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
I swear to God, they're fucking with me.
At schwabnetwork.com.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to the watch list. It's time to bring in our panel talking about Eli Lilly's earnings and the outlook for the weight loss drug space. Christine Short, head of corporate events research at Wall Street Horizon, a TMX company, and Scott Zari, healthcare director at S&P Global Ratings. Thank you both for being with us. Christine and Scott, thank you. Let's talk about, Christine, what are your thoughts? I mean, Eli Lilly did so well. We talked about Zepbound really helping it along. More thoughts?
Yeah, it was just a blowout report. To beat and raise on both the top and bottom line, really strong results there. I think the three most interesting things I found in the report and the call were, one, their international expansion, which really drove robust growth for the quarter. Like you said, it was those drugs, Zepbound, Mounjaro, the GLP-1s, driving growth, but it was the expansion in places like India, Brazil, and China in the third quarter that just showed the global demand that's out there for these drugs. Secondly, they talked a bit about their oral weight loss drug that will be, hopefully coming to market soon. It completed their phase 3 trials, and they are applying for FDA approval this quarter. That's what CEO David Rick said. And you can just imagine the opportunities that opens up for the folks that maybe felt it was a little too intrusive to do the injection. A daily pill would certainly allay any of those fears, and I think you'd capture more of the market. Another great thing about that, CEO David Rick said, was there are some, markets that they can't get into because there are refrigeration requirements for some of these drugs like Mounjaro, and so to have that oral pill form would certainly open that up. And then lastly, they talked a little bit about consumer access and this partnership with Walmart that they just announced. And so going direct to consumer, you can now pick up in-store discounted vials of Zepbound, and that certainly will open up a bit more when you have that oral drug on market. So just getting out there, more directly consumer, which I think will certainly help the company as well.
And Scott, I'm sure you have a lot of the same thoughts, also some potential headwinds, and we don't really know whether or not the oral pill is going to get the go-ahead. Pfizer, for example, wasn't able to do it so quickly. Scott, what are some of your thoughts here?
So I echo everything about it being a great quarter. I think at this point we expect Lilly to have a great quarter, though. We expect them to continue to beat revenue expectations and raise future guidance. So I think this was kind of in line with what we were expecting when we assess our credit rating. I think another positive thing that came out of the quarter was there's been a recovery. You know, when Novo negotiated for a lower price at CVS in exchange for dropping Zepbound from the formulary, there were some concerns about that was dropping Eli Lilly's share of new prescriptions, but that seems to have recovered rather nicely in the quarter.
And so, Scott, the final thought is just the landscape. I mean, do you think they talked about surging demand? Do you think that this will continue? I mean, do you still think the weight loss drugs continue to have that grabby hold and help this group of names?
Well, I think when you say group of names, it's really just a two-horse race at this point. It's them and Novo, and I think Lilly has clearly jumped out to a lead here. I think competition is going to continue to increase, and you saw that with Pfizer's attempted acquisition of Metsera, and now Novo's jumped back in to try and defend its market position and came in at a higher price. You know, we think competition is going to continue to strengthen. A lot of people are going to enter, but this is a market that's projected to grow to be about $150 billion. So I think there's just a lot of room for potentially a lot of companies to grow, but at least in the near term, it's likely to continue to be Lilly and Novo, and we think Lilly will likely be in the front.
And then with the expansion of international, the possibility of the pill, Christine, you really think there is more room to run for a name like Eli Lilly, right?
Yeah, that's what the company says to expect. Like I said, there are folks that maybe wouldn't want to be doing something like an injection. I think you open it up to a lot more of your target audience by offering the pill. Of course, if that gets approval, they seem to feel pretty positive that it will. International, they have just really started with that expansion, but again, global demand is there. And as far as Novo, they don't report.
It's a third attempt to break the 63.
With these latest earnings from Eli Lilly, they still continue to seemingly edge out Novo, but we'll see when they report next week.
And what's your outlook on the pharma sector overall?
Is Lilly next week? I thought it was this week.
Sure. So overall, we have a stable outlook on the pharma sector. I think, like I said, the GLP-1 tailwinds are really unique to those two companies we discussed. The rest of the pharma industry is experiencing probably the most downside risk or headline risk, whatever you want to call it, that we've seen really throughout history here. So, but that being said, there's also been really strong growth and historically low levels of M&A, and that's allowed leverage really for the entire industry, debt leverage, to come down, and that's provided a lot of cushion in our ratings. And when we talk about our outlook for the industry, we're not really talking about our outlook for industry performance. We're really talking about our credit rating outlook here, and we think there's a lot of cushion for the rest of the pharma industry to absorb some of these risks like tariffs or most favored nation pricing, if they are in them.
Yeah, and you did know, Christine, about the medical cost inflation when we widen out the big picture. Some final thoughts, Christine.
Yeah, overall healthcare coming into this earnings season is one of the laggards. As of Friday, they're only expected to report year-over-year earnings growth of -4%. So along with energy and consumer staples, it's one of the three sectors expecting negative growth. But one of the bright spots, as Scott pointed out, is pharma, of course, and hospital providers. They've been seeing a rebound in patient volume, so that's helped them. But on the insurer side, although we've seen some great, like United Health revenues look pretty good, it's that pressure on the bottom line, the pressure on profit margins as medical costs increase, and they're seeing increased utilization as well. And you saw that in some of the reports. Molina and United Healthcare both said those same things.
All right. Thank you both. Christine Short, Scott Zary, thank you. Mixed market here for the Dow and the S&P. We have lots of earnings due out after the bell. Names like Apple, Amazon, Roku, Western. We're also looking at Coinbase and Reddit, just to name a few. Thanks for being with us here on the watch list. I'm Nicole Petalides. Every day at 9 a.m. and 2 p.m. we get to be together here on Schwab Network. Keep it right here. Market on Close is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and
We got
mobile-based
2 more minutes to power hour.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Anywhere, anyhow.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
This guy's always showing up on here. Dropped his, Kramer dropped his Starbucks.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
And I'm Sam Bartis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's very busy show. We'll have you covered throughout the show on all things Mag 7 related, and that's highlighted by our extended coverage today for Amazon and Apple earnings live after the close. We'll break those numbers for you. In Options Corner, we'll look ahead to Reddit and its earnings as we see the stock under pressure today ahead of that report, down 6% on the session. And our overlooked stock today is the top gaining stock in the S&P 500, and that's the logistics company C.H. Robinson after its earnings, a bullish outlook for 2026. But for now, Marley, take us through what you're watching today.
I'm keeping a close eye on the Mag 7 following some of those earnings we saw yesterday. Sam, Meta stock dropping more than 11% after increased spending on AI overshadowed a strong third quarter report. The company now expects to spend between $70 and $72 billion on CapEx, for that number to be even higher in 2026. The analyst community not looking at it favorably, though. We'll break down the full report, including their $16 billion tax charge shortly. Alphabet shares, though, moving to the upside today, touching new all-time highs after reporting record revenue for the quarter and also boosting its 2025 CapEx spend. And we'll round it out with Microsoft, whose stock is down today after revealing it took a $3.1 billion hit from the company's investment in OpenAI. Now, despite this, results still came in better than expected. But before we get to breaking all of these stories down, I do want to check in with the markets here. We're having a red picture here. We were a bit of a mixed picture before the show started, even just a few minutes ago, but now entirely in the red. The S&P 500 trading down 0.7% at 6841.91. On the Nasdaq trading down more than 1% right now, 25,830.42. For the Dow, mostly unchanged, 47,625, and the Russell 2000 down 0.4% at 2474.11 right now. The dollar 1/3% higher at 99.32. Gold also close to 0.75% higher, 40.29.20 a troy ounce right now. Crude oil just below the unchanged line, 60.45 a barrel, and Bitcoin continuing to fall, 3.5% down on the day so far, down to 106,770. Now, Sam, I'd love to know what some of the stories that caught your eye on the floor of the NYSE were today.
Well, I've been watching the reaction, Marley, in the market to the meeting between Trump and Xi overnight, which Trump rated a 12 out of 10. Now, China managed to walk away from that meeting with a reduction in tariffs over fentanyl, which will be cut now from 20 to 10% for a year, which brings the overall rate of those tariffs on Chinese imports down from 57% to 47%. Now, China, for its part, will resume soybean purchases from the US and will delay export controls by a year. That, of course, is on the rare earths. Despite the de-escalation, though, stocks are mixed today. So US-listed shares in Chinese companies are lower. So you've got Baba, Baidu, and JD all tumbling. American rare earth and critical mineral companies are a bit of a split picture today, actually. Oil prices are also coming off a bit off the back of this. While the meeting lowered the temperature between the two sides, analysts view it as really a gesture rather than a game changer and believe it only really kicks the can down the road for now. And we still don't, of course, have any clarity on TikTok or Nvidia's Blackwell chip. But for now, I'll send things back to Marley, who's with Jenny Horn in Chicago with some of today's top movers.
Thanks so much, Sam. Yes, like you mentioned, joining us here in Chicago, Jenny Horn, the co-host of Next Gen Investing, to talk about some of these secondary movers outside of the Mag 7 that we're seeing. You know, Jenny, let's kick things off with one of the worst performers on the S&P in the bottom three today, eBay.
Yeah, so eBay, a name that we, of course, don't really discuss when we've been very busy today with, the various Mag 7 stocks, but still taking it on the chin today. And actually, it's amazing to me the strength we've seen in eBay over the last year. And I know that resale market and some of these like luxury resale, really sneakers have been a huge driver for this company. Not really able to resonate though today with obviously prices. We're down 15%. Posting actually higher revenue in their third quarter, boosted by this 10% jump we saw in their merchandise volume. But they also did post a profit of roughly $1.35 a share. That was a modest rise from $1.29 a share reported a year ago. Adjusted earnings also beat. Revenue was a beat, climbs 9%. And in the now fourth quarter, they do expect between around 2.83 and 2.89 billion. That was ahead of forecast. So now they're also giving guidance for full year sales, which would be slightly ahead of the mark. And so you look at the stock, 15% move is obviously no small,
double bottom
here, but we're actually still at least up about 36% on the year. And so perhaps this overall resale market is just seeing some cooling as there's this bargain
going for it again
with consumers right now. And I do know that what has worked well for them over the last several years has been more of these like luxury resale products. But again, that's still feeling like you're getting a good deal. So it's somewhat of a mystery what really missed the mark, because headline figures, I will say, were pretty strong still.
I'm a big eBay fan.
Me too.
I paid for a lot of things in college thanks to eBay and selling things.
Me too.
So I was so sad to see this one for them. But like you said, they were up nearly 60% before
Ladies
we saw
and
this turn
gentlemen.
to the downside on the year. And so I think a lot of the bar was very high for them. Also some slightly mixed numbers in terms of holiday expectations. When I think going into the holidays, people are really looking for a strong holiday quarter, maybe weighing on them. But like you said, still not giving.
Damn, Marley, you look hot
for
today.
eBay, though, although a pretty poor performance on the heels of
Yummy.
earnings in the bottom 3 of the S&P 500 right now. Roblox also down today, and another bit of a mystery report here. This move to the downside also. I had
It's
to read
Roblox.
Yeah, so this one you do have to find again. It's somewhat like this treasure hunt of like what went wrong in this report. And I mean, a name that's up also another 96% this year. Now, though, about 24%.
I love you, Marley.
So a substantial repricing again today as we're down almost 15%.
You're a real woman.
48% year over year, but actually did miss consensus. And I had to like triple check that because when you see 48%, you think, how could it still not be good enough? But obviously, based on expectations, it did not make
Who is this guy?
the mark as far as the consensus.
I hope
was
he's not the
concerned.
CEO of
And on a net
Roblox.
income basis, they're still losing.
If he is, I ain't
considerable
buying
amount
it.
of money. And this is to be like my aha moment as we did.
He looks
see
like
for
Freed.
2025, net losses projected to be slightly higher than had been anticipated.
God.
1.1 and 1.13 billion. And also for fourth quarter, those losses also expected to decline to right now around 1.35 to 1.40 billion. Again, these were slightly worse.
Tell me he's not the CEO.
That range at the midpoint, yes. For net losses, that was the figure that was a clean miss for their upcoming quarter and the remainder of this fiscal year. But I mean, bookings surged 70% to 1.9 billion. Did top consensus. Average daily active users also climbed another 70%. And users on Roblox did log roughly around 39.6 billion hours of gameplay, which, I mean, to me says go outside, touch some grass. But that is also a huge catalyst. And I mean, expenses, well, they were elevated this quarter. It's the fact that this company now, I mean, has really become a different type of.
Who gets the A+?
platform than it's known in years past. I mean, it has all these various like commerce offerings. Now bodes well for the user experience. It's not translating though into profitability as this company is still losing money.
Yeah, and unfortunately for shareholders, down almost 15% right now as those losses that you highlighted overshadowed what
Who
were
wants an
otherwise
A+?
really strong numbers. Although when you said the hours logged on Roblox,
I'm thinking about it.
for children, and like my daughter uses Roblox, it made me shudder a little bit.
Me, without children, it made me shudder.
Please go outside.
Yes, I'm thinking about it. We got a double bottom higher low. We got a fallen wedge. I got a yawn. We could come down and hit the orb. That'd be the best place to take it. Might still be a little bit early. If we get one big fat candle to that orb, that red line, are you in them? Call me. Six 83493, somewhere in there. Six 834.93. Did you make it for 30 seconds? Marley, you've kind of growed on me. At first, it was hard. It was difficult. But the more I listen to you and how much you're really into what you're doing, it's changed my mind. As long as you keep showing cleavage in short skirts, everything's going to be great.
Going forward, as they're just not seeing the same foot traffic, really attributing that to weakness with a younger demographic and these Gen Zs that no longer find Chipotle quite as cool as perhaps I
Chipotle.
Chipotle about once a week. So I guess I'm supporting
Revenue growth 7.5%. What's wrong with that?
Look to call for same-store sales dropping in the low single digits. Now, back in July, we had seen flat same-store sales, and that was already reduced. So we're just further trimming now expectations. But the company did really say they're doubling down on their restaurant execution, accelerating their menu innovation. They've had new products like carne asada is now basically a permanent menu item that's done quite well. But you look at this company and to me it still reads inflation. Prices are elevated, tariff concerns. I mean, they had to resource basically where they got all of their avocados.
$3.20 for the 68.50s.
Still is not enough to drive. I mean, just foot traffic simply.
We're about there.
We're talking. I did a refresh on the worst performers in the S&P.
I say we're there.
Chipotle is the worst performer today on the
Oh,
S&P
God.
500, trading down year to date about 45%.
We're here.
With this
This is it.
7% move to the downside. But Jenny's still a steadfast supporter of Chipotle.
I am.
Once a week. Jenny Hort, thanks for being with us to break down the top stories today of some of those secondary earnings.
Ain't she
numbers that
great?
we're seeing. But I do want to check back in with Sam in New York and see what we have coming up in the show. Sam?
Well, we'll look ahead to earnings from Amazon that are due out after the close. The market on close will be right back.
Marley does such a great job.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
Don't miss our one-on-one interview with Strategy's Michael Saylor.
The future is digital capital, digital money, digital intelligence.
The pioneer of Bitcoin treasuries is on Market Overtime.
The digital form of everything is 100 times better than the analog form.
The need to know info on crypto.
The United States wants to be the crypto capital.
Tonight, you're a lucky
Here on
man.
Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor?
Yes.
Our investing webcast series
I've been
breaks down
trading for
different
21 years.
including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
It's it right here. I'm going to give it a shot.
After market on close, I'm Sam Bartas on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. Let's just check in with a quick market update before, of course, we round out the session in about 43 minutes at time, because we have seen stocks losing a little bit of altitude, suffice to say, throughout the course of the session. Breadth had looked a little bit better earlier on. We had seen some rotation, certainly out of technology into some other areas.
Oh, God, 230.
500 down 0.8%. The Nasdaq 1.2. The Dow, which was really the bright spot, now on the line to the downside, and the Russell 2000 is underwater by about 0.5% as well. Let's take a look at what else is on the move today, because we have seen the dollar higher at 99 off the back of Fed Chair Jerome Powell's comments yesterday. Crude oil on the back foot. We're at $60 a barrel now, though, of course, ahead of the OPEC Plus meeting this weekend, and also off the back of the trade truce between the US and China. Bitcoin feeling the pinch today, down 3.5% almost, and the 10-year yield is picking up off the back of what we got from the Fed. We're looking at 410 right now on the benchmark. Let's take a look at the sectors. It's a mixed performance under the surface. As I mentioned, technology is really feeling it today, down 1%. Communication services and consumer discretionary both down over 1% lower in the session. Consumer staples and financials, though, are holding up. The little bright spots there as far as the sectors are concerned. And let's take a look at the other names. We've got real estate as far as sectors are concerned, 0.7% higher. Energy on the line, just to the upside, and the rest are down in the session today. Industrials just holding the line there to the downside as well. Mega cap tech very much in focus ahead of a big afternoon off the back of what has been a big day as far as the reaction to what we got from Meta, Microsoft, and also Google. We've got Apple up 0.6. Amazon is lower ahead of its key reports. We've got Microsoft, Nvidia, Tesla, and Broadcom all in the red on the session. As I said, we have got a rotation out of technology today. Let's bring back Marley into the conversation and welcome in our first guest of the program for a preview on Amazon. Joining us now, very pleased to say, is Dave Nicholson, who is the Chief Research Officer at Futurum. So you say in your...
What happened? Marley, I love you. Look at that. She's my new friend. I hope your husband doesn't get upset. Marley, you're frozen time. I can't handle it. Come on.
The report we're going to get later.
Yeah, it's one of these things that's going to take a bit more time in this overall kind of mega cycle. We just saw the announcement of 14,000 layoffs at Amazon. That's not
14,000.
That is a repositioning of capital in the direction of AI. So on the retail side of the business, they're well positioned to implement AI technology over time to positively impact their
Come
business.
on now.
And I think more importantly, on the AWS side of things, similarly, they're very well positioned to position real AI solutions.
Very well positioned
for
to
enterprises
position.
that are seeking positive ROI.
Oh, no.
And that is in contrast to all the noise we've heard from others in this space.
Damn it!
Let's talk about AWS as far as the expectations on that revenue. I believe it's $32.42 billion, which would mark an 18% growth rate compared to what we heard from Google
This ain't
at
right.
34% and Microsoft Azure at
I got out of that
30%.
one.
So when we look at AWS, of course it does have 30%
Oh,
market share.
God.
We've got Microsoft and also the
Shit.
Meta and Googles of the world really nipping at their heels. So what is that number that you've got to hear today to convince you that they're very much still in the game here as far as holding on to that market share?
Yeah, I would say anything at or above that 18%, and especially relative.
Now all of a
to
sudden I'm way out of the
Google
money.
Cloud and Microsoft
Oh my
Azure.
God.
It's critical that we don't see anything much lower than that in terms of growth. They haven't been the headliner, but they're working behind the scenes, as I said, on top of a very, very solid base. It's interesting. You start feeling old when you start thinking of AWS as being the IBM in the room. But they truly are the kind of the legacy providers in this space, and they have a lot of trust built up among the folks that are making big decisions in this coming year about AI spend.
And you mentioned that trust, and you also highlighted how important the AWS business relationships are, Amazon's relationships are for the long-term growth of AWS. What makes those relationships potentially more durable than those of its rivals?
So in some cases, I would say in particular compared to, say, Google Cloud, AWS has become a partner of business and seen as more pragmatic and less on the sort of science fiction side of things in some cases. And you have this embedded user base in IT in large enterprises that are very, very comfortable implementing the whole suite of AWS solutions. And those solutions every day are having AI infused into them. So this is a bit of a marathon, less of a sprint. There's no question there's risk here. AWS is doing a good job on the back end trying to move people away from NVIDIA chips, as an example, to protect margins. But that's really the answer is let's hope for not much less than that 18% growth.
Okay, and I just want to sort of talk about some of that ad revenue as well, Dave. I think the number expected is at $17.34 billion. Obviously, we know that the ad business has been doing well. Part of this has been sort of tied to its core e-commerce business, and this is obviously going to be capturing a quarter in which we did see some of the Prime Day deal events as well. What are your expectations very much on the ad business revenue?
I would say concerns over the headwinds associated with anything related to Amazon retail, just because of just trade negotiations and things that are going on generally in the world and the economy. Longer term, from an ad revenue perspective, something to watch are these independent companies that are coming in and optimizing enterprise ad spend within environments like Amazon. We're starting to see top tier Amazon partners who have Amazon stocking goods for them, backing off of that sort of tier one level of relationship, and which is really interesting because they feel that they can get better information about how to optimize placement for products and ad spend within Amazon.
Well,
so
that kind of
there's a spot to watch in the next several quarters to see if the ad spend number
Now, what am I
will go
doing
down
here?
because of that.
And Dave, in the beginning of that answer,
Okay.
you mentioned the potential trade issues
go back
having an
up.
effect on retail operations.
I didn't add
How
on.
much of a headwind do you think these ongoing trade tensions could
Too
be
disturbed.
for retail, especially as we come into this critical holiday season?
Yeah, I mean, there's no question that tariffs have an effect on all of this. Concerns about tariffs, realities associated with tariffs. You were mentioning eBay earlier, and you can go to eBay and sort by location, and all of a sudden, a lot of the things that you want to buy are not in the U.S. and are facing heavy tariffs at this moment. So it's a significant headwind. I think Amazon will weather it, but I wouldn't expect stellar increases in the level of business through this holiday season. It's definitely going to be tough.
Yeah, I mean, eBay even made a point to mention how much the closing of that de minimis exemption has been hurting their business in terms of those international shippers. Dave, we appreciate you being with us to preview the earnings ahead of their release after the market close.
We're at 185. I got 230.
We'll keep this mega cap earnings discussion going and recap reports from Meta and Google, which both reported some very large CapEx numbers for the year. Market on close. We'll be right back.
Marley. She does work hard. I have to give her that credit. But not like Caroline. Caroline didn't yak as much. Caroline, I miss you. Caroline, I miss you so much. Come back. Please come back. Please. Please come back, Caroline. I think her leaving the way she did really pissed me off because I didn't know she was leaving. Okay, come on, let's go. It'd be nice to have a little end of the day run. We're at the 21 now. I mean, this is... If we break this, I'll get out even. Or try to break the 63 and hit the 200 EMA and come out a big winner. Oh, Caroline. Extended live reaction. Market on close. Oh, tonight's Thursday night.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Yeah.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that
We got
matters.
Amazon,
Watch now,
Apple.
only on SchwabNetwork.com.
Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Vadas in New York. Apple will pull back the curtain this afternoon when it reports its earnings in almost exactly an hour from now, right after the closing bell. Analysts are expecting EPS of $1.73 on revenue of more than $101 billion for
We got some good ones tonight.
Shares hit a record high today. They're now up 8% on the year. But there are lots of important revenue figures in that main revenue. So let's break down what some of the expectations are here. This iPhone number going to be very important for this quarter. We've heard all these rumblings about iPhone 17 demand. That revenue number expected to come in just under $50 billion at $49.72 billion. As far as Mac sales, $8.5
about
billion.
even.
iPads below that at $6.88 billion. Wearables should be coming in at about $8.3 billion. And services, this revenue number very important for Apple as well, at $28.05 billion. And like I said, we'll have those numbers in about an hour. But I do want to discuss some of the earnings that we've already gotten from the Mag 7. Bring Sam back into the conversation here. And we'll also bring in our next guest joining us now, Ahmed Khan, equity analyst for technology at Morningstar, to take a look at Meta and Alphabet, some of the performance that we're seeing in the markets today on the heels of those reports yesterday. You know, Ahmed, if you don't mind, it was a tale of two very different stocks today. Let's start with Meta. I was just looking at them on the board, still down more than 11%.
First of all, thank you so much for having me on here. So, as you correctly pointed out, I think it was two very different reactions from the street to two pretty incredible quarters, both in terms of how strong the quarters were, but also what the forward-looking guidance implied. Our read on Meta, we maintained our $850 fair value estimate. Our read on Meta is that the company's top line will continue to remain strong, and it's being driven by these AI improvements the company is making. We don't think that that's being priced in right now. We think investors are getting concerned about the 2026 commentary, what that means for OPEX and CAPEX, and what that would do to margins at Meta. But we think that over the long term, Meta's investments in AI the company will be able to generate a decent return on them.
But how come the street, Ahmed, isn't able to see that right now? I mean, you know, you mentioned that there seems to be some sort of margin concern, particularly at Meta, because, you know, as far as spending discipline, it does look like the view out there is that Google, Amazon and Microsoft are perhaps doing a little bit of a better job on that front. But, you know, what is it going to take to see a little bit more conviction here? Because, I mean, you know, Marley and I were talking about this reaction from the analyst community today. And, I mean, you've had several analysts now lowering the price target and, you know, some downgrades there as well.
So first of all, I think it's important to understand that Amazon, Microsoft, and Alphabet have an advantage that Meta does not, and that is their public cloud businesses. So they get to de-risk their AI investments by basically telling the street that, hey, we've got external customers who can sort of purchase this capacity. At the same time, if you take a company like Alphabet, they are a huge internal customer for itself. So they have search and YouTube and a bunch of other products such as Waymo and all their Google.
Waymo!
And they are very compute intensive. So, the ROI in terms of, what utilization you will have on these AI servers, it's easy to understand why that would be high for a long period of time. Now for Meta, you don't have the public.
Or $2.65 I'm up.
An ROI argument based on what improvements you can make to your top line, or what new areas of what new revenue streams this technology will be able to unlock for you. And I think that's where the primary disconnect is. When we're looking at this quarter and we're looking at the last few quarters, what we've consistently seen is, first of all, the revenue growth number that they put out yesterday, around 26%, that was the highest growth the company has seen, barring one quarter, I think it was 2024 Q1, in the last 15 quarters. So, that at scale is quite impressive. But if you look at the contours of the growth, you'll notice that a lot of it was driven by these AI investments, not just in GPUs, but more broadly, the investments the company has been making in their AI infrastructure. And these advantages, such as better ad targeting, better content recommendation, they compound over time. So in terms of what the catalyst would be for investors to change their mind on the stock, I think it's going to be similar to what we've seen with some of these hyperscalers as well. Google was seen as an AI laggard. We didn't view it as such, but the turnaround really began when investors started seeing actually strong adoption of Google Cloud and Gemini and what have you. And the print last night actually sort of proved that. So I think Meta will need more proof points of the return that I think investors are perhaps struggling with right now.
And Ahmed, before we pivot to talk about Google's results, I do want to ask one final question about Meta. They have a history of aggressive spending. This is something that we've seen from them, Reality Labs to their AI infrastructure. But one of the analyst notes and also a guest that I had on my earlier program mentioned a similarity to the metaverse, and I wanted to get your thoughts on that.
Well, first of all, we don't think it's similar to the metaverse. Metaverse, in our mind, and you can sort of go back and sort of read our research from back then, we thought it was not a great idea. This time around, what is happening is that we think this is an actual paradigm shift, to the scale that we've seen before, whether that's the internet, etc. So if you agree that this is a paradigm shift, then the next question is, does Meta again want to be beholden to another tech company for their infrastructure or their distribution? And by the way, one thing I would sort of push back on is this idea that Meta could have avoided severe margin compression while investing in AI or using AI. So if you're a company of 3.5 billion daily users, you cannot actually use any of these generative AI models, even if you partnered up with a Google or an Anthropic or an OpenAI, without incurring massive operating expenses, because these models are expensive. It's the same reason why Meta actually owns its own infrastructure. It doesn't use a hyperscaler like AWS or Azure or GCP. It has its own data centers, because investors and Meta sort of leadership team understand that this is the best cost structure. So again, with Gen AI, if you agree there's a paradigm shift, and if you agree that them using someone else's models would be incredibly expensive in the long run, I think the correct response to all these sort of in these dynamics is to invest in your own AI. I think what's not helped the firm is that their efforts have been subpar so far. At least Llama 3 was actually pretty impressive. Llama 4 was not so much, and then the company went on this hiring spree. And I think that's where the story got muddled, and the company will have to improve its execution on AI to regain investor confidence.
Okay, and just very quickly, Ahmed, before we let you go,
Very quickly.
About Google
Don't rush me.
well. I mean, that was a healthy report that we saw there. The street is rewarding the stock today. We've also seen it earning itself
It was
quite
very
a list
healthy.
of price target boosts here. I see that you've raised the fair value estimate by a wide moat to $340. What are you most encouraged by, and can they keep it up?
Yeah.
Not
when we're in a bubble.
Encouraged by, I guess that question gets at what surprised us the most, or what positively surprised us the most. Number one was search resilience. Search growing 15%. Again, one of the strongest. I think it was the strongest growth the company has seen in search since the launch of ChatGPT, which by itself is quite impressive. Then on top of that, just the backlog number for Google Cloud growing, some like 40-some% sequentially, 79% year on year, just implies incredible growth coming online in 2026. And one final thing I will say is that this was not part of earnings, but yesterday, Amin Wahdat, who is the head of infrastructure at Google, he was on a podcast and he said that they were using 7-8-year-old TPUs at 100% utilization rate, which really de-risks your investments. If you can think of these TPUs and these AI servers that you're buying right now and you're putting up all this capital for, if you can use it for an extended period of time, because the incremental sort of like value after you've depreciated the asset over 6 years is actually the incremental margins go up quite significantly. So I think all those things put together gave us a conviction. But I would just like to say that even before this quarter, we were optimistic on Alphabet, and we were even when the stock was trading in the 140s, 150s back in April and May, we thought the company was an AI leader, not a laggard, and the market has come around to sort of agreeing with our thesis.
I'm liking this linear channel thing.
And we appreciate you taking the time to be with us to break down those earnings. That's Ahmed Khan from Morningstar. And coming up next, we've got Options Corner. Rick Ducat will join us here in the Chicago studio to take a look at Reddit ahead of its earnings after the close. That's next on Market on Close.
I'm real proud of myself how I've not abused Marley this week. I noticed that all the other women were wearing turtlenecks and she was showing a lot of cleavage. So I think she's starting to warm up to me a little bit. Again, today she's wearing that short dress and more cleavage showing. So I do believe that her and I will come to an understanding one day, and I'll respect her like I did Caroline. It won't quite be the same. Caroline was a special person to me. But in time, I think I'll get used to her. She's a strong woman. And I feel intimidated around Marley. Tomorrow night's oil. Tonight it's Amazon, Apple, and Coin. Now Coin, I think, is just a trend trader. This thing really sucks when it's slow like this. I don't know what. It's like they can't handle it. They need some NVIDIA chips. Meta tumbles 10%. Google marks historic rally. What's moving the markets on Thursday? Coinbase reports earnings today. Why the crypto firm could break out of the slump. It's been in a slump? Are you serious? I'll be the judge of that. We'll go to the 20-day, 1 hour time frame. Well, it's in a downturn, that's for sure, but it had some sharp rallies. First thing pops in my head is a triple bottom at 300. Maybe 310, 313 area. So $20 drop. One more red day. That's what I'm thinking. Apple? Apple's iPhone sales. They've been boasting about the Apple iPhone sales. And it's already had a pop. Now this don't look, I don't like it. I don't like it. I don't like it. I'd say 260. If I can get 264.62, that'd be ideal. Oh God, I don't like it. Amazon and Reddit is on here. RDDT. Now this I think would be a volatile trade. Oh, now this got a good setup. This is a nice setup. This is a nice setup. I still think it's overbought. This was a meme stock, in my opinion. TWLO. Why is this just like a piece of shit? I gotta figure out why this thing's running like this. Okay, we're at a double bottom here and into close. Oh well. I'm not going to play any. I don't want to take a chance. We got Roku and MSCI. Is it MSCI? No, it ain't. It's what is it? SMCI. SMCI. SM. Correction, SMCI. CORRECTION. What did I say again? SMCI. Correction. Oh, now. Double bottom. This one definitely sold off hard. Well, we'll find out. Oh gosh. So now that I go up to the 6835s, $68.35s at 150. I really golly, there they are at 215. There's $100 a contract right there. I didn't take it, but I saw it. The 68.35s. 135 to 235. It just seems like the earnings have been good, but it hasn't given this market the confidence. All I've heard is bubble this, bubble that. I ought to do a video of me in a bubble. Okay, take a 10-minute. No, I don't find it weird because he owns it. Nope. 6 more minutes to go, and I don't think I'm going to take any trades. It's not been, I mean, it's been a decent day, but now that we went on this pullback, I didn't expect it. So it kind of got weak into tonight's earnings. I don't know why. Oh, I do, because they've been yelling bubble, 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 bubble. Bubble. Comcast. What did Lily do today? I thought this one would do good today. Yeah, it did okay, but it came back hard and bounced back up. I didn't hear much about China and Trump.
Yeah, if you're looking at the volume itself, or if you're looking at the volume difference between the up volume minus down volume here, it's not really showing an outsized move today, which I think is actually a really decent sign. We did see aggressive selling when it came to Meta to start off the session, but it did actually catch a pretty decent bid. And overall, you are seeing the breadth of the market actually expanding more than what we have seen over the last 2 trading sessions. So that also kind of offsets maybe some of the pressure that we were seeing for the Mag 7 names for today here. I would also just kind of note, if you're looking at volume, the totality totality of volume for today, still a little bit elevated after that market on close order. It was actually coming in fairly light, but we must have had a pretty decent market on close order going into obviously the ending of this session here. So elevated to say the least if you're kind of looking at the 5-day or even the 7-day moving average for total volume. So healthy day. Once again, a pullback. We had two gaps on the S&P 500 to the upside that we are testing one of them now. We have another one below us. Maybe we do test that. Maybe buyers step in. And if not, and we do see a reversal, and we have this buy the rumor, sell the news event when it comes to these earnings announcements, then that could be a decent little reset for us going into the holiday season, especially when you're looking at Thanksgiving and Christmas. Those are usually light volume trading sessions, and usually it's easier to push prices higher.
Oh man, what a day.
I mean, you mentioned that breadth was better, particularly off the back of, earlier this week that we saw the worst breadth day in history on an up day. I'm just wondering.
Okay. Well, I didn't do hardly near as many trades as I usually get in. 3, maybe 4. 3 for sure. Yeah, 4. I got that last one. So, and that was tough because I was down more than I was down, and it came back up, and I got 40 cents out of it. So, red day today, as you can see. Meta down big. 66647. What? That's way below my support level. Oh yeah. Yeah, this is down big. I don't know what to say about that. I got to look into the earnings on this one because I find it hard to believe. Someone had buy on Meta for a price target of 915. Somebody does here. Yeah, this looks a little overdone. This will be one definitely on my watch list. Well, I'm going to go and take a break. I feel like I'm burned out today. Maybe just because I'm a little tired. So, thought I saw something here. No. But he approves those. Amazon boom. I figured it would go up. Amazon boom. Amazon boom. Okay, well, Apple's the one that I'm going to be subject. Oh, Apple's moving. Apple's going up. Going up a little bit. Creeping up a little bit by bit. Now it feels like I got my second wind. Come on, you piece of crap. Ooh. Reddit. Reddit couldn't make up his mind. Reddit announces third quarter results. Whoa. Tomorrow's Friday. We got oil tomorrow night. Before open, Chevron, Exxon Mobil. Those are the two, and Dominion Energy. We got a Beeve tomorrow too. That might be one to watch. So I'm gonna get out of here and relax. Listen to some Bible music. I got tired of listening to the preachers. I mean, some of these preachers, I couldn't go to a church, some of them preachers. They almost sound like politicians, but worse. I don't like it when a preacher screams and really gets into it. Some of them really get to screaming. I'm going, okay, I can't handle this. I've been listening to it for a good 6-7 months, and I'm tired of it. So, just the screeching preaching, I guess is what I'd call it. I'll catch everybody later. Thank you, Bobby. Maddie.